Welcome back to Squawk Box this morning. Layoffs underway at the Internal Revenue Service as filing season approaches, and Robert Frank is at the table this morning to explain what this all means as tax season is about to get underway.
Tax season is underway.
He heard us talking.
I said,
and put this together so quickly. He put this together so quickly. Did you rush down here?
I did. I said, these guys need some numbers behind this story. So let's give you the numbers. The IRS firing between 6,000 and 7,500 staff yesterday. Now, many of them work in compliance. That, of course, deals with audits and collections. Under the Biden administration, the IRS received $80 billion in new funding to help improve service to everyday taxpayers, and of course to crack down on tax evasion by the wealthy and by corporations. The aim was to hire about 20,000 to 30,000 new people to bring staffing back to where it was at the IRS a decade ago. The IRS estimated that millionaires and billionaires evade over $100 billion in taxes every year, mainly through complex partnerships and pass-throughs. Now, those efforts are likely to stall or maybe even get rolled back right now. The audit rate for those making more than $10 million a year has fallen by half since 2010, now at about 11%. Training auditors to handle those complex returns takes at least 3 to 5 years, and many of those fired were just starting that training. So collections, especially from the wealthy, could fall in the coming years, especially since the most experienced agents are also taking buyouts. Now, the tax gap, that's the amount of taxes owed but not collected, that has grown to about $600 billion. Just Andrew is right that we have a lot of taxes that go in college. You're also right in that technology could help improve.
I can't believe that.
I was the one talking tech too. Don't like it.
No, you do. You get credit.
Yes.
No, because there's no way we need to go back to where we were 15 years ago, given all the new technology and AI and everything else. So that's an anachronistic comparison. I don't know about these numbers, whether they're, they sound, I don't know, they sound estimated. How do you know it's $600 billion?
Oh, right. No, it is estimated.
Totally estimated.
But you also know that between crypto and between the payment services,
right,
where people are sending each other all this income through rent, you know that there's a lot that is missing right now that they're not.
If you can't do it Andrew's way or my way with technology, see, I'm sure there's at least 6 to 7.5% bloat at the. I'm sure.
Of course. The question is, it's not that are there too many people. Is that do you have the right people doing the right thing?
Do this.
And so a lot of these people getting fired were in customer service. So typically it took a half hour when you called the IRS to get a response. Last year the average wait time went from 28 minutes to 3 minutes. A lot of the reason is because we had all these people answering the phones. They're going to go away. People are going to get very frustrated.
If you can't do it, it's a flawed decision, because the money that Trump, the DOJ, is going to save from getting rid of these guys is not going to be the same amount. It's not going to be anywhere close to the money that you're not getting from doing these audits.
We'll have to see. Unless they can improve the
Unless they can improve the and why would they do that? Then the only thing you could say is he's trying to help his wealthy friends not get audited, and I don't believe that's the motivation. It's another giveaway to
look, as you said, with 100,000.
But if it doesn't net out to where you're getting more, if you get more by having these people stay than you do by rationalizing the 6% of the workforce, and it makes no sense to do it.
To Andrew's point earlier, a lot of the tax gap are in very complex partnerships.
Right. The worst part about it is you need lawyers. It's illegal. It's a legal game, because what's happening is people aren't filing their tax returns properly, and then they're challenging effectively what the audit even is.
That's right.
And then they have to go to court. And so the only way you can actually get the money is to go through the court process.
And the IRS right now is so outgunned and outmanned by, the lawyers, the accountants that are like rocket scientists of the tax code. They are so much smarter and better paid than the IRS agents that they're winning the game right now. So
it's a simple answer, Andrew.
What's the answer? Get rid of every possible deduction in the world.
No.
What?
Get rid of the income tax and do tariffs.
Oh.
The External Revenue Service.
The External Revenue Service.
Exactly. We need.
Okay. Robert, hang around, because I'm actually curious what you think of this one, too. Because we're going to go from the IRS to the post office now. Reports saying President Trump planning to dissolve the leadership of the USPS and take control of the independent mail agency itself. Frank Holland joins us with more on that story right now.
Hey, good morning, Andrew. So this morning, we're watching shares of FedEx, UPS, and Amazon. Those are 3 companies that could be directly impacted if the White House takes control of the post office. a move that could also impact the flow of trillions of dollars of e-commerce. According to reports, the president's considering firing the Postal Board and placing the Post Office under the Commerce Department. The Post Office is an independent agency with 6 bipartisan board members who are picked by the president and then confirmed by the Senate. The Postmaster General announced his plans to resign after leading the agency since 2020 through the pandemic and, of course, through 2 elections where we saw a big jump in voting by mail. President Trump's been highly critical of the Post Office before and after his election win and had these comments about postal privatization at a December 16th press conference.
There is talk about the Postal Service being taken private. You do know that. Not the worst idea I've ever heard. It really isn't. You know, it's a lot different today with between Amazon and UPS and FedEx and all the things that you didn't have.
And it is quite a bit different these days. So just for some context, UPS, FedEx, and Amazon, they've historically used the post office supply chain along with other companies out there to once again send trillions of dollars in packages through the post office. So a bit more context. UPS signed a 5-year deal with the post office for air delivery last year. At the same time, the company said it would no longer use the post office for its SurePost Economy shipping service. That air contract, it was previously held by FedEx. On its most recent earnings call, CEO Raj Subramanian, he addressed post office privatization, saying it's important that parcel delivery is not subsidized by taxpayers. Parcel carriers overall, they've rushed to expand, leading to excess capacity in the market, according to ShipMatrix. So more context here. In 2024, e-commerce capacity was about 120 million packages per day, while during the holiday peak, we saw volumes top out at right around 106 million packages per day. Back over to you.
We lose our ass.
We do, but the question is, what is the right answer? Is there some middle ground here?
In the UK, they privatized the Royal Mail.
Right.
That didn't work well in the beginning, but now it's working. It's a process. And the question is, you know, if you look at the prices for FedEx and UPS right now, it's extremely expensive to send stuff over there.
Frank, you know what this segment is called, right, Frank?
Frank and Frank.
Frankly speaking.
Well, frankly speaking.
Even better.
Yeah,
Frankly speaking.
by the way, I didn't tell
Confusing
Frank this. I already filed the
To be
trademarks
frank.
and everything, so that's coming at some point.
Robert Holland or Frank, if we...
We'll have a graphic built for the next time we do this, gentlemen.
We should
on
get
a serious
animation.
note,
Other
about
places
this
have
very
really
quickly,
cool,
very
really
quickly.
cool animation.
2 years
What's
ago,
that,
the post office started a turnaround plan. So during this most recent holiday quarter, it did turn a profit of about $144 million. Just for comparison, the year before in the 2023 holiday quarter, it lost about $2 billion. So that's some of the arguments that the president and other critics are making, but the post office is very actively in a turnaround plan. They've ramped up capacity, but they've also warned an expansion by FedEx, UPS, and Amazon that could also lead them to lose market share. The other part of this story that we might not have time to really get into is that the post office is the only carrier that delivers to every address. And if there's some significant changes to that service, it could hurt a lot of small businesses and also rural customers.
Yeah.
Okay. Frankly speaking, Frank, thank you both, Frank.
Any talk about taking the New Jersey DMV?
And thanks for being so frank.
I'm always
Could we do that? Take that?
the DMV.
The New Jersey DMV
It
private.
works
I mean,
so well now.
it's unbelievable. I was there, Ken. It's coming up. Rivian, Rivian report. Have you been? Oh, you have a driver. Never mind. It's first ever. Do you have a driver's license? Have you
I
tried
have
to
a
do
driver's
anything?
license, yes,
Yeah,
not
you
a
tried to-
driver. I have a driver's license.
Gross quarterly profit. Details after the break. Oh no, details. Sorry, I'm reading the prompter right now. Quite frankly, here's a look at yesterday's S&P 500 winners and losers. Good morning and welcome back to Squawk Box Live from the NASDAQ market site in Times Square. Checking the futures this morning, a little bit of a bounce back from a weak session yesterday. Yesterday, the averages closed well off their lows, but it was a pullback. We're watching shares of Rivian, the EV maker, reported a smaller than expected loss per share in the fourth quarter and achieved its first gross quarterly profit, but the company's forecasting lower sales in 2025. It has not said when it expects to be profitable on a bottom line basis. Here's CEO RJ Scaringe on closing bell overtime.
The impact of large tariffs on those is going to ultimately translate to higher costs for us, which translate into pricing. And in a similar way, as we think about consumer-facing tax credits, it effectively makes the vehicles more affordable for consumers.
Scaringe said the company will launch its more affordable SUV, the R2 model, R2D2?
R2D2.
Yeah, early next year.
Meantime, shares of energy drink maker Celsius, they are soaring. The company paying $1.8 billion to buy rival Alani Nu. That's a low-calorie fitness aid promoted online by social media influencers. It's a cash and stock deal, both Celsius and Alani Nu. Is that how we pronounce it, Alani Nu? You think that's right? Marketed as fitness aids, both have a strong following among young women.
Yeah,
Maybe that's why I don't know enough about it.
That's probably right.
Coming up, I know a lot about Celsius. I don't know about Alani Nu. The Senate passing the skinny budget resolution overnight. We're going to talk to Punchbowl's Jake Sherman about what it could mean for the House's bill next. Maybe we'll drink a Celsius on a Friday morning to keep us rocking. A reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod in your favorite podcast app and listen anytime. We're coming right back.
and restrictions apply.
The Senate passed its skinny budget resolution overnight. Joining us right now on what it means for the big, beautiful bill in the House that may or may not come next. Punchbowl News co-founder Jake Sherman is here. He's also an NBC News and MSNBC contributor. Good morning to you. So what does it mean for the big, beautiful bill? Is that in the offing here? And what's going to be in it?
So, Andrew, this is you have to think of this a few ways. Number one, Donald Trump endorsed the House bill. The House bill is one big, beautiful bill, as Trump says. It includes a huge spending reduction number, a tax number, 4.5 trillion, that's way lower than Donald Trump needs. And he wants the House to pass this bill, which they're going to try to do next week. The Senate bill is a hedge. John Thune understands that the House might not be able to get this bill through. I don't have a view on that yet. I'm waiting to hear from people next week. But let me just put this out there. You are a House Republican from a moderate district, and you are looking at a bill that is going to cut $880 billion from the Energy and Commerce Committee, which could include and will most likely include Medicaid trims. There's the political incentive for you to pass that bill, that resolution, is relatively low. You are going to get hammered, rightly or wrongly, from Democrats for the next 6 to 8 months to a year. So my view is that a tax and reconciliation deal will get done. But if you're a moderate Republican, you're much better off with the Senate's bill, which is a two-step process. And I want to say one more thing, Andrew, and I'm waiting for Joe to tell me why I'm wrong on all of these things, but I think this is a summer, fall, December story, the tax cuts. I don't think you're going to see tax cuts in the spring. I think this is going to take longer than everybody imagines.
What are the... Okay, let me ask you a separate question. We were having a conversation yesterday about Doge, and this idea that Americans could get a dividend or almost a refund check, call it a stimulus check back. This is something that Elon Musk has floated the idea of, and then President Trump floated the idea of. Do you think that is in the offing?
In the reconciliation bill, I don't know. I was talking about this yesterday with my colleagues. It would be difficult to, let me put it this way. If Trump wants to get it done, it will get done. He has a Congress that's on his side, period. Now, will it come in this reconciliation bill? I don't know. And remember, Andrew, anything out the door hurts because you're trying to exact savings. So if you're trying to exact savings and then you give the money away back to people, that's not going to be a saving. And I don't know from a technical perspective how they would do that. But if Donald Trump wants to send $5,000 rebate checks to everybody in America, Congress is probably going to have something to say, meaning it should be means tested, it should be limited, but it will get done. I don't know if it will get done in this reconciliation bill. And remember, one other thing, and this is my obsession, people need to understand this. Just because Doge says something is cut doesn't mean it's cut. Congress has appropriated this money. It has been spent. Now, maybe it hasn't been cut in checks, but Congress needs to follow up Doge with then reducing the appropriations that it sends to these agencies. So if you cut 6,000 employees from the IRS, Congress then needs to, in this next funding bill, which is due on March 14th, Congress needs to reduce the amount of money that it spends on the IRS, for example.
And you're saying they're not going to do that, or they will?
I don't know. It's going to be very difficult because, to take this a layer deeper, all spending bills in the House and the Senate with this government configuration are going to need Democrats to support them. So are Democrats going to agree to that? I don't know the answer to that.
But doesn't that put it seems to me that the Democrats are in a very difficult spot here.
Yes.
Because at some level, I think it's very popular among the American public for good reason to try to find these efficiencies, right? I mean, that is, I think we all look at the government and think it's bloated. I don't think anyone doesn't think it's bloated. I think then there's a sort of this other question, but the question is it a side question or is it the central question about how folks go about this process, not just in terms of finding the efficiencies, identifying these things, highlighting them, but then, who is either unilaterally or not, from a legal perspective, deciding on what payments are going through, what payments are not.
The government spends way too much money on a lot of nonsense. There's no question about that. I was just having this conversation with someone, Andrew. There is a conversation. First of all, Democrats are in a horrible position because there is no political win in defending government bloat. Period. At the end. That's number one. Number two, there is, like, for example, the USAID cuts. No one is going to defend the amount of or the particulars of certain foreign aid expenditures that we make. There's a lot of people who, serious policy people, who have for years said that USAID, for example, should be put in the State Department, it should be slimmed down. Fine. But just going in and doing that when Congress needs to be bought into it is not great. And that gives Democrats an out to say that we've got this unelected guy, Elon Musk, running around cutting things. But I have not found any Democrat that I could find and that is defending government bloat. There is a ton of it. And on top of that, Democrats are just listless right now, Andrew, just completely listless and have no leader, have no real message. So this comes at a particularly difficult time for Democrats.
See, I fact checked. You know, that's like the mainstream media's new thing with Trump. Is fact. They don't fact check anyone else.
That ain't
But
a
with
new
you,
thing, Joe. They've been doing that for years.
Yeah. Oh, yeah. Right. We saw a lot of that with Biden. No. So with you, I'm fact checking, and I didn't really hear anything today, Jake. So I'm gonna probably let it slide. I mean, I'd only say that I think we elected Trump and Vance, and then of course we know but nobody else in the administration is elected. I just don't know why we single out Elon Musk every time we say his name, or Democrats do, as someone who's unelected. Everybody who serves at the request of the president, all of his advisors, all those people, we elected
Correct.
Trump, then he picks the people to do things. So none of them are elected. That doesn't mean he doesn't have.
You might have missed what I said. So let me
Definitely
go
possible, because I'm listening to all the other facts that you're saying and making sure those are correct as a live fact checker. As a live fact checker.
I don't know what I would do without you in my life. Is what no, listen, because we have what I said was nobody is arguing the particulars of what Doge is cutting. No one. But we have laws in the country.
No, I know.
Which says if you are going to fold up an agency, Congress needs to be a part of that. That's all I'm saying. And we don't see Scott Bessent, I always get that pronunciation wrong, running around and closing things up. We have laws that require, and by the way, the irony of this whole thing is Congress would probably do all of the things that Elon Musk is suggesting. I don't think it would be a problem, but there is no question, zero question that cuts to federal spending are incredibly popular in broad terms. And what Elon Musk is doing, I mean, the dude's the greatest businessman ever to walk the face of the earth. So betting against him is an incredibly bad bet. But all I'm saying, as somebody who believes in Congress with all of my heart, Joe, is that Congress should have a say in some of this.
Right. You believe in Congress with all your heart. That's nice. That's nice.
I loved it so much I created a company about covering it. So I'm a glutton for punishment.
The Constitution is rock solid, and our forefathers, I don't know how they did it. It's almost like, you know, I know we can't talk about God, and we can't say that anymore, but it was almost almost heaven sent. I don't know where those guys came from, but what they gave us, it's so lasting and so amazing. And it, you know, nothing else has come close over the course of human history. So we love that together.
I can't say it any better than you, Joe.
There you go. There you go. Thank you. Thanks. Yeah, that's why I was quiet. You said, the only thing I'd say, a skinny Bill reminds me of a skinny margarita, which I don't like. That's what my wife always gets. I need the fattening part, don't you? The Cointreau and the...
SmartAsset.com.
PepsiCo and Citigroup joining the growing list of companies walking back diversity, equity, and inclusion programs. Pepsi CEO saying it will abandon workforce representation targets and remove its chief DEI officer to, in its words, ensure it's aligned with long-term business strategy. Citigroup, meanwhile, following suit, ending its workplace representation goals and removing requirements to interview job candidates from diverse backgrounds. CEO Jane Fraser said in a staff memo that it will rename its diversity, equity, and inclusion and talent management team to talent management and engagement. Coming up, companies have been looking to front load their imports ahead of the tariffs President Trump has threatened on a wide range of products and countries. We're going to talk to the head of the Port of Los Angeles next.
And restrictions apply.
Companies have been looking to front-load imports as President Trump escalates his plans for tariffs on a wide range of products and companies. I guess we'll see. Countries. Joining us now, Gene Soroka, Port of Los Angeles Executive Director. It must be hard to do that. I guess that you just maybe skew some of your ordering plans in anticipation of things that may or may not ever come to pass.
Yeah, good morning, Joe, and that's exactly right. So from the campaign trail last summer, folks started hearing about tariffs. How do I plan for this? What does it mean to me, and when do I react? We've had about 7 consecutive months of peak season volume, much of that in anticipation of what tariffs could mean, and could I leverage my price down before they hit?
In what areas? Tell us where you're seeing the concentration of companies doing that.
Mostly we deal in the Trans-Pacific theater, so the cargo coming in from Asia, but particularly China, because that was discussed a lot in broad
Across
context.
the board?
And that's the thing, because what we heard was maybe a 60% tariff levied on all goods from China, 10% on all $3 trillion worth of inputs. So coming from China, furniture, toys, electronics, household appliances, the gamut. And it's usually the big guys that try to do that. It's the small to middle folks that have to be a lot more nimble.
So the big guys that are doing this, is it increase the demand for these things near term?
It's increased the flow of goods coming in and moving through the supply chain. Warehousing vacancies have shrunk a little bit, meaning that the warehouses are pretty full, but still manageable. The trains running to the Midwest are full. How that inventory then moves out to the American consumer remains to be the question.
Because where I'm going with that is something that Andrew and I have disagreed on. If the demand for these
I don't disagree on anything.
not anymore. He's turned 48. Earlier this week. I don't know if you were watching. It's coming along, and we've been together how long? Longer than many marriages. But where I'm going with this is this. I'm asking about increased demand. Has this caused any increase in prices of the things you're talking about? His point is that we may already be seeing some inflationary pressure from anticipated tariffs. When we had less than a month of the Trump presidency, and we had a hot CPI number, and people said this is Trump's fault, eggs are Trump, bird flu's Trump's fault. I'm saying that's kind of hard to do when it was basically he was only president for 11 days of that January report. Andrew, come on. So, but if tariff anticipation is everywhere, then maybe there could be something to it. Is there any inflation that we saw in recent numbers that are tariff anticipation?
I don't think so.
Okay.
It's not one lever that you pull that says, okay, suddenly this is the way it is. Now, okay, if OPEC brings down production, suddenly your local gas station raises the price before that product actually hits the street corner, different discussion, right?
You don't believe
folks are getting nervous.
You don't believe that there's parts and supply hoarding that's taking place? I mean, we've heard from the CEO of Ford, and I keep hearing from others anecdotally, that they're racing back and forth between the Mexico border right now to try to, hoard as much stuff in the country in anticipation of something, and that's got to have a cost.
Yeah. The amount of cargo that's come through, again, more than 900,000 container units, 7 consecutive months, means there's more inventory in the country. Can I buy it at a better cost now in anticipation of that potential tariff? Sure. Is that added inventory right now an additional cost? In some ways, yes, because you've got a higher cost of borrowing. Depending on your terms of sale with the manufacturer, can I buy that product on my books after it's out the warehouse door, or do I have to buy it once it leaves the factory in Asia? So each company is different. I don't know that the elevated inventories right now are adding to inflation when I go to the store today.
Oh, I don't think they are, because I think part of the other problem is that who's going to have to eat this cost? Most of these companies, which is then going to hit profits. See, that's where I think, and this goes to what we saw yesterday with Walmart. So it may not be inflationary per se in it that the cost gets passed on to the customer, but if the cost gets passed on if the cost gets passed on, it's gonna hit somebody. That's all I'm saying.
And that's the conversation that's happening today, Andrew. What does it mean for me? How do I react, and when? There are negotiations happening between procurement executives today and their manufacturers in Asia. Okay, with the tariff now, can I get a little discount? Do I have to move from this location to support my sourcing from another location? And if I'm getting pushback to push this down, whether I'm a parts supplier or I'm selling directly to the American public, do I have to take a little hit myself, to your point about the margin play? So all of this is tabletop discussion today with everybody we're dealing with.
Okay. Gene, thanks. What are you in town for?
We had an industry event yesterday with the New York Traffic Club, saw a lot of our transportation partners in town during this week. I'll head back to LA tonight.
Okay.
Okay. Gene, thank you. It's nice to see you. It is just past 7 a.m. It's actually about 7:04 if you're keeping score on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan on this Friday morning. Becky is off. Among our top stories, executives at Meta stand to get bigger bonuses this year. In a corporate filing, Meta saying that named executive officers could earn a bonus of 200% of their base salary under the new plan. That's up from 75% previously. The updated bonus plan doesn't apply to Meta CEO Mark Zuckerberg. Meantime, Apple CEO Tim Cook reportedly meeting with President Trump at the White House yesterday. No word on what exactly was discussed, but Apple is, of course, at risk of being a victim in President Trump's trade fight with China. China has said it is considering a probe into Apple's policies and developer fees. And GameStop CEO Ryan Cohen has reportedly raised his personal stake now in Alibaba to about 7 million shares, worth roughly $1 billion. The Wall Street Journal is saying the move is a bet by Cohen on the future of China's economy. Cohen wasn't immediately available for comment to CNBC.
I checked the futures, a little bit of a bounce back from the week. Oh, now the Dow is actually down. That's interesting. Down 120 points. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, happy Friday morning, Joe. Happy Friday morning, Andrew. We're going to start things off with a check on the shares of Taiwan Semiconductor. Right now, they're up, the U.S. listed shares, by about 0.5% pre-market. This is being held by Morgan Stanley, which named the company a catalyst-driven idea, short-term tactical trade. That stock, of course, is going to be very much in focus next Wednesday after the closing bell when NVIDIA reports its quarterly results. Remember, Taiwan Semi is the sole supplier, maker of NVIDIA's AI GPUs. So you might expect a possible surge in Taiwan Semi if NVIDIA's guidance were to beat expectations. So they're very closely tied to each other right now. Keep it on TSM. Meanwhile, Dropbox shares are plummeting after the cloud storage company said its number of paying users would fall by 1.5% in 2025. The company attributed the drop to a reduction in sales representatives and lower estimates in its document service FormSwift. The company did also post a beat on the top and bottom lines, but it was not enough to boost those shares. It's up about 20% over the last year, but down 10% in the pre-market. And we'll end with shares of Block. They are down on earnings and revenues that both fell short of analyst consensus. Gross payment volumes also came in below expectations. The company also said it expects to deliver gross profit growth of 15% this year. So this payment company is down 8% right now. It operates the Square, Remember, and Cash App, and it has been facing a lot more competition from companies like Toast and Fiserv's Clover unit. So Joe, Block down 8% on earnings. I'll send things back over to you guys.
All right, thanks. I don't know if you noticed, Tom, but I was in this shot, and I didn't notice, and it was like an action shot because I was trying to figure out why the Dow's down.
I see that.
The Dow's down because of
the story you're about to read.
Which I was looking at. United Healthcare, and it's a look at the
It's a doozy.
Look
It's
at
a doozy.
And look at the bid and ask on United Healthcare, the Dow component. So just do the math on what a point loss of 28 points on a Dow component does to the average. Justice Department launching an investigation. This just crossed at 7 into United Healthcare's Medicare billing practices in recent months. This is people familiar with the matter telling the Wall Street Journal. It's a civil fraud investigation, and it's examining the company's practices for recording diagnoses that trigger extra payments to those Medicare Advantage plans, including at physician groups that the insurance giant owns. So there's a lot of interesting...
a lot of component parts.
A lot of people don't like those Medicare Advantage programs and thinks that it's rife for abuse. But if you're wondering what happened to the Dow, that's it. We'll have more on this. It's somewhat complicated, as all healthcare is at this point, especially when United Healthcare's done so. How does it do so well with a government program with Medicare? Makes you wonder.
We'll discuss all that and more. I'm sure we'll bring you a lot more on that stock and that story in just a moment. We come back, though, the future of travel and AI. Booking Holdings CEO Glenn Fogel is going to be with us. Talk about how the technology could be game-changing for that company and also the customer experience when it comes to travel. And then later, Pfizer and Illumina board member Dr. Scott Gottlieb joins us to talk a number of healthcare headlines, including this one. Yeah. We're going to get into all of this. Also talk a little bit about bird flu, a halting of some vaccines, and RFK's message to the public. We're coming right back.
said.com.
Take a quick look at futures this morning. We're looking at a little bit of a down picture here. The Dow off about 152 points. This comes on the back of some news. The Department of Justice has launched a criminal probe now.
Civil.
Civil.
Yeah,
I don't know.
civil.
It's civil.
It's
a
civil.
civil probe, I should say, into United Healthcare, and whether they were pushing either doctors to add these sort of extra diagnoses where they get additional payments.
They get a lump sum for Medicare Advantage.
But that stock down about 7%.
That's a lot.
So we're going to talk about that in just a moment.
Depending on the diagnoses, you can ask for more
A lot
from
more money.
Medicare. Exactly.
And the question is whether they were doing that knowing that they were effectively overdiagnosing. Meantime, for more on the markets, on retail trading, I want to bring in JJ Kinahan, CEO of IG North America. Good morning to you. You know, we've seen the markets have been, you know, I would say, I don't know if a tear is the right word, but I mean, doing quite well. We see these confidence numbers from CEOs and you know, confidence surveys and the like. And the question is whether all of it collectively is warranted given all of the other uncertainty that still hangs over us, whether it be tariffs, taxes, or other things.
Well, I think a lot of it is, you know, although, you know, as you guys reported a few minutes ago, you do see some other areas or some other areas of the world, particularly China at the moment, doing well. The bottom line is the U.S. stock market is still the best game in town until proven otherwise. You know, again, there are areas of the world that have outperformed so far this year, but I think one of the reasons that continues to make it so attractive is for exactly some of the reasons you're talking about, and that is the uncertainty that surrounds things right now. Let's face it, the tariff, I found it really interesting that in the Fed minutes, even they said, well, we're really not sure what the effective tariffs will be. It's such an interesting thing for them to say, because I think it actually made a lot of particularly retail investors feel better, because it's the exact question they're asking right now. What will the effects of some of this be? What will be the effects on inflation? And then you combine that with what could be, you know, some larger unemployment because of some of the actions that are going on by the government. So again, because of things like that, there still is quite a bit of uncertainty out there right now, but people continue to look at where do they still feel stability, and they still do feel stability in not just the Mag 7, but I'll call it the top 25 to 50 U.S. stocks right now in the S&P 500.
How do you see the crypto trade and its relationship right now to the retail world and the rest of the stock market?
Well, I think the crypto trade to me was like many stocks are before earnings. What I mean by that is before the president came in, as the president comes in, you know, the news is out there. We see this incredible up move, amazing. And so we start to see with that perhaps some clarity going to come in terms of how we can better trade crypto, expand that market, etc. We haven't had that full clarity yet. So I think there's become this moment of, okay, what's next? What will be it that is the catapult to take crypto convincingly over that $100,000 mark? We kind of, you know, we bounced off over it a few times, looked like we might head above 110, couldn't quite really pick up that momentum very well, back down to the low 90s. So it's really in a trading range right now until we have enough news to continue to bounce it higher. But I do think that we will get some sort of clarity overall that makes it easier to trade. Just the fact that the regulators aren't as, I don't want to say the word anti-crypto, but not, and many would say purposely not giving clarity on crypto because they didn't want it to be as heavily traded. There was, you know, a rule SAB 121 that affected many firms, etc. And so with that, some of the regulatory punishments, if you will, coming off, I think will continue to help crypto going forward. I just think that just like any news cycle, it's waiting for something that can get people excited and get right back in there and buying it.
What do you make of what happened with Walmart yesterday in terms of just what sounds like margin compression?
Yeah, and I think that you may continue to see that overall. You know, I look out at some of the stocks that I'll relate that to stock that's one of the stocks that our clients have been a bit bearish on over the last few days, and that being Disney. And the reason I'm drawing that parallel right here, Andrew, is because inflation continues to be a concern for people. So Walmart looking to continue to draw clients in the door. And in order to do that, having to give up margin, give up some prices here and there to continue to get people in the door, you know, as we saw with it, stocks like Costco going down too. So it'll be interesting to see what they have to say about it. Interestingly, on the other side of that, you know, the Journal had that big article a few weeks ago, and now we're starting to see it in real life. People looking at Disney and saying, hold on, are these prices too high? Can a family afford continue to still go there? And as I said, Disney isn't one we normally see a lot of bearish activity in, but over the last 7 days, we've certainly started to see so as Disney has had a bit of a rally. Those who are long starting to sell it, and on the option side, some people starting to, you know, buy puts on the stock overall. So that's one I certainly want to keep my eye on, but I draw a lot of parallels between those and what we may have to see going forward in terms of price compression for retail, and as we continue to hear from those stores overall. And then where does that continue to go in terms of technology also, I think will be the next question.
Okay, JJ, we're going to leave it there. We appreciate your time this morning on a Friday morning.
Always a pleasure, Andrew.
You bet.
Up next, Booking Holdings higher in the pre-market. The company reported strong travel demand in its latest report. CEO Glenn Fogel saying AI could be a game changer for the company. He'll join us after the break. Squawk Box is coming right back.
Time now for today's Aflac Trivia question. On this day in 1972, President Nixon became the first president to visit this country while in office. The answer when Squawk Box returns. And restrictions apply. And now the answer to today's Aflac Trivia question. On this day in 1972, President Nixon became the first president to visit this country while in office. The answer? China.
That's it.
Welcome back to Squawk Box. Shares of Booking Holdings moving higher this morning. The online travel agency reported better than expected profits and sales. Also announcing integrating generative AI across its travel products. Joining us right now is Glenn Fogel. He's Booking Holdings CEO. Good morning to you, Glenn. Before we get into the AI of it all, just want to really get a sense of what you think is going on in this global economy, where you think the customer and the consumer really lie, because we saw some of this Walmart news. There's obviously pressures on margins. There's all sorts of things going on. What are you seeing right now, not just in this last quarter, but what are you seeing ahead?
Good morning, Andrew, and thanks for having me. Yeah, it's something I do have to say, though. Last quarter, just a phenomenal quarter for us. Really wonderful numbers, 30% increase in EPS. It was just a very good across the board. All the metrics were great, which shows that there's demand for travel. And that's something that we talked about in terms of the first quarter, where there's still healthy demand for travel. This is a global event. There's no area where I'm seeing really concern about travel. Now, look, there is uncertainty all the time about the future in economies, and certainly there are a lot of geopolitical things happening that could be negative, or some could be very positive, especially for travel, by the way. You know, peace is a very positive thing for travel. But we'll see what happens, though, and I always say, look to the long term. Don't think about just the short term, this quarter. Think about what's going to happen over the next few years.
So now talking about the next few years, what do you see as it relates to how you're going to be integrating AI, and how's it really actually going to change the way I genuinely travel?
Yeah, it's a great segue because it's so exciting what's happening right now. We really believe that generative AI is a transformational type of technological change, and we are really enjoying the benefits of being a very, very large player in the space. Look, we have the number of people working on AI, we have the capital, and the most important thing, we have the data. Now, your question is, how's it going to make it easier for you to travel? And I know I've watched you many, many times talk about your frustrations in travel, and that's a lot of people have a lot of frustrations. From the very beginning, trying to figure out what is the ideal way to put together your trip, then am I getting the most value? And then do I trust that it's actually going to happen the way it is? And if something goes wrong, is someone going to fix it? Well, AI, that generative AI technology is something that's enabling us to do it so much better. I won't go through all the details of it, but I really believe that people who have the ability to transform using AI is going to make a much better business. And
how much of it, though, is it going to be in the sort of planning stages for me, the sort of instance of it, and then how much of it is going to be in the fixing stages, so when things go wrong? So, for example, the other day, I happened to be traveling back to New York, and plane got delayed. I then noticed that the plane that was supposed to be coming was no longer coming from where it said it was coming, and so the United app was all wrong, and I was thinking, do I need to rebook this myself? Should I call? I mean, when is this all just going to get fixed, frankly?
Right, exactly. And that example of the frustration is something that many, many people have had, and that is really what we're building. And it's not just generative AI, it's, our whole connected trip vision. The idea is that your phone is a travel agent, essentially, and you're carrying it everywhere. And it is aware. It's aware of the problem that you're going to have. Really what we want to have is to know about that the problem you just mentioned, and fix the travel right there beforehand. That's what we need to do. And it's complicated because you're bringing together so many different systems, so much different information from all different areas, and putting together and then coming up with what is the optimal solution to the problem that you are having. That's something that we're working on now. How quick is it going to happen? Look, it's going to take time, but we're already seeing some parts of it. And part of it is, for example, in customer service. One of the things, the reason you probably didn't want to call customer service because how long were you going to be on hold? Well, generative AI is enabling us to put our customer service systems together in a way that you won't have to wait online at all, because you're being answered by a generative AI.
Here's a question for you that Glenn, I'm going to make it more complicated. I'm going to give you my own personal example, but it's actually instructive, because I was thinking about this in the context of AI. You need the right data, and so if you're scraping, for example, Glenn, the United app to figure out what United is saying about the flight, and sometimes, I mean, in my example, they had a takeoff at 4 something in the afternoon, and yet the flight of the plane that you're supposed to be on wasn't arriving until something like 5 in the afternoon, right? So you would see that, but I'm not sure you would would you catch that distinction? And then at some point along the line, they flipped the plane that was coming and decided to use a different plane from somewhere else. So the question is whether you would have made a mistake. It is possible that a computer system would have made a mistake and said, okay, we need to get Andrew on a different plane now because that plane's is not coming when they say it's coming. But you wouldn't have known that United was about to change the plane again from somewhere else so that the delay would have been marginally less than what the larger delay would have been. Do you see what I'm saying? I mean, this is why this is super complicated stuff.
Exactly, and it's essentially what you described is one of those issues of you're not sure what's going to happen, and then it comes all down to probabilities. Now we are tied to all the different major systems with all of our partners, trying to make sure that we're able to come up with what is the highest probable solution for the problem that you're experiencing. And that's something that is why it is complicated, as you said, and it's going to take time to get it all set together. But I believe by using science, using data, and being the biggest player in the space, with the largest travel company in the world, we just did $166 billion. We have a better chance of solving the problem that you're talking about than anybody else, and that's what I'm looking forward to doing for you. And I'll let Scott Kirby, the CEO of United, know that you had a problem. Maybe he'll reach out to you.
Okay, Glenn, my question to you is, let me ask you a separate question. And this was something that came up at dinner last night, and it's something that's come up at a whole bunch of dinners across the country in the past couple of weeks, which is what is going on in the skies? And are we supposed to be worried when we see what took place in Toronto at that airport, when we see obviously what happened in Washington just a couple of weeks ago with the Delta plane and the helicopter? Is there something that we should be worried about when it comes to the FAA?
Yeah, tragedy, real tragic thing happening. Really unfortunate about this. The thing is, though, when you look statistically, flying is safer than it's ever been. And I've seen the numbers, and certainly you can have a cluster of problems that we've just seen, and it really is disturbing to see this. And everybody wants to have zero errors. This is not a case where you can have a small mistake. Mistakes are not permitted in flying. But it happens. Sometimes it happens. They're going to keep trying to make it better and better. I have no problem getting on a plane. I have no lack of confidence. I don't think I think it's safer than it's ever been. Now, can we improve further? Sure, of course. Is there understaffing at the FAA? Absolutely knows that, and they want to put more people in. Is there a need to improve the systems? The AI that will help bring even better, safer systems together? Sure. But I have no problem at all. I'm extremely confident. But it is very sad when a bad event happens like we've just seen.
And are you concerned, though, about what's happening at the FAA in terms of the staffing changes? I know they say they want to hire more people. They also want to change the technology. I don't know if you're supportive of the idea of Elon Musk and Doge going in there, or I don't know if it's the Doge team, but maybe Elon's team working with the FAA to improve the technology. Some people say it needs to be improved on one end. Some people also say Elon has a tendency to try to go very fast with things, and in a system where, as you said, the error rate has to be zero. How is that going to work?
But it was antiquated for the last 4 years. We ignored it for the last, at least, minimum upgrades in the systems. That has nothing to do with what's happened since January 20th. Nothing.
Yeah, Joe's right that there has been a lack of investment in the area, and things could be improved greatly, and they will be improved greatly. One of the things that's very, very helpful to thinking about this, everybody's involved in the system does fly. So everybody has a personal interest in making sure it's safe to fly. So I have confidence in the people who are doing the improvements, who are working on this, that they will continue to improve it. As I said, flying is safer than it's ever been.
Glenn, I want to thank you for joining us this morning.
Thank you very much.
Appreciate it. Thanks.
Coming up, a check on United Health and some of the HMOs and insurance stocks after a Wall Street Journal report that the Department of Justice has opened an investigation into Medicare billing practices at the company. That story pulling down United Healthcare, which is pulling down the Dow this morning. Pfizer and Illumina board member Dr. Scott Gottlieb is going to join us to talk about that and much more. Squawk Box will be right back. The DOJ has launched an investigation into United Health's Medicare billing practices. This is according to the Wall Street Journal report. It's a civil fraud investigation. It's focused on the company's practices for recording diagnoses that trigger some extra payments to Medicare Advantage plans. Join us now for more on this and other topics. Dr. Scott Gottlieb, former FDA commissioner and a CNBC contributor. He's also a board member at Pfizer and Illumina. You know this, all these things inside out, doctor, and there have been myriad complaints about some of these Medicare Advantage plans. Reading about how this works, it could certainly be rife for abuse. I'm wondering whether you have anecdotal evidence of things like this occurring. Do you understand what they're saying? That you get a lump sum from Medicare for these Advantage plans. If you find some additional diagnoses, you're able to go back to Medicare and say you owe us more money. And in this investigation, they seem to have identified people that said there was pressure from United Healthcare to push some of these obscure diagnoses that people didn't really have just to get the additional payments from Medicare. Do you know whether that goes on?
Well, look, this relates to the story that ran in December in the Wall Street Journal, it looks like, where there was a story that showed that Medicare systematically upcoded the sickness scores of patients as they transitioned from fee-for-service Medicare into Medicare Advantage. So they showed a 55% increase in the sickness scores of patients as they transitioned from fee-for-service Medicare into Medicare Advantage versus an industry average of about 30% for patients who transitioned into Medicare Advantage plans. Versus if you look at patients who just remained in fee-for-service Medicare, their sickness scores went up 7% year over year. So it looked like United Healthcare was an outlier in terms of how they were aggressively upcoding patients as they transitioned into Medicare. Now, it is the case that Medicare Advantage plans do a better job on the whole of identifying comorbidities and do a better job of systematically coding for them than patients who remain in fee-for-service Medicare, because there's a financial advantage to do that, and there's also a financial incentive to try to more aggressively manage the overall health of that population. But United Healthcare, being an outlier in this regard, attracted a lot of attention when that article hit. I will say that this is a industry-wide practice. A lot of health insurers, Medicare Advantage plans, adopt different tools to try to incentivize and prompt physicians to code for things like hypertension and obesity, things that might not be noticed in the chart and not necessarily billed for. So if the DOJ goes after this with respect to United Healthcare, I think it's going to send a chill across the entire industry. A lot of different Medicare Advantage plans and healthcare services providers are going to have to relook at their practices if, in fact, this becomes something that is a target of the investigation.
And United Healthcare says, hey, you know, preventing chronic diseases early is what we want to do. So they've got a ready-made sort of an answer to why they might find more things than usual. But then again, you've got some individual cases where someone was told there's something, I don't even know what this is, doctor, aldosteronism, which is a secondary hormonal condition. You don't even need a blood test. So someone could go in and say, you've got this. You could bill Medicare for it, whether they have it or not. It just seems rife for abuse. But then again, the company probably has an answer for that.
Well, look, a lot of this relates to the Byzantine way people are forced to bill Medicare, and I think the solution for this is to move towards more capitated models of reimbursement where provider systems are given lump sums of money to take care of an overall population rather than billing for individual patients or getting these sort of upcharges or, you know, additional revenue if they can diagnose patients with more illnesses. And so we used to worked at Medicare and Medicaid, we used to describe working there as a game of whack-a-mole, trying to keep up with what the healthcare industry did to try to, you know, frankly, game the different billing systems that Medicare rolled out. So I think trying to pay for the overall health of populations rather than individual patients and looking at these kinds of sickness scores that allow Medicare Advantage plans to get additional revenue, ultimately that's where the solution is going to lie, different kinds of mechanisms. But as I said, this is an industry-wide practice. United Healthcare does look like an outlier based on the Wall Street Journal's reporting. You never want to be an outlier in these regards, but there's an incentive in the program to get patients diagnosed and manage the healthcare of patients more aggressively, and they're paid for doing that. And so, health insurers have responded to that by implementing these systems that prompt physicians to look for these diagnoses, code for them, and then bill for them.
Doctor, just real quick, obviously a lot of people are going to relate this in their mind to the murder by Mangione and what that's all about. How do you think about that in terms of this investigation as it relates to that? And I don't even know where to go with this.
Yeah, I don't think about it. I think that was a violent crime and has no bearing on this by someone who seems to be deranged, quite frankly. This is completely separate. These are billing practices that result from the policies that Medicare has put into place, and that's not to absolve United Healthcare of potentially gaming these systems, but we need to look at the way we ultimately ask people to bill Medicare.
I look at it a different way. I look at it, you've got something for everyone. You've got potentially a predatory, for-profit company gaming the system at this fat, bloated government agency that wouldn't know if it was getting stolen from if its life depended on this bloated Medicare system. What do you think at this point the fraud and waste at Medicare and Medicaid is, doctor? Is it 30%? I mean, this is why we have a problem.
Yeah, I don't think we can put an estimate on that. I'm sure people have tried to do it. I haven't seen them. But look, like I said, if you're going to be billing Medicare for individual diagnoses like this, and you're going to get incentives for trying to turn over different illnesses that patients may have so you can upcode for the care of a population of patients, people are going to implement systems to try to turn over those diagnoses, and sometimes they're going to go too far, and maybe that's what happened in this case. United Healthcare was doing it more systematically.
But did Medicare have any idea?
We don't know.
Is there anyone minding the store of the taxpayers?
It's very retrospective. Yeah, look, it's very retrospective, and that's why I said it felt like a game of whack-a-mole when I worked there, where you were always trying to play catch-up to what the systems were doing, to try to, frankly, find ways to legally gain the billing system. We can move towards different reimbursement models. I think that could help resolve some of this, where we just pay lump sums for population.
And then you don't want to turn anyone down, because then you're back to your question.
Right. Doctor, talking about when you were there, I just want to go back, actually. This is a separate topic, and I want to also get to eggs and everything else that's going on. But did you see, there was an interview that Dr. Deborah Birx, who you worked with during the Trump administration, just did with Piers Morgan, where she said very explicitly that the COVID vaccine was, quote, not designed to prevent against infection, and effectively said that it was mismarketed by not just the companies, but effectively the government. And I'm so curious what your reaction to that is.
Yeah, well, I wasn't in the government at that time. I was in the private sector and on board of Pfizer, as you know. So I didn't overlap with Deborah Birx. Look, when the vaccine was first rolled out, if you remember, on this show, we talked about it many times. We were very careful to say that the vaccine, we didn't know if it prevented infection, because the original data showed that it prevented severe illness and hospitalization and death in patients. We presumed that if you were reducing infection rates over a population, that it would prevent infection, but we didn't know that, and we were very careful to say that we didn't know that. When the data came out from Israel showing that dramatically reduced infection across populations, that's when that information started to get into the label. The vaccine was initially very effective at preventing infection across populations. As the virus mutated, it became far less effective, and now it's more like the flu vaccine, where it reduces the severity of illness in a lot of patients, but it doesn't dramatically reduce their ability to transmit the infection across the population. Initially it was, against that original Wuhan strain. It was when the virus mutated that the vaccines became less effective. And I think that's a reality that we're gonna have to deal with going forward. This is gonna be much more like the flu vaccine, where yes, it probably prevents infection on the margin and transmission because it's reducing the number of infections in the population, but the bulk of the benefit that you get through vaccination for things like COVID and flu is reduced severity of illness if you do in fact become infected.
And Doctor, I do want to get to eggs, but I have one more thing back to this Medicare conversation. Are we talking about Medicare, or are we really talking about Medicare Advantage? Which I think is
You're talking about Medicare Advantage. You're talking,
right, because
but writ large, Medicare
but
Leviathan.
But it's Medicare Advantage that is the concept that is the actual problem in this instance, right? Because what happens is the insurance companies get the Medicare dollars, and then they deny the care, and they get to keep the money. I mean, isn't that what's happening here? But that's a Medicare Advantage
well, that's not
problem.
What's
I'm not
happening.
sure that's a
then
Medicare
they get more money
problem writ large.
The issue here is patients who transition from regular fee-for-service Medicare into these Medicare Advantage plans, and in the first year that they were in these Medicare Advantage plans, they, were suddenly diagnosed with a lot more illnesses. Now, there is some reality to that they're going to be more aggressively managed, so they're going to turn over more diagnoses as they transition to these plans, and that's probably a good thing because these plans are more aggressively managing the health of individual patients and populations. The question is the magnitude, and United Healthcare does appear, based on that Wall Street Journal reporting, which I think is the subject of this investigation, does appear to be more aggressive in additional coding on these patients.
The Medicare Advantage is the United thing. It's not Medicare. That's why I said. So I said there's something for everyone. You got the predatory, theoretically, the predatory Medicare Advantage company with this clueless Leviathan with it has so much money and no.
But I just think there's look. We can complain about Medicare, but I think the problem is the whole concept of the Medicare Advantage. The way
I disagree.
The way it works.
That's one way of getting. Then there's 10 other ways of screwing Medicare where they don't have a clue, aren't there?
There's a lot of benefits for Medicare. There's a lot of benefits from these Medicare Advantage plans because they do have an incentive, and they're paid to try to more aggressively manage the health of patients. And there are studies showing improved outcomes. Now, it can go too far, and I think Medicare needs to be vigilant around these things. Ultimately, they're going to have to change the way they pay for these because as long as they have systems that give incentives, financial incentives to get more diagnoses on a chart, people are going to look for diagnoses. And if you don't like that, you don't want to have to pay for that, we need to move to different kinds of billing systems.
And
like I said, it's a game of whack-a-mole. You're always chasing.
How much waste is in Medicaid right now? And there's no governor on it. There's no.
I mean, we get to talk about eggs. The whole idea.
Eggs are still cheap.
No. I want 10 seconds from the doctor on eggs. Should we worry about them giving the birds vaccines so we can get more eggs into the population, or should we just effectively kill the birds?
Yeah, look, I think the administration is going to roll out some new policies next week to try to increase egg supply in this country, reduce culling of flocks, potentially vaccination. It's going to be difficult. This virus has become endemic in the poultry flocks in this country, and I'm not sure we're going to be able to extinguish it. And once it gets into a poultry flock, it's 100% fatal largely in the chickens and spreads very quickly. So just reduced culling may not be able to contain this, and we may be in a protracted situation where you have reduced egg supplies. It takes 6 months to hatch a chick before it can start laying eggs.
Okay, doctor, I'm trying to be on a high protein diet right now. The eggs that's a very important part of the.
Your cholesterol will be so much better after 6 months from now.
Doctor, hold on? Doctor, help us with this because people talk about it. Cholesterol and eggs, connected or not?
Of course.
I missed the question.
Cholesterol and eggs, connected or not?
It's genetic too.
and restrictions apply.
Next week, we reveal the CNBC Changemakers 2025 list. Our Julia Borston caught up with changemakers from our inaugural list who have been making some waves this year. Hey, Julia.
Good morning, Joe. Well, one of the change makers from last year's list, Meta's head of business AI, Clara Shai, is at the center of the AI revolution after driving innovation around how companies connect with consumers via social media and then leading AI at Salesforce. Now she's taking on the big role of running Meta's new business AI division.
One of the things that drew me to Meta is how committed the company is to investing in this area of trust and safety. Not just for Meta, but in an open way. You know, LlamaGuard is a great example of a set of technologies that we've open sourced to developers to make sure that everything from proprietary data to sensitive data to bias data, that we're correcting for it, we're checking for it, and that we're getting better and better over time. I just think that's so incredibly rare and also so incredibly important that we have people from different backgrounds and experiences creating these technologies and also using these technologies.
Shai noted how unusual Meta is in the tech space to have 3 women leading its key AI divisions, including her. You have the research lab, the head of its research lab, and also the head of its AI for consumers division. You can find my full interview with Shai. We talk about a whole range of things about Meta, AI, and leadership on CNBC.com on Wednesday. And tune in on Monday when we reveal the CNBC Changemakers 2025 list online and right here on Squawk Box. Joe?
Okay, we'll do it. Thank you, Julia.
Okay, coming up, we're going to bring you some street reaction to this United Health and DOJ investigations to their Medicare Advantage plans. We'll discuss it after this.
Well, you can see it's spreading a little bit and getting worse for United Health. Other insurers, along with UNH, getting hit this morning after the DOJ in a Wall Street Journal report revealed it's investigating some Medicare billing practices at United Healthcare. We're going to speak to an analyst next. As we head to break, here's a check on Bitcoin this morning. It's back over 98,000 for the first time since about the 10th of February, a couple of weeks. Squawk Box will be right back.
And restrictions apply.
It's 8 a.m. Now, almost on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. Becky is off today. Among some of the stories that we're watching, the top stories, the Senate adopting a $340 billion budget blueprint early this morning that's designed to boost funding for President Trump's immigration enforcement efforts, energy production, and the military. The vote was 52 to 48 after an all-night session, with Kentucky Senator Rand Paul voting in the minority with Democrats. Otherwise, it would have been 53, I guess. Attention now moves to the House. Lawmakers there plan to take up a competing budget resolution next week that will also include trillions of dollars in tax cuts, extending the ones from 2017. Reports say President Trump is planning to fire the board that oversees the U.S. Postal Service and absorb the agency into the Commerce Department. The president has spoken about potentially privatizing the mail carrier. It's expected to fight any such move. And the Wall Street Journal says billionaire investor Ryan Cohen has increased his stake in Chinese e-commerce giant Alibaba to about $1 billion a year. It's a relatively small stake when compared to the size of the company. But Cohen is known for sometimes drawing retail investors and interest in what he invests in the wake of what he does.
Meantime, futures right now on the Dow down about 200 points on the Dow, in large part on the back of this investigation into United Health. We're going to talk about that in just a moment again, but let's show you where things stand. NASDAQ up about 87 points, S&P 500 up about 6 points. Treasuries right now, if you look at the 10-year note and the 2-year note, you're looking at 4.488. The 2-year at 4.264. And want to get it straight over to Mike Santoli, who is down at the New York Stock Exchange. Mike.
Yeah, Andrew, of course, UNH is the second largest component of the Dow since it's price weighted. It's the second highest price stock, so that is the downside influence there. Otherwise, S&P 500 kind of holding in there. We had an intraday recovery, partial recovery yesterday, down almost 1%. Early on, you had a real unwind in some of the high momentum parts of this market, as well as, of course, that pullback in Walmart after subdued outlook. Also had a bit of a rethink on some of the consumer cyclical stocks. In the end, didn't really amount to a whole lot of downside. In fact, we settled very close to the former all-time highs from a few weeks ago before we got marginal new highs just in the prior couple of days. So what you really see is this market has been kind of trying to get over what had been that ceiling from back in December, going sideways, digesting a lot of the froth, very selective and split market under the surface. It's not been a very emphatic run to a new high, but is resilient relative to a lot of things that are bombarding this market. Take a look at the banks. It was also downside leadership yesterday, been one of the stronger groups. This is the S&P Bank ETF, and it's taken us down to what basically is the post-election day gap. This is a one-day jump after Election Day on November 6th. It went from like under 55 to like 61. So it's kind of hanging on to much of those gains. It's been probably the clearest and most consensus deregulation play in the market. So a little bit of a pullback. Goldman Sachs and JP Morgan, some of the quality names, crowded ones, were on the downside. Now, some of those retail momentum favorites have had a little bit of a bumpy ride recently, and I just wanted to look at two. This is MicroStrategy. By the way, peaked right after November, massively outperformed the entire market as well as Bitcoin itself. It is obviously a leveraged Bitcoin play and has been kind of grinding lower, even as Robinhood, which is a play on some similar kind of energy in the market, has had this massive surge and then a gut check following its decent earnings, but then some, again, this unwind of some of these retail trades like a Palantir, like a Robinhood, like AppLovin. So we'll see if this is just kind of a wobble along the way. It seems like the market so far has been handling it, Andrew.
How, by the way, in terms of just market pricing in all of these proposed policy moves being thrown out at the same time, how do you think that's actually manifesting itself?
The market is essentially reserving judgment. I mean, obviously it's a headline-rich environment. There's a lot of stuff out there in terms of what could be big changes, whether it is in, obviously budgets, talk about 8% decline by year in the budget. Market's not rushing to price that all in, but it's wary of it, and it's aware of it. I think that the market has this way of going line by line and saying, what precisely should I be repricing based on this particular news? It's very much a wait and see. You've definitely seen some tariff-insulated retailers do better than those that might be more vulnerable. Obviously, home building has much more, has suffered a bit, but that's mostly a rate move. So I feel like the market is very much kind of on balanced footing and waiting to see actual tangible policy and not rushing to sort of chase the headlines.
Okay. Mike, want to thank you. Appreciate it.
The DOJ launching an investigation, we're talking about it, into United Health's Medicare billing practices. There's a Wall Street Journal report, came right at 7, that says that the civil fraud investigation is focused on the company's practices for recording some diagnoses that trigger extra payments to its Medicare Advantage plans. And you can see 52 points of downward pressure in United Healthcare is reflected in the Dow Jones average. Insurance stocks are down as well. Joining us now, Jared Holtz, healthcare sector strategist at Mizuho. We didn't know we were going to need you again so soon. When were you on, Jared? Deja vu. Is that this week?
Great to see you too. Yeah.
You're sitting right there. You're sitting.
That's right.
Remember? You're sitting right there.
I remember. Yeah.
We've talked about the interplay. You got Medicare. You got Medicare Advantage. These plans, United Healthcare. In this case, both sides can say we're just doing what we're supposed to do. Both sides could there could be improvements probably from both sides. Is United Healthcare gaming the system with its Advantage plan, telling people that they have things they don't have so they can bill Medicare for more reimbursements?
I mean, I guess that's what this Wall Street Journal article is alleging this morning, is that the provider network that the company owns and operates, right? United is a different animal than all the other stocks that you have listed up there, because they have a provider or a doctor business as well as an insurance business, whereas most of the other companies do not. So the allegations here basically pertain to that doctor network overcharging patients for various procedures they may or may not need, and that's enabling the company to go out there and get more money for the government for those procedures, whatever they may be, various diagnostics, etc. So a little bit of a circular reference here. I'm not really sure that the contagion is really warranted across the board for, you know, CVS, Cigna, etc. But we'll see as more details emerge here.
It's the oldest game in the book. Do you remember that that hospital out in California, Red something or other, that was, they did more heart bypass surgeries. They would do that to people that had no need for any open heart surgery, and they did thousands and billed, I guess they billed the government for those, or insurance company. So
yeah, that was my first. That was my first reaction this morning, actually. That I thought the risk and the streets' view of this situation would potentially be worse for hospitals, because we know that so many of these cases that happen are probably, or you could argue, unnecessary, or different provider networks, hospital networks are coding for either diagnostics or treatments that might be a little bit liberal on the margin and therefore getting better payment. So when I looked at this initially, I thought that the weakness could actually be across the hospital stocks more so than insurance, but so far not the case. We'll see how the day goes.
Jared, what's the answer? United Healthcare says, look, this is what we're supposed to do to prevent chronic conditions from getting worse. We want to identify these things early. Because of the Advantage program, we're able to give more comprehensive healthcare and diagnoses than you can get. So they're going to argue that point. Is Medicare staffed enough to be able to go in and investigate whether these are legitimate charges coming from all these different insurance companies? It just seems like both sides of the system are rife for abuse, and that's why we have such exorbitant healthcare costs compared to the rest of the world.
Agree. I mean, the sector really can't catch a break, right? You had the shooting last year. You've got PBM investigation as far as, you know, how much profit those businesses are making. Obviously, United Healthcare is a big player there. Now you have this in terms of overcharging patients and potentially defrauding, you know, Medicare and Medicaid out of different funds. So, I mean, the risk really run the gamut here. It's tough to say.
It's weird, because here United Healthcare is saying you need more. And they're not turning down, because they're saying, oh, no, you got a hormonal imbalance we found, and you were going to get Medicare to pay for it. It's the opposite of what of turning down.
And then they're denying claims on the other end. So the
denying claims on the other end for what you really might need. Oh, we got to end it there. We got some breaking news, Jared, from what's up?
We got some new news this morning. Coinbase just announcing the SEC has now agreed to dismiss its enforcement case against the company. These are the charges that were filed back in 2023 when the SEC sued Coinbase for operating, remember, as an unregistered securities exchange, broker, and clearing agency, and for failing to register that offer and sale of its staking as a service program. You're looking at the stock moving higher, about 5%. It's actually continued to move higher as we've been discussing all of this, and we're going to bring you a lot more on this big decision, really. But I mean, this is not Gary Gensler's SEC anymore.
No.
And clearly they are making a stand here, saying that they are ending this enforcement action.
Almighty, that's all Coinbase needed at $270 now. What's the low in the last 2 years? I don't want to know.
You can look at it right there.
You need to go back a little bit further. It was down.
Oh, even lower. Yeah.
Yeah.
Go back in 23.
Luckily, we can't invest in anything. Coming up, former Cleveland Fed President Loretta Mester going to join us on the state of the economy and top issues for the Fed. A month into the second Trump administration. Stay tuned. You're watching Squawk Box on CNBC.
Insurance.
New this morning, Coinbase saying the SEC has agreed to dismiss its enforcement case now against the company. These are the charges that were filed back in 2023. By the way, the stock up about 5% on the back of this news. That investigation and the effort started in 2023 when the SEC sued Coinbase for operating as an unregistered securities exchange broker and clearing agency for failing at the time to register the offer and sale of its staking as a service program. Now, I spoke to Coinbase's co-founder and CEO Brian Armstrong about how all of this happened.
First of all, this is a huge day for us and also for the 50 million Americans who hold crypto, the whole crypto industry in the world. I think it's a really important signal that this small group of activists in this prior administration who tried to unlawfully attack this industry, we're going to be able to turn the page on that and finally get some regulatory clarity in America. But to answer your question, how this all happened, I mean, yeah, in 2023, they came to us and said, we think you're trading securities on your platform. But the problem with that is if you go back to just a few years prior, we had gone public. We had explained everything about our business to the SEC. They asked us a million questions. They knew exactly what our listing process was and how we took a very conservative approach. And then a few years later, the political climate changed and they suddenly changed their mind. But that's not how it works. If you're a regulator, you can't just make up new rules if you don't like the existing ones. They have to follow the law and they have to publish clear rules that the industry can then adhere to. And so this case was bogus, and we were right on the facts. If we hadn't stood up for our customers' rights and actually pushed back against this, it could have been the end of the crypto industry in America. So I'm incredibly proud of this outcome and what we did to defend our customers' rights.
Can you though take us behind the scenes though about how the SEC and this administration ultimately decided to end the enforcement action, and what kind of conversations you had with them?
Yeah, well, this was a long process, and I think what they realized is that they were going to lose badly. And I have to give a lot of credit actually to this new administration that's come in, and Paul Atkins, some of the existing commissioners like Uyeda and Peirce. I think they're in the process of reforming the SEC and trying to clean up some of these actions where the SEC really painted outside the bounds of the law in the past. That was clear to some of the folks in the SEC at the time, and I think it's clear to the folks that are in charge now. And so I got to give them a lot of credit. They're coming in, and I hope that they'll dismiss all the bogus cases, frankly, and it'll be a domino effect for the rest of the industry.
In terms of how this is all going to work in practice, what's the next step in the process? So do the commissioners have to vote?
Yeah, what we're told is that next week the commissioners will vote on it. It seems to be a formality at this point, but the staff they're telling us they're recommending to the commissioners that this be fully withdrawn. And I want to be clear, this is not a settlement where we pay some fine and admit some wrongdoing. This is just they're fully withdrawing the case, and so we're not changing anything about the business. We're not paying a single dollar as a fine, which I believe is quite unprecedented in SEC history.
How much does this legal battle cost the company?
Yeah, I don't mind telling you, actually. We went and tallied it back up because I asked the exact same question. And just on external legal fees, I believe we spent about $50 million. That does not include, by the way, the cost of internal employees that we spent on this. So it was in excess of $50 million.
At this point, given this cloud may be moving away, how do you see the regulatory regime moving forward? What are you seeking? What are you asking for? And what do you think is going to happen?
This legal precedent is very important to make sure that we can't revisit this issue again, or a future SEC administration can't revisit it again. But what we really need to do in the United States to get regulatory clarity is to have Congress pass legislation. And that's going to have a couple of key components to it. There's already some stablecoin draft legislation being discussed in Congress. That's an important piece so we can have a digital dollar that preserves America's reserve currency status. We also need to get token classification, or market structure, some people call it, which is essentially just clarifying which of these crypto assets are commodities, securities, payment tokens, artwork, or something else, so that we know how it should be regulated. And if we can get those, the third one I would say would be a strategic Bitcoin reserve. I think that would be an important asset for the United States.
You reported quarterly results last week, and the trading volume was up 185% year over year. You also, though, talked about the world of stablecoins and trying to diversify outside of trading. What do you think that looks like? What does that product look like over time?
Yeah, well, thanks for mentioning that. We did have a great Q4, and in 2024, we hit $6.6 billion in revenue. We were able to grow substantially year over year, and just really proud of the outcome there for the team. So one thing you are seeing is we're diversifying increasingly out of just trading fees and adding other products. So some of those have been around for some time on Coinbase's platform: custody fees, staking fees, Coinbase Debt, Coinbase Card. But you mentioned one of them, which is around payments, which is, I believe, an important area for crypto. Stablecoin payments, for people who haven't followed this, has grown enormously over the last few years. In 2024, there was about $30 trillion of payments that went over stablecoins, and that grew 3x year over year. And so we expect that trend to continue. What we're doing about it is we're building payment features into all Coinbase products to make sure that we can help update the financial system there.
The other thing I was going to mention is I was listening to the Q&A that you had done on your quarterly call, which I know you broadcast on X, and you talked about prediction markets being another opportunity. We saw Robinhood ended up removing contracts for the Super Bowl. I don't know if you saw that ahead of the big game.
Mm-hmm.
And I'm just curious how you're thinking about prediction markets and just how much scrutiny that area or that product may turn out to have in this environment.
Yeah, well, I am excited about prediction markets, and I think the new CFTC chair, Brian Quintenz, is certainly very thoughtful on this topic, and he's going to have to figure out how to create a trusted environment where these things can be built in the United States, so Americans can use them, but also make sure that consumers are protected. So as an example, you'd want to make sure that you don't have any sort of prediction market where someone might be incentivized to harm another person, right? Just sort of basic rules like that. But overall, I think that people are going to use prediction markets to figure out what's actually happening in the world. I actually think of it's less of a trading product and it's more of like an alternative to the New York Times or something. If I can say that on your program, I hope I know you work with both companies, but I think people are trying to figure out what's happening in the world. They're increasingly worried about misinformation and they want a source of truth. And prediction markets are emerging as an important source of truth where people have real skin in the game. And that's an exciting development where crypto can help.
Where do you land these days on meme coins? I don't know if you saw, by the way, there happened to be for a hot minute a coin with my name attached to it. I was not involved in it. It just came out of nowhere. And I watched, it was actually sort of fascinating to watch the development of what was happening and see people on X and on some of these Telegram accounts and other things really trying to push it up, and then of course questioning whether, when they were going to sell and what they were going to do. I will admit I found it fascinating, but I was also sort of uneasy about it. It still exists to this day. What do you think about the phenomenon?
Yeah, well, meme coins in the broadest sense, I think we should find a way for artists to get paid. Anybody should be able to put artwork, they should be able to get paid for it. And I do think, meme coins are a canary in the coal mine that more and more of the world is going to get tokenized and put on chain. Every asset class, every vote, every identity, every song, every Instagram post, whatever in the future, I think more and more of these things are going to be tokenized. Now, we also need to make sure people are following the law and not doing pump and dump schemes or insider trading. And there probably has been a little bit of that in the meme coin space, which is not helping anybody. And so in every crypto cycle, there seems to be people who rush in and they forget these lessons of the past. But insider trading should obviously be prosecuted, and people should avoid doing that unless they want to go to prison.
Do you think that the same insider trading laws that exist today for stocks, for example, should apply to the crypto world?
It's an interesting question, actually. I think Brian contends and others are thinking about this through the prediction market lens. I mean, in the broadest sense, yes. I think that most of the same rules should apply. It should be a level playing field around insider trading. There's an interesting question for prediction markets of like, do you want to let insiders trade? In the commodities world, it's sometimes a different question than in the securities world, right? Like if something is truly decentralized and anybody could have information on it, it may be a different lens, but I'll leave that to the regulators to think about. I haven't formed my opinion on that fully yet.
Right. And I'm fascinated by all of it because I'm watching, for example, I don't know if you watched the whole Argentina President Milei, apparently post about Libra, and then he took down the post, and there's all sorts of controversy about whether he was pumping this up. I mean, that's the thing that just seems so different about this world than maybe the stock market's more mature today than what we've seen before.
Yeah, well, I do think we're in early stages of this industry, so it's the Wild West a little bit, like with meme coins right now, and there's good that comes with that, which is a lot of innovations happening. There's some bad happening as well, where, from what I understand, it sounds like President Milei accidentally shared that information without understanding exactly what he was sharing, if you believe his comments. So, yeah, my hope is that this gets cleaned up, and people continue to think long term about how we're going to create real value for the billions of people in the world who need an updated financial system.
I wanted to ask you one little comment. I was curious. I don't know if you saw it. Tyler Winklevoss tweeted the following: as long as MIT has any association with Gary Gensler, who of course was a tormentor of yours to some degree, Gemini will not hire any graduates from this school, not even interns for our summer intern program. Did you see this?
I did see this, yeah. You want me to comment on what I think? I'm happy to share
I'm
my
very
thoughts.
curious.
Well, okay, so I don't think MIT should have hired Gary Gensler. I think that was a mistake on their part. And, I don't believe in canceling people. I think he should be able to go find his next career and try to create value in the world. But his actions at the SEC were a real anomaly, and I don't think, that should be taken lightly. There was some unethical behavior on my part, so they should look. I think MIT should look into that. Now, to Tyler's comment specifically, I don't think they need to punish the students who are attending MIT. Maybe they've never, hopefully they don't even take Gary Gensler's class. But you know, I'll leave it to MIT to figure that out. Obviously, that's not something I need to be directly involved in.
Big move, clearly by the SEC, and it's a big switch in terms of how the Trump administration is going to be reacting to all of this. You could also argue, I mean, part of one of the reasons either Trump got elected was because of his take on crypto. The flip side of it is critics would say that the crypto industry gave, you know, the Trump administration an extraordinary amount of money during
Yeah, but
during
didn't
the campaign as well.
we were involved with interviewing him back when this was all happening. And
yes.
At the time, it seemed like it was meritless.
Well, the big issue is we just haven't had actual laws and legislation and to figure all this stuff out.
I know, but even without any of
Gensler
still seemed like he would shoot first and the laws could come later. You know what I mean? He was after these.
I think the big issue was that the SEC was approaching its enforcement by legislation or enforcement by
that's what I mean.
Action as opposed to legislation.
And I don't think this is. I think this is vindication from a more. I mean, a better SEC that doesn't have a conflict of some. I don't think it's because people paid off. You know.
I'm just saying. Look, there's two sides to this, which is some people will say that this is exactly the way you suggested, and others will say the industry
and it's mature.
By the way, had the industry not supported Trump, if the industry decided to support the other side,
still would have happened.
Who knows?
Probably, and the industry has matured, and there's less. I don't know. It doesn't have quite the target it had on its back when it was more unknown, and you know, I think you see the institutionalization of crypto.
All of the different All I'm saying is, for example, this president has his own meme coins.
It's possible that the Biden administration and whoever was in Gensler's ear was dead wrong about all these things and out of line. And it costs how do they get to $50 million?
Very well may have been.
How do they get to $50 million back? It's like, oh, sorry, we sucked at our job regulating this industry. We didn't regulate it, in fact, because we didn't know how to. And your collateral damage.
I'm just saying that
your collateral damage of our misguided.
Either side. I'm just saying that there's a lot of sides to this.
Your collateral damage of our misguided efforts that cost you $50 million. Sorry. Coming up, we're going to get more reaction to Coinbase's announcement. The SEC is dismissing its enforcement case against the company. Next, though, TikTok in focus. Countdown is on once again to a possible ban. CNBC spoke with Senator Tom Cotton about this. And we're going to hear from him after a break. Stay tuned. Squawk Box will be right back.
and restrictions apply.
TikTok back in Apple and Google in their app stores, but maybe only temporarily. When he took office, President Trump directed the Justice Department not to enforce a ban on the app for 75 days. It's unclear if that directive is legal, but in the meantime, one of the biggest China skeptics in Congress is speaking out. Eamon Javers. No. You're joining us now about that. You're not the person, because you're not in Congress.
Yeah.
Correct me if I'm wrong. Not yet.
I'm not the
Not
guy,
yet.
but I talked to the guy.
You did.
Yeah.
Very good. What'd he
That's
say?
right. Look, Joe, with just a bit over 40 days left before the deadline to finalize the sale of TikTok, the new chairman of the Senate Intelligence Committee, Tom Cotton, tells CNBC that if Xi Jinping doesn't agree to sell the social media company, that would prove that TikTok was in fact a tool of Chinese statecraft. In a conversation last night, I asked him if Xi Jinping would even agree to sell TikTok, given that it has the potential to be so useful for China.
Well, I think that's one question that the administration and the buyers are exploring right now, is whether its parent company, ByteDance, in these final 45 days or so now are willing to actually sell it, or whether they'd prefer just to shut it down. If they don't sell it, I think that's a pretty strong indication that it was in fact a tool of Chinese communist statecraft.
Now, Cotton is a China hardliner who recently took the top job on the Senate Intelligence Committee, replacing now Secretary of State Marco Rubio on the Republican side. His new book is out this week. It's 7 Things You Can't Say About China. I asked him what his message is to American CEOs, and he said this.
My message to Wall Street and investors: be very wary of China. The only reason that Xi Jinping has not done to American CEOs and American investors that he did what he did to Jack Ma, the Chinese billionaire, is that he hasn't been able to get his hands on you yet.
Cotton there referencing Chinese billionaire Jack Ma, once the richest man in China, who vanished from public view several years ago and has since relinquished control of his conglomerate. I also asked him about China's leverage over Elon Musk. And Cotton said that Tesla is one of many American companies that he wished had a bigger presence here in the United States and less or no presence over in China. So that is a big talking point as well, guys. Back over to you.
All right. It's interesting to watch, Eamon, and all you got to do is move into the Trump administration, and anything that you said in the past, even Tom Cotton, if he were to go, and I wonder if he'd still be the China hawk, because they're disappearing when they go into the administration. It's bizarre to watch, isn't it? I guess that's politics, so it's not the first time.
I asked Cotton about Donald Trump's comments about TikTok, right? Because Trump has said on the one hand, years ago he wanted to have a TikTok ban. Now he says, well, I kind of like TikTok because it helped me get elected and it's a useful tool. I asked Cotton about that, and he said, look, like a lot of Americans, he enjoys the tool, but you have to bear in mind that by the Chinese Communist Party. And you wonder the degree to which Trump is concerned about that or recognizes that. I mean, he really sees TikTok as a tool that helped him get elected and win young voters. Is this something that he's going to be focused on, or is his priority now in preserving a tool that he felt was useful to him? We'll see where all this lands.
He may have had, his thinking may have evolved. I know a lot of people that aren't convinced, my friend right here, that aren't convinced that the evidence is there of all the most horrific things that TikTok has been accused of, whether any of that, whether there's any evidence that any of that is true.
And then the question is, Joe, whether or not Xi Jinping will sell it, right? Why would Xi Jinping sell it? If it's really a tool of Chinese statecraft, why wouldn't he just
That's
say,
a good point.
hey, you know what, we're going to let this thing collapse and the American government can suffer the political consequences of that in the U.S. And that's just another way to stir the pot here in the U.S. for them.
Right. All right, that was not a jibber jabber segment specifically, but it was good to see you on Friday. What time are you gonna? What time will I see that today? Or are you doing that on Blue Sky
This
now?
sore throat's been killing me all week, so I'm going as early as possible.
When will you say weekend? Is that on Blue Sky now? Or are you still doing it on X, or both?
I'm doing on both. So I serve a vast constituency, Joe.
Well, if you want to serve them all, you need
Everybody
Truth
likes the
Social.
weekend.
You
Left
need
and
Truth
right.
Social then, there, my friend. I want to see
I do. I
weekend
need
on
that.
Truth Social. Okay.
I'll work on it.
I doubt it.
Coming up, the cost of uncertainty in the economy. Steve Leisman joins us now in just a moment with that story. Plus, we're going to speak with former Cleveland Fed President Loretta Mester. Stay tuned. You're watching Squawk Box, and this is CNBC on a Friday morning. A lot going on.
Off. Terms apply.
Uncertainty becoming an even more preferred word over at the Federal Reserve. Steve Leisman joins us now with how Fed officials and economists track that level of uncertainty and the economy and its potential losses. How you doing, Steve?
Morning, Joe. Yeah, more and more Fed officials are placing the unknowns about fiscal policy on equal footing with inflation and explaining why monetary policy is on hold and is going to stay there until policies become clear. Fed Governor Adriana Kugler late yesterday echoing the sentiment of several Fed officials who spoke, saying the potential net effect of new economic policies also remains highly uncertain and will depend on the breadth, duration, reactions to, and importantly, specifics on the measures adopted. Well, so far the effects of uncertainty haven't shown up in any hard data, but it is tracked in several indices watched by the Fed. Take a look at this one, the Economic Policy Uncertainty Index. It looks at newspaper articles, differences in economic forecasts, and tax code changes. It shot up after the election, calmed down, and is now the highest it's been since the pandemic. Well, in fact, it's higher than at any time during the Biden or the first Trump administrations outside of the pandemic, and it's back 60% of the elevated pandemic level. There's another index, the Trade Policy Uncertainty Index, never been higher, far surpassing the levels from when President Trump put tariffs in place in 2018. I talked to Professor Stephen Davis. He created the Economic Policy Uncertainty Index. He's a professor at Stanford. He tells me uncertainty tends to dampen economic activity regardless of whether the prospective policy change is good, like tax cuts, or bad, like tariffs. His opinion, of course, for efficiency and profitability. Of course, the good versus bad aspects of possible policy change also matter. Davis says uncertainty can make businesses wait to hire or invest. Sectors that are reliant on government spending or regulation, they're the most sensitive to this policy uncertainty. The paradox for investors and for the Fed, these high levels of uncertainty also come with elevated business optimism, raising the uncertainty over which is going to win out when it comes to the economy, Joe.
Yeah, if the uncertainty leads to something bad and you were overly optimistic, then you got further to fall, I would think.
I think that's right. I would. You just got to let the political process play out on one level, Joe. How many businesses, Joe, have you talked to that said, "All right, look, I prefer, like, for example, lower taxes and less regulation, but in the absence of that, I just want to know what the rules are so I can set my business up for that outcome." And that's, I think, where we're at right now. I haven't seen much deterioration in, like, the CFO surveys. They seem to be, again, pretty optimistic, but with high levels of uncertainty. The small business NFIB uncertainty index is also elevated. There's a bunch of indices out there. I don't really correlate them so much with the stock market over a long period of time, but when things are really uncertain, you can get what we have kind of now, Joe, which is this sideways in the stock market.
You know, we always heard that we've seen, you know, how the economy before the pandemic, but we saw how it reacted to Trump's first term. But things are different this time around, and there's still some, you know, along with the uncertainty with tariffs, I still think there's some unfinished business. We're going to talk to the Fed now. Someone from used to be on the Fed. There's some unfinished business as far as inflation goes at this point. I think still, Steve, don't you think?
Well, that's those things are actually combined, Joe. And I think that's a really good observation.
Yeah.
What's interesting to me is how the Fed has kind of raised it to the same level, right? It's like we got this inflation problem and we have this uncertainty problem, and both of those are together. Now, Alberto Musallam yesterday, he's the new St. Louis Fed president, he kind of joined the two, and he said, look, this is a really interesting time, or difficult or perilous time maybe, to be messing around with tariffs because inflation is higher. And I think that gets back to the 2018 example. A lot of folks who have said, you know, tariffs were didn't surge inflation in 2018. Well, guess what? We have much different inflation profile now than we had back then.
Right. We just don't know whether there's really going to be a lot of tariffs or not at this point. Thanks, Steve. Joining us now to talk more about the state of the economy and the Fed's view of it, former Cleveland Fed President Loretta Mester. She's an adjunct finance professor at Penn's Wharton School and a CNBC contributor. And it's great to have you on, as it always is, President Mester. But I guess I'd start with some of the recent inflation numbers that we've seen. I think that it was the third straight month where maybe you could make a case that it stopped moderating. Most people think it's still in a downward trajectory and it'll resume and maybe we can get some rate cuts. Do you feel that it's ready to start a downward trajectory again, or will we have a fourth straight month of hotter numbers?
Yeah, Joe, I mean, I guess I'm concerned about the inflation progress. I think it has stalled. I think it, you know, long term, it's going to probably move back down. But I think the Fed's right in being cautious here and not, you know, wanting to keep moving the interest rates down as they had planned to do. So I think they're right to be cautious. We'll have to see. You know, we saw a similar kind of stall out at the beginning of last year, and the Fed was concerned about it. And then later on in the year, it did move back down again. So it could be seasonality, it could be concerns about tariffs, it could be a lot of things that are affecting the inflation numbers. We'll just have to wait and see. But I do think the Fed's right in terms of, like, there's no compelling reason, even if you put aside fiscal policy, there's really no compelling reason right now to be moving rates down. There's, you know, a strong economy on the real side. Growth is really above trend, and it's been above trend for 2 years. And labor markets, yeah, they're in better balance now, but there's still pretty solid labor market statistics. So again, there's no real reason for the Fed to be moving rates down at this point. And then if you add to that, it isn't clear to me, at least, and I think to a lot of observers, just how restrictive policy is at these levels, because I think the neutral rate is moved up over time. So again, good reasons aside from what you can imagine about what's going to happen with fiscal policy, to be here just pausing and letting for things to clarify a little bit in terms of where the economy is going, both on the inflation side and the employment side.
For inflation to get to the Fed's target, and you don't think they're going to move the goalpost, it would be bad. I mean, 3% is different than 2. 2.5 is different than 2. Do we need weakness? Do we need the unemployment rate to go higher to get inflation to where we want it to be?
No, I don't think you do, Joe. I mean, maybe a little bit higher if you look at the Fed forecast and other private sector forecasts. It moves up a little bit, but it does stay solid. It's not like, people thinking that, wow, we're going to have to crash the economy to get inflation down. And that's why the Fed has been willing to tolerate the slow decline. If you look at the latest projections from the Fed, it took an extra year to get back to 2%. They're committed to doing it, but they're willing to let it go slowly because they are concerned about the labor market. They don't want to harm the labor market. So that's the Fed's role, is it has to balance those two goals, has to keep both in scope, and it has to manage that and keep its policy rate well calibrated to where the economy might go. They did some hard work of doing that calibration. We didn't move it up quickly enough, and therefore we had to go really quickly at the start of the tightening cycle, but that recalibrated policy to high inflation. Now, with inflation having moved down, not all the way to goal, they started to move the rate down. But this is a good place to pause while things play out, so you have a better view of where policy needs to go. They're in a good position because they can pivot either way, but that's their job right now, is they got to keep policy well positioned so that they can handle things as it plays out.
If you can't sleep tonight, is it going to be because of inflation being stickier, or the economy maybe starting to weaken, or the animal spirits that we're seeing from all this deregulation? Will that keep us going?
Well, it certainly is true when you talk to business people that, coming into this year, they were very, very happy with where things were going. They expected deregulation to be really a boost for growth over the longer run, allowing them to innovate faster. There's no doubt about that. I still talk to business people, and what I'm hearing is they're very cautious about the tariff situation. And I think in your earlier segment, I think Steve Leisman said, business people just want to know where the goalposts are. They want to know the rules of the game. And right now, they don't feel they know it. And so they are pausing some of their longer-term projects. And that can weigh on the economy over the long run.
All right, thank you. And it's hard to talk over music, I know, but I don't know. I think it means something. I'm not sure what after 30 years, but I think it means something. But thank you, President.
Thanks.
Great to have you on dealing with that. We'll be right back.
Welcome back to Squawk Box. Take a look at the futures. We are looking at a Dow that's going to open down about 252 points, plummeting, we should say, hammered by a 12% drop in United Health shares as the Department of Justice apparently now bringing a civil case against that company. We're going to keep our eyes on that story all day long. Meantime, on the other end of news, maybe good in this instance, for the world of crypto, and particularly Coinbase, announcing this hour that the SEC has agreed to dismiss its enforcement case against that company. The SEC declined to comment when contacted by CNBC. And joining us right now with his reactions, Oppenheimer senior analyst Owen Lau. Good morning to you. What is the impact not just on Coinbase, but maybe the larger crypto world when it comes to this larger issue of staking?
Yeah. First of all, thank you, Andrew. Thank you for having me. I saw your interview with Brian Armstrong. I think that's a good one. So he mentioned about the $15 million legal lawsuit money. I think it's way more than just about money. There's a lot of chilling effect on the whole industry. Coinbase has to stop staking, just like you mentioned. I think it can open up the door for not just Coinbase, but other platforms to offer staking again, because it has been one of the more controversial services from the crypto industry.
Hey, Owen, for those who don't understand it or know it, can you just explain to the audience what staking is all about and what the controversy has been?
Yeah, so in simple terms, I think staking is like, to me, it's more like a CD or deposit. Like you stake or you put a token like Ethereum into a node, just like a bank. You use that staking mechanism to facilitate the transactions within the blockchain network. So you are providing some kind of services or goods to the network. In return, you get some kind of yield. So some people said it's like a CD, it's like a deposit, it's like a fixed income product, no matter how you want to frame it. But at the end of the day, you're providing the token to facilitate the operation of the network. So that's why you can get some return. So that's staking.
When you think about what this means, not just to Coinbase, but to the larger crypto world, how does it play out, and who are the winners, and maybe who are the losers?
Yeah, so I think the whole industry wins because first of all, it may signal this is the end of regulation by enforcement at large. More importantly, it also tells the world that U.S. is determined to set up the regulatory regime, because over the past 4 years, we are just pushing this project and capital to offshore, to other jurisdictions, and they take advantage of that and getting all this capital and project. And right now we are coming back. So to me, it benefits the whole industry. Other jurisdictions also follow the U.S. regime. So to me, I think it's good for the whole industry, not just for Coinbase.
Okay. Owen, want to thank you. Appreciate your quick perspective on this news. We're coming right back in just a moment.
Terms apply.
Final check on the markets. As you can see, that 257 points in large part of downward pressure wasn't there earlier, but United Health outlet, or the Wall Street Journal, reported the news of the Department of Justice probe into the Medicare Advantage program at United Health, and that stock at this point is down about, wow, it's down more than 50 now. We should really look at that, because it was 502, bidding 439. It's down 63 points now. So you just use the divisor and you can see why the Dow turned south so significantly after losing 450 points yesterday. Take a look at treasuries. We were talking to Loretta Mester. I think people still feel okay. Most Fed heads feel okay about the prospect that they all think it's ready to turn back down. I don't know. Finally, oil. Take a quick look. Oh yeah, we got 10 seconds. Got plenty of time, but we won't do it. Make sure you join us next week. I think we're in full force.
Full force.
With Becky. We'll be back. It's for now. Squawk on the Street. It's coming right up. Yep.
Good Friday morning. Welcome to Squawk in the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber live at the FII Priority Summit down in Miami. Futures are mixed. The Dow is set to get pinched on this report regarding UNH, which we will get to. Overall, S&P's trying to eke out a positive week. We'll get some PMIs and UMISH within the hour. Our roadmap begins with the DOJ investigating United Health's Medicare billing practices. Shares are tumbling pre-market and dragging the Dow down with it. Plus, call it Musk versus the Fed. The Doge chief saying he's considering auditing the central bank, and Coinbase rallying after saying the SEC is set to end its enforcement case. But let's get right to UNH. Shares are down on this journal story that the DOJ is investigating the company over their Medicare billing practices. Jim and Joe was just going through the math on what this does to the Dow futures.
Well, look, I'll go the math of what it does to United Health. This is going to be one of those long battles. The government may win, may not. Stocks down as if all the stocks are down as if this is the government really cracking down on them. I hate to say it, because I think that there are a lot of people who feel that the Medicare billing practices, if you're reading the article, are wrong. Carl, these companies are survivors, and you buy this stuff.
You buy it here.
Yeah. Oh yeah, you buy it because United Health is very powerful. I've often felt that United Health is every bit as powerful as the government, because they are strong, sprawling, and ready to fight, and the government has historically not been able to take on this group. They haven't been able to take on the middlemen either. Look, I mean, we have strong corporations in our country, and United Health is not going to have to. In the end, I'm telling you that I do not think this is going to be significant to their earnings. That's what I'm saying.
David, one question will be whether Jim's right from a legal standpoint or a political standpoint, given some of the winds that have shifted regarding some of these names.
Yeah, I mean, this is fascinating, and you know, obviously UNH and any number of the other insurers have been sort of in focus in part. Obviously, we all remember the tragic murder of United Healthcare's CEO not that long ago, but of course it did sort of increase the overall discussion around medical care in the country, what is covered and what isn't. It's important to point out here, there's sort of two different lines of criticism, so to speak. There was the great Wall Street Journal stories, right? Really good reporting from not that long ago, as you guys remember. Jim, I remember we were talking about it, where they were talking about essentially having these doctors diagnosed at far higher levels in terms of what the procedure might what paid back for by Medicare Advantage. That's different than the whole other argument about what they cover or don't cover and how they fail to cover what many believe are necessary medical procedures.
Yeah, look, I mean, again, I come back. Why do we have higher payments for Medicare Advantage? I mean, this stuff is so opaque. These companies have had a lot of scrutiny against them. You're going to need legislation. I don't think you're going to be able to do anything with the Justice Department. It's Civil Fraud Division, by the way.
Right.
You have the legislation, then there's an issue. But when you have these lawsuits, it tends not to bring about any sort of practice. Look, I'm not being cynical. I know that there are people out there just say, how can you not think that this is going to break up everything? Well, I mean, think about the history of the government winning against these big companies. They don't. And I am saying that down 12%, you buy United Health. And we'll have portfolio managers come on within the next 6 days. And there'll be a huge number of people who bought them. Because, well, it's been these long lawsuits. So I'm just saying, get ahead of it right now.
Are you willing to draw any broad brushstrokes about regulation or a new DOJ or the lack thereof?
I think that this DOJ is like other DOJs. They're just not powerful enough to take these companies on. They lose. In the same way, if you look at all the lawsuits, the opiate lawsuits, I mean, they ended up having to pay. But nobody got shut down. Nobody went to jail. No, this is civil. You know, David, I think that there are certain companies in the healthcare industry that continue to win and win and win, and the initial reaction tends to be an overreaction.
You very well may be correct here, Jim, although there is no shortage of frustration, I think, overall with our medical system in general, with the cost of so much care and with the fact that so much of it seems to be an issue with those who we're paying all this money to insure us against it. I mean, guys, you know, Bill Ackman has obviously gotten involved in this for some period of time. He tweeted today. Now, Bill has been talking about the other side of the argument, not what really is the focus of the DOJ investigation. I'll come back to it in a minute, but there's his latest tweet. He's coming back to this basic idea, Jim, that listen, when you do as United Healthcare has, which is attack your critics with such fervor, he says, you know, that he believes the guilt of a crime increases substantially. And he's referring at the end there to a doctor who posted a video sometime back. This was earlier January, in which he basically was called out of surgery to talk to United Healthcare about whether or not the patient was requiring inpatient care for a day and a dispute around that. She posted the video. Ackman linked to it. He commented about it, and then he got real enormous pushback from UNH. And then follow that up a couple of weeks later with a very long sort of missive about United Healthcare. But it's interesting what he's saying here, Jim, in terms of avoiding the stock. When you find two cockroaches, it's almost certain there are many more.
Well, again, legislation can do something. This idea of creating policy through the Justice Department has not worked. The Justice Department has routinely not been able to create changes. But Congress can, and that's what has to happen. And look, do I agree with that? I favor universal health care, so I'm way off the reservation. But I do think that if Congress gets involved, as they did with Obamacare, they had a shot. Right at the end, it was destroyed by the Republican Party. But that's what happens.
Let's bring in our Bertha Coombs this morning, talk about this story, Bertha, and then the CNBC story yesterday regarding UNH about potential buyouts for some employees and the consideration of some layoffs, too.
Let's talk about what's at the center of this, and it's what people essentially sort of call upcoding in the industry. Medicare Advantage plans get paid for treating patients and keeping them healthier. So the sicker the patient is, the higher the so-called risk adjustment. The higher risk adjustment, if all of a sudden someone has not just, for example, high blood pressure, but also a heart condition and potentially COPD, then there's a higher reimbursement rate. Now, the Office of Inspector General has found again and again that Medicare Advantage plans in general tend to do this upcoding. One report back during the Trump administration in 2019 said just in 1 year it was more than $6.7 billion. The most recent Inspector General report that came out last summer said it was $7.5 billion in upcoding for just 2023. United Health, obviously one of the biggest players when it comes to Medicare Advantage. They have more doctors, they have a lot of nurses as well, so they can do these reviews. But the Inspector General's office has also found that sometimes these reviews are done just from looking at charts. And 99% of the times when they look at charts, it results in a higher acuity.
Bertha, is there any bipartisan move to do anything here? We know that periodically Congress can get involved and really change things rather than having legislation done by the Justice Department. What are you hearing about Republicans agreeing with Democrats that maybe something has to be done?
They haven't looked at this case as much as they've looked at the issue of denials, and certainly they've looked at the pharmacy benefit units. We have seen about a dozen different legislative efforts to try to get at pharmacy benefit units. The problem is that it all comes down to these, budget deals. There was going to be one that was going to be included last December. It wasn't. We'll see if it gets included in the next one. It's difficult for Congress to get together and actually do something.
You're right. And there it is. Yeah, there it is.
You say it here, it comes out there.
Justice Department doesn't do it. It's people, look at what happened to Microsoft. Anytime Justice Department really gears up, it doesn't work.
Bertha, our thanks.
Doesn't
We'll talk a lot today, Bertha Coombs. Let's turn to the broader markets as well this morning. Investors continue to monitor the developments in Washington. Yesterday at CPAC, Elon Musk took the stage, as you know, to discuss who his Doge group might be going after next.
Are you thinking about auditing the Federal Reserve as well, which is obviously
yeah, sure.
Regulatory economy? I imagine you think the waste has got to be everywhere.
Yeah, no, waste is pretty much everywhere. People ask, like, how can you find waste in DC? I'm like, look, it's like being in a room, and this target, the wall, the roofs, and the floor are all targets. So it's like you're gonna close your eyes and go shoot in any direction. you can't miss.
Wearing sunglasses, he brandished that chainsaw gift from Miele. Today, the Times, Jim, has this piece, does Elon Musk still care about selling cars? Which quotes some institutional shareholders saying, we'd like a CEO who actually is interested in running our own business.
Oh, then sell the damn stock. Okay, so there's this piece in the Atlantic. This is what happens when the Doge guys take over. I want everyone to read this piece. Because what it is they come in and they get into your computer and they find out what's wrong. And it is devastating because they're going into companies and really they're going into agencies and just taking over. It's a great article. It's heavily sourced, and one of the things that is very clear about it is they're winning. They're winning. They're finding things, and they tend to be into agencies so far, which are, I think of as like the Consumer Financial Safety Board. They're in there heavily. They tend to be onto agencies that, frankly, many people would say Democrat agencies.
It's interesting, David. Certainly, the Times as well has looked at itemized savings, which they argue through their reporting is not as much as Doge is claiming.
Yeah, I think a lot of people are waiting for a little more transparency in terms of the numbers, although I know we are being presented with some of them. And then the other question, of course, is are you really in a position to actually make the decisions about what is waste or not in terms of the personnel behind it? Or are you, are they and do they have that expertise, guys, to actually choose the right people, so to speak, that should be removed from a particular government agency in order to reduce excess or reduce the waste? I don't know the answer there, but obviously this effort continues. It seemed to me he was kidding a bit about the Fed. I don't know. I didn't get the full context of that conversation.
Well, the Fed gets audited every year. It's hard to know what would be different about an outside audit, I guess. There's the added element, Jim, of people that have been fired and then rehired. Or they've had trouble finding the people to rehire once they've fired them.
This thing is done so ad hoc. There's almost no due process whatsoever. If you overwhelm the courts and just make it so that they have to constantly take up these matters, then Doge wins. That seems to be the pattern. They can overwhelm the court system with all these different, if they just keep going after agency after agency.
David, one interesting thing, there's a couple notes out today about Besant's 333, and specifically about getting the deficit down to 3% of GDP. B of A today says you could do it by getting nominal GDP to 10, inflationary. You could do it by raising tariffs to 30% from 2. That's going to be tough. So you really are left with Doge. There's a growing consensus that we need these savings.
Yeah, or obviously you can get at the part of the budget that is Medicare, Medicaid, Social Security, defense spending, which is potentially going to be decreased, and then overall reducing interest on the debt as a result. That's where the money is. In terms of where the money is, it's the same way everybody's here. because the PIF is where the money is, and you got to go where that is. Doge, obviously, it's not insignificant, the numbers themselves, but as a percentage of the overall budget, as we all know, it's much more those things I just mentioned. Listen, Jim asked the question about Musk, or it was asked, what about cars? What about so many other things? What about SpaceX, where he has great leadership in Gwynne Shotwell. At Tesla, obviously, there's leadership in place there as well, and sort of he parachutes in and certainly looks at certain key issues, it would seem. And then there's XAI and his efforts there as well. I mean, Musk comes up in almost every conversation, doesn't he? Including one I had yesterday with the CEO of Oracle, Safra Catz. It was an interesting conversation. Of course, we talked about Stargate, as you might imagine, the enormous plan to spend as much as $500 billion over quite a few years to build out the data centers to support AI, in part from, of course, or largely from OpenAI. But she also mentioned the balancing act that Oracle is currently engaged in terms of two important clients, both OpenAI, but also Elon Musk. Take a listen.
That Abilene site was initially offered to XAI, which we love, and Elon wanted it very quickly, and he wanted it like in November, which was just a couple of months. Now, it wasn't the physical buildings weren't finished yet, so there was no way. So Elon did, I would say, the next best thing is he bought or he rented an empty building. And I don't expect that he's going to keep doing it that way.
You don't?
No.
Why?
I think because you really ultimately want to have your power supplies more redundant and all of those things. But he did a lot of very clever things, including using their batteries to avoid spikes. And so, again, all very well thought out and met his needs, and we're thrilled. We work with them extensively still.
And that was certainly, guys, taken as a real positive by even investors in Oracle. Now, Abilene, of course, is where they're building the giant site to support OpenAI as part of Stargate. And we all know what Musk did, and as Safra was mentioning or referencing, in Memphis in terms of building an enormous data center in, what was it, Jensen Huang said 19 days? Nobody's ever seen anything like it. But interesting to note, and how given that the clash between these two men, if you're Oracle, you sort of want to cater to both if you can. It seems as though they're going to be able to do that.
Yeah, look, I think, by the way, it was a great interview, and to get Safra, I don't know if people realize how important she is. Oracle's now a tech titan out of nowhere. I think Business Insider had the best piece on Musk. We really liked it. And the second bullet of it is, everything from Tesla to XAI to SpaceX has seen valuations soar in recent months. So, again, the complainers, they really have to rethink their view. This guy's creating wealth. He's changing the government. Is he President Musk?
He addressed the American people from the Oval Office.
Who is the apprentice?
I always think you gave Jack Dorsey so much grief for splitting his time between two companies. You don't have a problem with this?
No. I don't think Dorsey. I did give him grief because it wasn't clear that he wasn't favoring one. This guy favors every. He's remarkable. I just don't want him to show up here.
Nobody does. And if you look at his poll numbers, I don't think anybody wants him around them either.
Yeah. What do you do when it says Elon Musk will mine too? What do you do?
We'll take a quick break here. A lot more from David in Miami, who's going to wrap up a remarkable week of coverage. We'll get to Booking, Live Nation, Rivian, Baba, Coin, TSM in a minute. some selling yesterday in some travel-related names, but today Booking and Live Nation are going to lead your S&P gainers. Booking beats on bookings. Guides a little bit light, but they do cite some currency impact. Citi raises the target, 10% div hike. We'll get to all of that. Kramer's Mad Dash and the opening bell in just about 9 minutes.
Good morning, retail traders. Okay, I'm back.
Let's get Kramer's Mad Dash as we count down to the opening bell.
Kind of shocker to say one of the greatest groups in this market has been the cruise lines. It's just become a remarkable comeback, and this is the long on money, short on time. Meaning, let's find the bargain and travel. We can talk about booking, same thing. These all got clocked. Why? Because Howard Lutnick, the new Commerce Secretary, said that President Trump might want to be able to get.
Oh, what?
Again, what I keep referring to is Congress passed it's codified section 883 of the tax code saying that their income is not taxable. So, you need to get Congress to check off. Now, Citi in this note does say, to make these changes, we believe President Trump would need to focus on the cruise industry. But implying that if the president does focus, then it gets rid of Congress. Now, look, maybe I'm outmoded. I have been focused on Congress because that's the way our country has since, I don't know, like Jefferson.
Triple top support at 60942
Congressional approval. I don't know how else you can do it.
on the SPY. If we hold that, we're still bullish. 60946, somewhere in that area. I'll get a precise number here. $609.42. Come on. And resistance to break will be the ascending triangle at 610.60 with a strong buy. McDonald MacDonald had a farm. Me-I-me-I-O. Make sure that everybody gives Yoko his attention today that he needs. Ain't that right, Yoko? Good morning to you, buddy. Woo! Just call me Dad, punk. I know you're nervous. Okay, I got to speak to the IRS. Always clean as Jim.
Okay, Jim. Sorry about that.
Yeah. Yeah.
Okay, so the break room water line is froze. Is that what I'm?
That's what you're hearing. Uh-oh, you're gone again. Yeah, I'm here.
Sorry about that.
That's all right.
My son hung up on you.
Oh, very good.
So the break room water line is froze.
Yeah, that's the first time that's ever happened.
Cold temperatures doesn't really shock me.
No.
Hold on, buddy. 1 second.
Okay.
Do this first. So were you able to check and see if the line had busted, if there's any leakage anywhere?
No, no leakage so far.
Anything at all? Okay.
No.
And then the bathroom, was it upstairs?
Upstairs.
Bathroom,
Yes.
the sinks,
Yep.
that is the one that was not working properly.
Correct. That needs to be fixed soon.
Okay, I'm gonna see if I can get a plumber over there, and I'll keep you posted. If I can, are you able to meet him over there?
Yeah, he can meet me over there. Let's have him call me.
Keep you posted.
Have him call me.
Thank you so much. Appreciate it.
Yeah. I think that's about it that I can think of.
They're calling me back. I'll call you back.
Okay. Bye-bye. And we're open. And, oh, my platform's not up. It is now, it's cold outside, but it's not no 0 degrees anymore.
Watch list ready. 8 a.m. Eastern.
So the SPX is at the 200 EMA right now. How's everybody feel today? I'm going to call, that's hard to say. I'm going to say right down in here is probably going to be support right around 60.98. $60.98.23. $60.98 right there. And the first one's going to be right about in here. Okay, SPY took a pretty good dive right here. What's the deal here? Oh yeah, that looks like we could have a little bounce right at open here. SPY, we'll move this over to SPY. 610. 610 strike. Quite a bit of calls coming in. Right at 113. Oh, that's today. Shit. Well, we can get away with it. First trade of the day. $112. Get ready. Okay. Jimmy's going to take a risk at 110. February the 21st. My bad. Strike at 610. At 110. This is kind of risky. The first trade of the day always is. This is what I call the beach trade. Got down to 108. I might put on my silky shirt. Roxanne. Ashley has a real nice phone voice. I kind of like her. She acts a little flirtatious. It don't take much to get me excited. We would appreciate it, a good little bounce right here. We got kind of a diamond shaped pattern. If it takes too long, I'm going to jump right out of this sucker. I don't think I want to add on. Uh-oh. No. God. Treasury Bassett. God. Well, here goes nothing. 92 cents. VWAP's right around 610. Do 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 do. IWM's coming to a pivot point. QQQ's definitely out of support right now. $536.66. SPX is at the first support that I called out at 661.0482, and the SPY can drop a little bit more, 608.40 if this doesn't hold here. I got an average of 101. Yeah, I played the lottos on the SPY. That was a bad mistake. We got to break the 9. I don't know if I want to get out even or just try to break it here. We're going to find out if this thing wants to run a little bit. It is Friday. Baba up a little bit pre-market. I mean, right now. And we have Carvana. Down a little bit. Tesla's down to 350. Target looks cheap. Probably in response to Walmart. And we have PayPal down 92 cents. Upstart's down. Snow down $1.43. What was that? Some guy on Twitter was pumping Rivian. I said, "Are you nuts?" And they've got a price target. Wells Fargo raised the price target to 14. Profit wasn't enough. It didn't have no profit. It had $6.5 billion given to it. Come on, break it. The longer it waits, the more hesitant I get on holding this. There's 100. There I'm winning now. I need a good little bounce here to get out. We're about to the VWAP. Come on, honey, call me back. It's now 5 degrees. Full coat. It's supposed to get Saturday. Okay. That's not what I wanted. Where are you, darling? Supposed to warm up starting tomorrow. I don't know if I should go ahead and add more and think we're going to go ahead and break out of this resistance. Or just get out. It failed its attempt. It took forever to break the VWAP yesterday. Yep. PMI, it's down from last time. The services, the composite, and then the manufacturing. So this don't look too good. We're about to the 200 again on the 1 hour. SPX hit the second support. So let me add here. The 6125s. The 380. AMD's up a couple dollars from yesterday. Now at 460. JP Morgan had a sell-off yesterday. Okay, I'm at my final support here. This has got to hold or we drop more. I got 608.43. 44, 43, somewhere in there. I need 79. So far we're holding my 6098.15. Oh God, there's a big drop. Somebody really knocked it down that time. Like somebody did somebody a favor. That don't make no sense. Oh, puts are looking good. $61.20s now. Shit. We're at the 200 and we dipped down below it this time. This is where we had that big bounce yesterday off the 200 on the 1 hour. $61.20s. On the SPY, SPX just gave me a gift. That was a big drop. Hey, market maker, how would you like to have a little money on the side? Finally going to get some warm temperature. It's been real cold down here for the last week or two. I have to do some magic. Come on, you bitch. Okay. First one at 320. So far, not a good day. Still in the SPY, and I got some SPX here. Yeah, I'm looking at BABA. This is really not good. What's the market at? I got some SPX to kind of cover it up. Hopefully I can make some money on it. I'm going to hold on to SPY. I'm down a little more than 500. Come on, go back up. I'm still in them, Randy. I'm just hoping here that we break this resistance at 608.44. Get back to the VWAP, and I'll probably be a little bit even, maybe a little less. Now I'm up good on the SPXs. The SPX has to break the 21 here. Come on, come on, come on, come on. I think the SPX needs to break the triple top right here at 61.71. And get to the 63, and the SPY has to break this 608.44. And I'm going to go make a coffee and be right back. If we can break the VWAP, it'll be a whole new game. But that's going to be your resistance. I'm thinking about selling these SPXs. I'm up 400 on them right now. Should have added a ton more when we were down there at the bottom on the SPY. That would have really done me good. I think it's going to be a brutal day for the bulls here if we don't do something soon. What's IWM doing? We've got to look at that IWM. It's almost a straight drop.
Fees and then higher tips because of the fees. I will say, just going back to the analyst community, almost 70% of analysts rate Domino's as a buy right now heading into the report. The median price target, though, is $500 a share. So that's only about 6% upside from current levels. So we'll have to see if analysts, see any more room to run following this report that happens Monday before the bell.
And look, people like when Buffett invests in something, I mean, that always brings some optimism, too. Caroline Wood's, great look there at Domino's Pizza, which over 1 year is up 11%. Thank you. Nice preview there for next week. We'll watch for that. And let's get a trade now. Dan Deming is here, managing partner, KKM Financial. Good morning to you, and you're watching Domino's. We're trying not to get hungry, and you're looking at the trade here because, look, it's been on an uptrend of late, right? Since somewhat of the new year. So tell me a little bit about your example trade here today.
Hey, Nicole. As you pointed out and Caroline pointed out, it is coming off the recent highs, and it's had 4 days of selling pressure after hitting, basically all-time highs just earlier this week. Giving up a little ground before the announcement on Monday. We're also seeing, again, I think some sentiment shift as far as the market's concerned, as we're seeing some pressure in the equity markets across the board. So it's not to be, it's not outside of what the price action as we're seeing in the general market. But looking at Domino's, I think, as we go into this earnings announcements, to me, it looks a little bit vulnerable here. But longer term, I think it's something that if we did see some selling pressure, it would be a name that would be, a name to pick up here. If there is some disappointment after the announcement. If there's not, then you still have the opportunity to collect some premium on this trade example. So what I'm looking at, Nicole, today is in March. So I'm looking about 28 days out past the announcement on Monday to sell a 440 put. You can do that for about $8 or a little bit more right here, where the stock's trading 465. So it gives you just under 2% return over the next 28 days, with the opportunity to get long the stock to down around 432, which again is a level that I think looks more compelling from a longer term perspective.
Right, understood. And so when you look at this trade here and you think about overall the group, is there anything more that comes to mind here? A lot of the analysts, she was just saying how so many of them do have a buy rating.
Well, yeah, exactly. And, you got some pretty big people or, portfolio managers that hold this name. And so that's something that, long term is another positive. Doesn't mean it's going to happen, the next month. But nonetheless, The one thing that is interesting that Jeff pointed out prior, I think that is a little bit of a hiccup right now. If you do see consumer sentiment continuing to languish, that could be a headwind for Domino, at least short term, as there's still uncertainty out there, and some people might not choose to use Uber Eats or however they get their pizza delivered these days if there's that uncertainty. So, I think that that's something that is why we're seeing the selling pressure here today and really over the last couple of sessions. But overall, I'm just a little cautious at these levels, Nicole. And the thing I do want to point out, though, when you look at Domino's options activity, there's not a lot out there, so not a lot of open interest. So, when it comes to looking at the options chains, just kind of identify the fact that there's not a lot of liquidity in these options on this name. So something to consider when you're looking at possible trading initiations.
And how are you feeling about the overall market? Are you a little cautious there? I mean, we are seeing the S&P hit records this week.
We are.
For the week down.
We're not getting confirmation from the other major indices right now, Nicole. So to me, that's a little bit of a cautionary type of scenario. If we did see the Nasdaq break up to new highs, that would something that give a little bit more confidence from a support mechanism and just the general foundation of this market. So I think that there's still this great deal of uncertainty. It could create some opportunity. It will create some opportunity. It's just a question of where the valuations are going to head before the idea is that the sentiment's going to shift significantly positive. And I think right now that just the uncertainty in the market is causing some of these headwinds, as why we're seeing these fits and starts, and just not getting confirmation from the other major indices is something that I think is going to keep this market somewhat in the range or possibly even a little bit lower over the next month.
Understood. A good point, right? You need to have some more market breadth or something wider to tell more of the story. Dan Deming, managing partner, KKM Financial. Great to see you, Dan. Thank you.
Thanks, Nicole.
Coming up, we'll take a look at a few.
We got a triple bottom on the IWM.
Financials have been certainly very much in favor. Our next guest is watching financials. Also, what about tech? Maybe tech's going through a midlife crisis, he says. Okay, so we gave you a little preview. Stick around. Morning Trade Live. We will be right back.
Hims is down $10, 16%. Hims had a huge sell-off here. FDA does not intend to take action against compounders for FTC violations depending on what? Semaglutide injection. Spies got me hurt. I'm going to get back in the SPX here real soon. You got a double bottom. Right about now.
Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah,
220.
like Schwab. I can get full-service wealth management, advice,
3 black
invest on my
crows.
own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. I'm Nicole Petalini We're live on the floor of the New York Stock
34.
Exchange, a busy Friday morning, and we're keying in on certain
136 calls already on the SPY. 136,000.
Portfolio here in 2025. Joining me right now,
We've
Dan
only been
Ryan,
open an hour.
Managing partner at Sinceris Advisory. Thank you so much for being here. I mean, the big picture, we're seeing a lot of selling. Pretty much every sector is in the red today, so a broad-based sell-off. Yep, and the utilities just turned red, so now all 11 sectors are red. But we have seen some...
All the sectors.
You have a few that you're bringing to us today. What is the big picture thought of the market?
So our big picture thought is really that this tech cycle that we've been on might be hitting a little bit of a midlife crisis. And I think I'm pretty qualified to speak on midlife crises. And so it's had its new toy, its new car of AI for some time now. And it's really gotten a pass on CapEx. And we saw maybe deep...
I went to Hawaii on my midlife crisis. I think it's the best move I ever made. It's something that I would have regretted if I didn't do it. Come on now. Damn it. We're at 195 on my SPX. What's in the green today? Jesus. Baba Baidu, China. Coins up 245. God. I don't know if I should be trading anymore today. I got to run an errand in a couple hours. Randy, I need the SPX to break to the upside. $605. Did you average in on the SPY? Yeah, I wouldn't do it no more. I sold a little bit on that last pump, but I'm still down on them. I just want to hold on just in case. As long as I don't get too far out of the money. Right now I'm only 3 notches out, but if I get down one more, I'll start to worry a lot. Right now I'm down almost 800. And then I made back some of it, but not enough. And I'm going to have to average in here on the SPX. I did that twice on the XPS when I traded it the first time, and I made 400 on it. Yeah, these SPYs, they're down 4 notches now. I don't think I'll recover. we broke past the first support, which was the double bottom. And that's where I added on. We had a little bounce up. The next one's going to be right down here, 606. $606.05. So in the SPX, I'm going to add a few more. $1.40. So I got 6 contracts of the SPX, and I've got 167 average. I'm about even right now. So if we break the 9, might have another $600 trade. But the SPY, I think I'm just going to end up writing it off. My accountant didn't get a hold of me. I took a few losses last year on my taxes, on my stocks, and I came out real green, but I want to see if they allow me to have a deduction on some of them losses. I don't know if it's a total, if you're red to take the deduction of $3,000 off, or if you have some red trades, or if it's just all in all. In fact, I might call him today. Okay, come on. I got to figure out what I'm going to do to SPY here. I mean, this trade's probably no good. Damn. It's not a good day. Let's see what's all green today. About ready to hit my 606.05. Break the 9 and run up to the 63. So Grab is up 6% today. Tiger, oh, that's that China stock. I should have thought about that one. I usually have good luck with that. Oh, yeah. That was a miss. An XPEV was another one. That would have been worth a swing. An FU to U. I used to joke around about that one, but I liked it. It's up, God, it's up $50 in less than a month. It's probably done. And the percentage, let me see what I got on a scan here. CELH. Big pop on that for earnings. Come on, SPX. SPY. I could buy me a bunch of contracts here and hope for the best at 25 cents. What would it be? 100 contracts. 2.5 plus 0.67 divided by 2. Well, it might be worth it. I'd have to have 46 cents out of them. That'd give me 100 contracts at 46 cents. If it ran up. $0.23 times 100. If I start to see a reversal, I might just add on these suckers. I'm still in denial that I'm going to take a loss on this. I'm about ready to have lunch, an early lunch, and then go do my errand. Probably wait until Monday to do my city license. When it's warmer. So I'd have to drive downtown or mail it in. Let me see. I should have mailed it in. I think I can mail it in. Enter license and subject line do not include payment. Do not include payment. Let's walk down. Okay. Talk. Well, there's my support on the SPY. We have another sell-off on the SPX. Ugh.
A potentially supportive area to consider as well. RSI a little bit more bullish. We saw very heavy volume during that deep-seek decline, but the ship has mostly been righted. The gap has been filled, but we're just not making a push back into this old territory to the upside. We are right in the thick of our nearest volume node, near about 138 or so. So this is another key level to hold. But as I said, 142 and 149 are some levels to the upside. To the downside, 134 and 130 really stand out.
All right, we'll keep these charts. We're going to have to revisit them all for next week when we look at these three names. Once again, great to see you both. Jenny Horn, Rick Ducat, a great preview of some of the key names that will report earnings next week. After the break, we will discuss the market thus far, all that has been, and a look ahead as well. Morning Trade Live. We'll be right back.
That was a major support level right there at 605, 606.05. Consumer staples is green. VIX popped to 1630.
Stock is up over past year. And Simo, who's also on the boards of OpenAI and Shopify, explained how she's diversifying Instacart and leveraging AI to grow.
By joining forces, you can win even faster. Like when we join forces with grocers, we give them technologies that would take them years and extreme capital commitments to 100. It gives them superpowers that they could.
Bar is at the 200, Rob.
Morning Trade Live. I'm Nicole Petalini. I'm so glad you're with us because we have a busy Friday here. We have expiration, we have lots of earnings, we've had economic news all week. And look, after some records, we're selling off now. Alex Coffey is with me, co-host of Next Gen Investing, and George Sillis, senior markets correspondent here on Schwab.
George.
So glad you're both here. George, I'll talk with you first and some of your thoughts, big picture, on what to watch for now. I mean, what are some key things on your mind after we did have some record closes?
Yeah, I mean, I think in the context of the markets, we made an attempt to break to new highs earlier this week. This was on Wednesday, and it seems to be a failed breakout, at least in the short run. I think, the context of policy is really what's going on here. I think if you consider 10-year yields right now, they're drifting to the downside. That's really a reflection, not necessarily of the inflation expectations, where based on the University of Michigan's print today was quite high. The context of the long-term rates, which are falling, is growth. I think there are growth concerns out there. There's a lot of retracement that's happening when it comes to fiscal spending. And you have to think about the nature of that fiscal spending. It's public sector spending ends up being private sector income. So I think that is creating a problem for potential economic growth. And then you add on some of those policy narratives outside of our country, including tariffs, which essentially create a consumer tax.
You're still bearish
on people in our nation. That is also creating lower consumer sentiment, and I think it's also becoming a little bit more of a drag on economic growth and the ability to consume. So, and that's really, I think, in the larger picture, what's happening here. Now, markets, of course, follow the economy, and if the economy starts to roll over just marginally, we could certainly see a reflection of that in profit growth. And I think that's what we're seeing, at least in the short term. But it doesn't necessarily mean we can't break to new highs in the very short term. We're just basically seeing a continuation of this year's volatility, which has been very high on an intraday basis, to say the least. And so far, at the very least, from a U.S. stock investor standpoint, it's been a difficult year.
Yep, understood. And look, folks are worried about inflation. They don't know how to interpret what tariffs may or may not come. You mentioned the 10-year bond yield slipping a little bit. We've gotten some of these U.S. activity prints just showing a little weakness. What are you watching for, Alex? Either what has been, but also, more importantly, spinning it forward. We do have NVIDIA next week and more economic data.
Yeah, the data today, I think, echoes George's sentiment, which is this is less of an inflation story, I think, that's rattling the markets, and more of a growth concern. So despite maybe what some of the sentiment surveys like the University of Michigan are suggesting, you wouldn't have a rally in bonds to the upside or yields lower if there were tremendous concerns around inflation, but you would if there was a feeling of a growth scare, particularly in the service sector, which is what the S&P Global PMI suggests there may be. George mentioned, I think the term he used was failed breakout that's taking place. I think what investors are looking for today is perhaps a failed breakdown. You need the S&Ps to show some signs of life here, have some buyers come in and get back above where they were at the low points yesterday, for that to kind of be in store for a short term. As far as going into next week, I think NVIDIA is going to dominate headlines as it has for 2 years. But PCE, I would be surprised if you have a large market move on that. I think, like I said, I think the inflation story is relatively understood.
Understood. Okay. Look, as you look to next week, George, what are some of your thoughts? I mean, Alex has made some good points about next week.
Well, obviously, the PCE number is going to be a big number, and I think all investors are looking for NVIDIA as a proxy for the market health because of the large market capitalization it constitutes in the overall indices. I think when it comes to that stock, it really comes down to not necessarily the reaction right after earnings, but how that stock ends up closing on the report. Because again, we may end up seeing sort of a draw-in based on some positive momentum early in the day. And if we start to see a sell on the good news, if NVIDIA does post really good news and raises guidance, and again, if institutions start selling into that news, I think that's going to be a little bit more of an ominous sign. But there's other things happening. Obviously, we have the Fed meeting coming up in March, but even also in the first week of March, we have the presidential address, the State of the Union address. So I think there's also going to be potentially some catalyst moving into that event as well. And that actually might be an event that traders buy into, and maybe a sell the news kind of effect after the fact. But again, I'm looking forward into at least early March, and I wouldn't be surprised if traders latch on to any good news right now. They seem very desperate to push this market higher, and that can come about from this weekend, which can come from good news. But again, we have to consider some of the uncertainty around policy making over the weekend as well.
Yeah, and look, you didn't really, if you're saying they're interested and they want to put money to work and they want to, we see buying the dips and things like that over the past couple of years, really. At the same time, we saw most of these Mag 7 names do pretty well on quarterly reports, but they didn't take off. On the contrary, they sold off. So, what kind of earnings do you need to have in order to really knock it out of the park and have a stock that moves higher? NVIDIA will certainly tell the story. And how about Walmart? Walmart had a good quarter, but a little bit of cautionary tone, and it's down 8% this week. I mean, that's a pretty big move. Final thoughts, Alex?
Yeah, I think in the case of NVIDIA, the story is slowing. It's still incredible growth, but we're coming from, 265% year-over-year revenue growth to what's expected at like 70%. And that's not to, dismiss the fact that this is still a company growing 70% on its revenue line, but that's a lot slower, and it's slowing down, and that's the trajectory. So does that change the desire for investors to chase after this name? Time will tell on that. When you look ahead, though, and you start talking about looking for places to put to work, the U.S. has been the only real place to invest for what seems like years now. But you have China perhaps coming back a little bit. You have areas like Europe and Canada maybe that are catching a little bit of a bid lately. If there's more places to go with capital, now I don't know that that's ultimately going to be the case, but if there's the feeling that there is, that can be the incremental buyer stepping away from the U.S. These dips might not be bought the same way they have been.
Right. Well, it's great to see you both. Thank you so much. I mean, we do have some big movers today. Names like Akamai, FedEx, UNH, some big movers to the downside. Booking, Hershey, Monster on the upside. Thank you both, George Sillis, Alex Coffey, and thank you, friends, for being with me. I'm Nicole Pedalides. I'll see you later. Thanks for being here on Morning Trade Live. Trading 360, Caroline Woods is next.
Yeah, I gave that to you there. Remember that?
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also,
what's a
because your Investor
1095A?
checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Oh, here's, whoa. Let me see what year this is.
Ameritrade is now
Yeah, I might have it here.
bringing you an elevated experience.
I don't know if this is the 10.
Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading.
It doesn't say, what was it called, a 1099?
Immersive online education, crafted just for traders.
Yeah, this doesn't say 1099 on it, but it has the
Morning
gross.
movers, be the first to find out what's shaping early market
No, that's
action.
my
Tech
monthly
check,
benefit
options
after.
corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
I know typically almost recommend honestly, if they have to bail them out by the 31st, they probably
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks?
I got it.
Our technical
I got it.
analysis webcast series breaks down
The
different
Form
market
SS
techniques,
1099
like
Social
trend
Security
analysis,
benefit
price patterns,
for 2024.
moving averages, oscillators,
Yeah, I
and
got
much
it.
more. Best of all,
You want me to-
you can
you just
ask
want me to make it-
questions
send you-
directly to an education coach. It's interactive
send you an
learning
email
at its
copy?
finest. Tune in live or on demand. Head on to schwab.com/coaching and start learning today.
Okay, I'm gonna be out. I guess I could drop it by. Could you send me an email and then I can just repeat it right back to you? Because I don't know if I got your email. Not sure I dropped that in on that to you, but no, I got it here.
Good morning, happy Friday. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Caroline Woods, filling in for Nicole Catalidis, live from the floor of the New York Stock Exchange. Coming up on today's show,
45
in our
grand.
360 Spotlight, we'll be joined by Noah Hammond, the founder and CEO of Advisor Shares, to tell us everything we need to know about its new HVAC and industrials ETF. Today's disruptor is Coinbase. After the SEC's decision to dismiss the
40,000.
lawsuit against the company, shares of Coinbase have actually turned negative this
Okay,
morning.
that'd be good enough.
In our 360 round, we'll talk all things Rivian after reporting earnings
Okay.
last night. Shares under pressure today.
Alrighty.
Before we get to all of that, let's take a quick look
I'll
at
drop
the
this.
markets because we are
You
looking
go ahead
to
and
close
email
out.
me
There's
something and
still
I'll try to
plenty
make a
time
copy
go
of
in
this
the
and send it
session,
back
but
to you.
stocks looking to close out the week on a
If I
downbeat
can't,
note.
I'll just run it
Vegas
off to
both
you.
Today and for the week, you can see here the Russell actually the worst performer today, down about 1.2%.
Okay, thank you very much.
Down off its earlier lows, but still down about
I'm glad I-
370
I'm glad I
points.
called.
United Health, of course, a big weight on the Dow. The Nasdaq off about a
Yes, sir.
0.5%.
Bye-bye.
Mag 7 mixed right now, and the S&P 500 off about 0.5%
Yuck.
as well. Still only about 1% and change away from the all-time highs. Only utilities and comm services higher right now in terms of, staples and financials. We've seen a little bit of a turn. Utilities and comm services have actually turned negative, but we'll see how this all plays out. Let's take a look at a few of the futures products here as well. We are looking at gold, crude oil, Bitcoin, lower, 10-year yield trading just below 4.5%. Meanwhile, the dollar is modestly higher. For a look at some top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on the Schwab Network and of course co-host of Next Gen Investing. Jenny, thanks so much for kicking off the show with me. United Health, of course, a big loser today and a big weight on the Dow. Walk us through this DOJ probe. What are you hearing here?
So, according to this Wall Street Journal report, which first broke news of the Justice Department reportedly launching this civil fraud investigation into United Health. I mean, the report just it gets worse the more you read it, frankly. I mean, the probe began in recent months and will be examining now United Health's Medicare Advantage plans and physician groups following reports that the company received billions in federal payments for questionable diagnoses. So the insurance giants already under scrutiny. We saw back in January, actually, the FTC released a second interim staff report detailing the significant price markups on specialty generic drugs by their pharmacy benefit management unit, along with CVS's CVS Caremark, Cigna's Express Scripts. So just the latest string and like public distrust, I think, regarding a lot of these companies exposed to Medicare, Medicaid, and even just various prescription drug pricing. So the Wall Street...
I found out I got to pay about 40 grand in my receipts for my stocks this year.
Patients' records, some
$40,000.
unneeded. So the Wall Street Journal's analysis of this data from 2019 through 2021 found that these United Health employed doctors significantly increased actually the number of lucrative diagnoses for patients under these Medicare Advantage plans. Additionally, some of these diagnoses were without physician treatment, including these in-home nurse visits, which led to an extra $8.7 billion in federal payments in 2021. So they would run on average about $2,700 in additional government reimbursements per in-home nurse visit, which is just astronomical, frankly. So the report also did say they've defended their billing practices within the Medicare unit, and they also have argued that this could lead to more accurate diagnosis. I think that this is trouble, especially United Health has had a public image perception issue for quite some time. Not to say that they actually were accused of wrongdoing, we will let the courts decide that, but I think today's price move and not near 9% deceleration in just one single session shows that not only is there some credibility to this, but the street also seems to be concerned as well.
Certainly the case, with shares down about 9% right now. Worst performer on the Dow today by far, and one of the worst on the S&P. Akamai actually helping United Health out there, not necessarily the worst on the S&P 500. It seems to be dragging some other names with it. Humana is down more than 4%. CVS Health is down about 1.5% today. Cigna's actually turned positive, so a little bit of fallout in terms of the overall healthcare space as well. Jenny Horn, markets correspondent, thanks so much for breaking that down for us.
Thanks, Caroline.
We'll see how that report plays out. Let's get some insights on the news that's shaping the markets. For that, we welcome in Miguel Souza, Head of Market Research Strategy at Blue Rock. Miguel, thanks so much for joining the show.
Thank you very much for having me.
So I know you specialize in alternative investments, but I do want to just get your take on the overall stock market right now. Pretty close to all-time highs, but ending the week on what looks like a downbeat note, negative on the day right now, negative on the week. What's your view on this market, given how far it's run and how much of trouble it's had really kind of finding that next leg higher?
Yeah, sure. So stock markets, always hard to predict, right? Fundamental factors can certainly benefit and provide tailwinds for stock markets. There's always this overhang, and there were questions about the change in administration and tariffs and higher inflation, but the market just seems to perform as it wishes. So tough to say, but we think that the fundamental backdrop ultimately is what's important here, and we see that the jobs reports and other economic news that's on the calendar continues to support the case for moderate economic growth.
Okay. All right. And speaking of economic data, I should note that we did get a pretty disappointing consumer sentiment report out of the University of Michigan. That fell to 64.7 in January, a decline of 10%, so much steeper than expected.
Well, I got to run to my accountant.
Consumers are worried about inflation. And when you take a look at the 10-year yield, it's trading below 4.5%. It's been sort of stuck in a range. But what does that imply to you about inflation and the Fed's next moves?
Sure. So as you mentioned, the interest rate, the 10-year, has been hovering around that 4.5 zone for a while. To your point, there are concerns about inflation. If you look at, however, the break-even inflation rates, that's a different story. So the break-even rate takes that 4.5-year nominal rate.
On my SPX that I have,
inflation-adjusted equivalent bond. So in other words, the 10-year.
I'm not feeling real good, but I'm not feeling real bad.
Inflation-protected security leaves you with a market.
We need to break the 63, right around 60, 85, 28. If we can do that, on the rebound. I think I can get it up to the 200. Then I'll be pretty green on it. That's just, right now things ain't looking too good. 60, 85, 31. Well, it didn't scan it. So, to the web or to the PC? So I'll do it to the PC. File or to image. Scan using the settings from the PC. Start. I got to run my Social Security documentation to my IRS. To my accountant. While I do that, I'm going to go pick up my suit. So I'm going to do that before I have lunch, before traffic gets heavy. And I'll probably be back.
If the 10-year sticks to its 4.5% range, then likely 30-year mortgages tend to be linked to that, and they may also remain in that space.
Still holding my support on the SPY.
I think it will be a modest.
If we go below that 606.05, then we're in a lot more trouble.
Space.
Okay, so talk to me about where you're actually seeing opportunities.
Sure. So specifically for real estate, we're seeing more opportunities in specialty sectors. So if you think of not necessarily housing or not necessarily the four core sectors, we're seeing opportunities in data centers, in single-family rentals, actually. Those present unique opportunities because of the limited supply relative to the demand for that space. So as an example, data centers, we're all consuming more data. This drive for AI is only accelerating that data consumption. And so those centers where all that algorithmic power is being processed is driving demand for data centers. Similarly, because housing costs are so high, or purchasing costs are so high, single-family rentals are seeing significant demand as well, because individuals or families would like to be in a home, they can't afford a home, and so they seek out a rental for a home.
Yeah, bad news for
Thanks,
those of us
Christopher.
renters probably means rents are going to stay high. We have to leave it there. We appreciate your picks and your insights. Miguel Sosa, Head of Market Research and Strategy at Blue Rock, thank you so much for being here. Plenty more to come on Trading 360. Next up, it's the big three stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals, and Joel Hawthorne will take us through the trades for Meta, Apple, and Coinbase. That's next on Trading 360 on Schwab Network. We'll be right back.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get
Break it.
wealth management, advice, invest on my own, and trade on Thinkorswim.
Now, I got the SPX is 6120.
Take this, Carl. It's Schwab.
And we're at 140.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. I'm Caroline Woods in for Nicole Petalides. It's time for the big three: 3 stocks, 3 charts, 3 trades. Rick Ducat is here to walk us through the charts, and here to take us through the trades is Joel Hawthorne, head of equity research, Retail Trader Magazine. Rick and Joel, great to have you both here. Joel, before we get to your actual trades, want to get your thoughts on this market. We're seeing some red arrows once again, but still pretty close to the all-time highs for the S&P.
Thanks for having me, Caroline. I really appreciate it. Always great to see you and Rick. You know, today is the monthly option expiration. So I do think with so much short-dated option volume, along with the fact that, you know, this is the monthly expiration for Feb, just the second month of the new year, I think today is unique in itself. I think we'll see more, if you would, headlines. The market has been somewhat driven by headlines for a few weeks here as we rolled into the new year. But I also think overall, the market is, you know, we've touched quite a few highs. And as we begin to see some lower price action, it can be cause for concern, but I'm not too worried at this point.
Okay, so not too worried. So you ultimately look at this as a market that can continue to power higher?
I do. I absolutely do. I think there's a lot of optimism in the market. I think there's a lot of strong companies out there that are still have room and legs to go higher. I think a lot of investors that are looking into this year with their optimism are going to see pullbacks, days like this, where there is a little weaker price action as buying the dip opportunities. And that's what I'm looking to do today.
Okay, all right. Well, speaking of buying the dip, this first trade hasn't provided all that much opportunity to do so, and that's Meta. It was on that tear, such an impressive winning streak, but it is down almost 6% this week, only down modestly today. Are you taking advantage of that 6% pullback and buying the dip? Because I know you're bullish on Meta.
I am. I'm looking at Meta, and I'm looking at this, and I'm saying, currently right now, we've hit a high this year of about 740 and change, currently trading about 694. I do believe, as we look at these at a name like Meta, I do believe that there's more room to the upside. Yes, I want to buy some here, but I would love to see us break down a little bit lower, maybe even going down to some lows near around 672-ish or so. If we can get lower to about 672 or so, that's probably the sweet spot for me, and that's where I want to load up.
All right, 672. So Rick,
I'll be out of here. I'll be right.
What stands out to you?
It'll be a little bit, not long.
Eye on a level that was pretty close. I highlighted 675, and the reason I did was it was these two lows that we had during our most recent rally to the upside here. So that kind of very short-term double bottom type price activity stood out to me. We're at another point that caught my eye, our yellow 21-day exponential moving average, which comes in just above 692. So this could be another crucial point to hold as we head into the conclusion of this trading week. Here are those high highs near 741. That's where we topped out and then had a bit of a rug pull there. But for now, we're still hanging on at our nearest of our major moving averages, our yellow 21 EMA. So if we are able to hang on and right the ship here, the next spot to watch would be those old highs. So if we were to be looking more for other downside areas of interest, we topped out right around here twice near 630. That's our light green.
Might do another errand. I might be gone longer than I thought. About less than
here. We are still
45 minutes.
50 midline. We are still above our
VIX pulled down a little bit here.
But a noticeable hit has been taken here for this momentum indicator. Now, if we were to look at standard deviation channels and volume profile, we can see that there is a bit of a node here at these elevated levels near 710 or so, but really the volume doesn't pick up significantly till all the way down here near 581 or so. So that would be another area to consider here as we move forward toward the end of the day.
Okay, all right. Joe, let's go to your next trade, and that's Apple. It's actually the only Mag 7 name in the green right now, holding on to some modest gains, only up about 0.4%, but it's a winner on the week as well. Actually, I just say that, and now Netflix isn't Mag 7, but Meta also is basically just at the flat line. But Apple is the best performer of the Mag 7 today, and up about 1% on the week. Tell us why you're bullish there.
You know, I think Apple right now, some of the optimism around some of the names, I think Apple's just such a strong company, plenty of cash on the books. There is somewhat of some optimism, but what we've heard about chips, what we've heard about some of the more popular names out there, Apple, to me, quite frankly, has taken a bit of a back seat. And I think this is one of those companies where if there is going to be any apprehension or some cautionary tales, I think a lot of long-term investors want to park their money in names that they trust. We know their products are first class. And this is a name that right now, that as we roll into the new year and get close to wrapping up the first quarter, this is a name I feel like there's definitely an opportunity to park some cash here for the long haul.
Okay, so Apple shares actually still negative year to date, down about 1%. Are you looking for more of a pullback before you park some money there?
Absolutely. I would love to see more of a pullback. That negative lets me know that if the year goes as planned, and I think the key word here for me is that optimism, then yeah, I would love to buy some shares near that 233. That's another sweet spot for me. Anything around 230, I want to load up there and really just let that cash work for itself.
Okay, so Rick, what do you see on the chart for Apple, and where does 233 fall into it?
Push to the upside, but we haven't really cleared that key area yet near 247. If we were to backtrack a little bit and find that area near the 230s, that's kind of this area right here. That's a similar area that I had my eye on between like 238 or so, or excuse me, 235 to 239. We've got a couple sources of old resistance here. You can backtrack a little bit and see we had a high point here, and then another high point there that price struggled to close above. So a bit of a zone there, kind of a broader general range that lines up fairly closely with what Joel mentioned here. But today, notice that we had a high point here, another high point there, and now that's about where we're at here near 247 or so. So this would be a really interesting area for price to clear with some strength. That could be a good sign of potential trend continuation to the upside after a period of rather sideways movement. Despite this big push to the upside to 260, we haven't really gained a lot of net ground since all the way back here where we started our boundary to the upside there. Notice though that RSI has improved. We broke above our trend line and broke above the 50 midline now. So as we were to look at some more horizontal levels to consider, price held the line near the volume profile point of control, this area of heaviest trading near about 225. Now it's looking like perhaps we're even clearing this other much smaller node near roughly 245. So if we were to keep going to the upside, yearly linear regression line, our line of best fit, comes in at 253.55 or so. And then to the downside, we've got our zone here that I mentioned, 235 to 239 roughly.
All right, interesting that 253.55. I was just taking a look at the median price target for Apple, 254, so very close to that level you were talking about. Joel, just quickly, sticking with Apple, does the 16E, that $600 cheaper phone, make you more bullish or less bullish on Apple?
Quite frankly, I think more. I think the smaller price points going into the new year here, who knows, by the time we hit the holiday season, I mean, it's a no-brainer. People are definitely going to be wanting to renew their devices. We all have been there where a new product comes out, we start to look at our old devices and say, yeah, I could definitely need something new. And I think it's just a no-brainer with some extra cash laying around. It kind of lessens the guilt when you buy stuff like that. So I'm a bull for that.
Okay, all right. Next up, your final trade is Coinbase, Joel. It's actually under pressure right now, only down about 0.2% after the SEC agreed to drop its enforcement action against the company. A little bit of a surprise that we're not seeing shares higher on the news. But anyway, you're bullish on Coinbase. Tell us why.
Yeah, pre-market, this stock was almost 5%, I want to say, give or take. But it's not, my bullish sentiment isn't so much just about the headlines today about dropping the case. More so about, I think we live in a unique time right now. I think, right now, there was that the risk on just mindset right now for the everyday investor is even more normalized than we've ever seen before. And I think companies like Coinbase and so many other brokerages are going to benefit directly from that. I think there was a bit of, just a few years ago, a lot of taboo about, where to trade, how to use your phone to trade. But they're getting into some of the binary contracts, event contracts and things of that nature, along with the fact that just normalizing wanting to be in the market. And I think Coinbase is going to directly benefit from that. So long term, I think there's some optimism there, and I'm definitely bullish for that.
Okay, so tell us where you want to buy Coinbase, because it has had this pretty impressive run, but it's well off the highs.
Yeah, I think I would love to see near 240. Right now, trading about 255 and change. I think 240 or below would be definitely an opportunity where I feel like there would be some bit of reversion, and that's where I would think to want to get in that right around that price level.
Okay, great. Rick, what stands out to you for the Coinbase chart?
Yeah, so this is a chart that is having a bit of a breakdown, kind of in a dangerous area here. We can see that we had this trend line that began with this low point shortly after the earnings event that we saw in October, connecting these lows and these lows here. But notice that we're starting to break below it. We've also got this downward sloping trend line still in place, starting with those 52-week highs. And we are breaking through the trend line roughly at the same time we're breaking below our moving averages, both our yellow 21-day and orange 63-day. So not a good development here for the bulls, at least in the short term. RSI also had a bit of a breakdown, pushing below our trend line and our 50 midline here, so a shift toward the more bearish side of the spectrum here for this momentum indicator. Notice as well that we saw heavy volume during this earnings event and then the subsequent decline here, so a sign that there was some heavy activity during this move here. If we were to look at the areas of important trading activity, we are within one of our nodes here near about 260. Not really any super clear nodes until we get down to 224, which would be our volume profile point of control. That's also lines up with an old high and a low, and our -1 standard deviation channel, and our 252-day exponential moving average in purple. So that area 220 to 225 sticks out as a point of interest. To the upside, we've got the confluence of our moving averages and our old trend line near like 274, 275, around that area. And then up here, our +1 standard deviation channel and our heavy volume area near about 310.
Okay, all right. Rick Ducat, Joel Hawthorne, head of equity research, Retail Trader Magazine. Thank you both so much for the trades and the charts. Coming up next, we're going to spotlight Advisor Shares' new HVAC and industrial ETF. We'll welcome the founder and CEO of Advisor Shares to share what we need to know. Trading 360 will be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Welcome back to Trading 360. I'm Caroline Woods, live from the floor of the New York Stock Exchange. It's time to spotlight AdvisorShares' new HVAC and industrial ETF. Joining us now is Noah Hammond, founder and CEO of AdvisorShares. Noah, thanks so much for joining the show.
Thanks for having me.
All right, so before we talk about HVAC, I want to get your thoughts on really the state of thematic investing. Might not be what you want to hear, but we don't really talk about it all that much anymore unless the theme is AI.
That's true. AI chips have been the most popular themes for a while, but for us, we still feel like it's a place where investors can find some returns, right? If you're passive and investing in the index, you're not too concerned about it. Picking individual stocks, of course, can be challenging, just picking the one right one. But if you want to diversify to protect assets, but you want to concentrate to grow your wealth, and themes are the way that you can do that without picking a single stock. And so we like it. You've had Dan Aarons on, our portfolio manager, talking about beds, which is obviously focused in the hotel industry, and Eats focused in the restaurant industry. So we think these are great tools for investors to add value in their portfolio.
Okay, so you debuted an industrial and HVAC ETF, ticker symbol HVAC, earlier this month. In the early days, it's far outperforming the broader market. So fill us in on this one.
Absolutely. So this is an example of looking at it from a thematic basis. If you look at industrials compared to the S&P 500 over the last 1, 3, and 5 years, it's underperformed. Now, the S&P 500, of course, has been heavily dominated by tech names, of course, NVIDIA, Microsoft, Apple, all of those things. But when you start to look at things from a thematic level, we discovered, and we actually saw this basket on Zacks of all places that had this index that was tracking HVAC companies. And what you found was over the last 1, 3, and 5 years, it significantly outperformed the S&P 500 by 15% over this last year, by almost 100% over the last 3 years. And so as we studied that, looked at the companies, that's really what generated the idea around coming up with this HVAC ETF being a theme that we think, based on what's going on in the marketplace today, will continue to grow and possibly continue to exceed the performance of the broader market.
So tell me, what specific companies does HVAC invest in? What are the biggest holdings?
So our top holdings are names that you're probably familiar with. Things like Trane, the ticker is TT on that, or Lennox, LI, and then a Comfort Systems, which does parts and pieces and installations. They have a good ticker symbol with the ticker symbol FIX. So those are some names that are in the portfolio, and they're ways to capture a lot of different things that are going on, right? You've got a growing middle class globally, so they are investing and buying the creature comforts of things like heating and air conditioning. You mentioned AI, and again, think about sort of the picks and shovels of AI. You need big data centers, you need big energy, you need a lot of cooling. So whether it's data centers, cloud, crypto, cloud-based applications like Salesforce, that environment is growing, and HVAC sits in the middle of that.
You know, it's interesting that you say that, because when I first looked at the topic for this segment, I thought, okay, so this is just another way to play AI, because these big data centers need to be built out and they need to be cooled. So is that where you think the popularity really lies?
I think it's in both. You know, what you don't have quite access to in this ETF is think about your local HVAC service dealer, right? These are businesses that have been slowly being aggregated by private equity. They're steady businesses, growing businesses, heavy cash flows, and at some point, many of these companies may flip to be, you know, accessible via public markets. But I would not sleep on the growth of that, not only within the United States, where you've got an aging infrastructure, we're used to having maybe more of those creature comforts, and so we're upgrading and getting nicer systems or more efficient systems, but across the planet, so many people are getting access to this now, so that's why it's a global strategy. So a lot of the growth will come from those areas, but certainly where you aggregate this need in big data centers, that plays into it as well, and it just gives us more reasons to like this sector or this theme going forward.
How much of this do you think is also just a value play?
Good question. Yeah, I think value or heavy cash flow play, I think there's a lot of that in there. And it's just a function of, you know, how will that continue to grow? But when you look at the environment, and again, being able to touch all different things from consumer to technology, it feels like this is one of those things that will continue. And there'll be other areas like that. You need energy to go along with that, along with the HVAC and the parts and the pieces that go along with it. But, you know, whether you call it value or cash flow driven, it seems to be a significant return stream we believe will be persistent for a long time.
We've seen this dispersion in terms of how the market is performing versus the Mag 7 this year. It seems like this broader rotation out of so many of those popular names that we talked about so much last year and into other more unloved sectors, or some that have been loved, but loved a little bit more than the Mag 7 right now. Do you think that the interest that you've seen so far, still early days in HVAC, but is just indicative of an investor that wants to continue to broaden their reach in terms of their portfolios?
I hope that that's the answer, right? That's what we saw with beds and eats. Those two strategies over the last 3 years have kept up with the S&P 500, which again, as you point out, and I agree, S&P being driven by those Mag 7 names. So to have two categories like that probably are benefiting coming off of COVID as well, right? With the whole planet shutting down. But to have a category like that you would think is, again, a bit more of a value category, keep up with the broader market that includes the Mag 7 is impressive. So I hope, though I would tell you flows-wise, people still seemingly are heavily concentrated in those Mag 7s, but slowly starting to look at alternative areas to find some returns. So the returns are there. Hopefully over time the assets and the shareholders will show up as well.
Okay, interesting insights about the flows too, and I know we had a discussion yesterday with Caleb Silver that the retail investors still are very heavy on the Mag 7. So Noah Hannon, founder and CEO of Divisor Shares, really appreciate you shedding light on HVAC and some of the market information that you're seeing. Thanks so much. Coming up next, the disruptors. George Sillis joins us to discuss the latest on Coinbase. The SEC dropped its lawsuit against the crypto exchange today. What does that mean for the stock and the world of crypto? That's next.
to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Welcome back to Trading 360. I'm Caroline Woods, in for Nicole Petalides, live from the New York Stock Exchange. For a look at developing stories this morning, I'd like to bring in Diane King Hall, host of Money Movers on the network. Diane joins me at the desk. Thanks so much for joining me, Diane. So you have your eyes on a big mover to the downside this morning, and that's Hims and Hers.
I know.
Shares are down more than 20% right now. What's going on?
And it's had some big swings this week. I mean, initially that was to the upside, but today that pressure coming from news from the FDA about Novo Nordisk, the semaglutide shortage. It says that that has been resolved as it relates to Novo Nordisk. So the reason why you're seeing this pressure on Hims and Hers is Hims and Hers had been offering a compounded version of the GLP-1s that we've come to know these weight loss drugs under. And we know because of the shortage that had been around, that had been affecting these drug makers, whether we're talking about Novo Nordisk or prior to this Eli Lilly, you had had these compounding pharmacies being able to offer a version of this to meet the issue with regard to supply. But now the FDA is saying that the shortage doesn't exist anymore, that in other words, Novo Nordisk can either meet or exceed the demand requirements for the drugs or for the factor that's used in making this, the semaglutide, whether we're talking about Wegovy or Ozempic. It is leading to shares of Novo Nordisk higher, but it's causing major pressure on Hims and Hers because you recall last year Hims and Hers came to market with one of the compounds of the GLP-1s, and that had led to quite the move in its shares. I mean, on a year-over-year basis, that stock is up more than 400%. Obviously, this is a meaningful move to the downside today. It's coming under heavy pressure today. Now, the Food and Drug Administration has said that it does not intend to take action against compounders for FD&C Act violations, depending on semaglutide injection inclusion on drug shortage list. So it's a little bit unclear how much of it impact, but it looks like right now, in terms of investor response, it's we'll sell and ask questions later.
Yeah, I do think perspective is key, though. You talked about the wild swings. So shares down more than 20% right now, but shares are still up, what, 41% this month?
Yes.
120% so far this year.
Yeah.
Up 460% over the past 1 year. So I think that it seems like, the big question is how much of that bullishness is tied to the loopholes that allow it to sell the same drug if there's a shortage, and what happens if there's not?
I think it's part of that, partly because, look, they've been expanding, so we had the news this week about their expansion into the blood work testing, so that gives it another revenue stream for the company, and that is what you saw with regard to shares moving higher and taking that significant move higher. So, where it may be taking a leg down, or this opportunity for Novo Nordisk is a headwind for Hims and Hers. It has expanded its telehealth options, and we know that consumers have been looking and leaning more into the telehealth, so that benefits Hims and Hers. So this is significant. Obviously, you can't underestimate this big move that we're seeing down about 20% or so today. Getting hit, but again, they have diversified recently.
Okay, all right. Well, we'll keep an eye on it.
Indeed.
Thanks for shedding some light on that news, Diane King Hall. Thanks so much. All right, it's time now for the disruptors. George Sillis, senior markets correspondent, is here with today's company, which is Coinbase, which was rising but now is falling after the SEC dropped its enforcement action against the company. George, fill us in on this story here, because it was as much as 5% higher earlier this morning, and now it's actually lower despite this news.
Yeah, I mean, despite the news, there's reasons why it's lower. I think it's obviously falling in sympathy with the market, but this has been an ongoing litigation issue between Coinbase and the SEC, and it really comes down to something very simple. It's the declaration or essentially definition of crypto. Is it defined as a security or is it defined more in the commodity space? And so this was the dispute that goes back to 2023. This is an ongoing litigation issue that seems to have been resolved based on the decision the SEC made to basically drop their litigation against Coinbase. But I can see the problem because, crypto you can't really define crypto perhaps as a security because it's not a cash producing asset. But again, could you define it as a commodity? And so I guess these are questions that wouldn't be answered through, again, a case being pursued by the SEC. So initially that was a positive reaction to Coinbase, but I think obviously the stock is moving back to the downside and simply the market. But if you just look at the last year for the business, they had a banner year. Over the last 52 weeks, the stock is higher by close to 60%. The company reported some pretty good earnings when they came out on the 13th of the month and posted sales and EPS growth. I think the other thing to keep in mind with Coinbase is if you look at it, it seems to have peaked going back to early December of last year, whereas crypto, at least Bitcoin, is a dominant player in the crypto space. Looks like it peaked around the 20th of January, right around the inauguration of the president. So Coinbase seems to be now moving, a little bit further in terms of time. In other words, it's starting to move to the downside relative to Bitcoin. And I think that comes down to now. Absent this litigation, the company is still going to make its money from, its brokerage services, its custodial services, and of course, collateralized lending services. But at the same time, this whole litigation issue would have increased some of the costs of their business, but it wouldn't have really affected anything when it comes down to their top line sales. So therefore, I think the market took this news initially as good, obviously, but the cost of that litigation probably wasn't going to be anywhere close to what was previously anticipated.
Okay. All right. So given that, and Rick was on earlier talking about the chart and talking about some of the breakdown that he's seeing in the chart. I'm curious about your example trade for Coinbase.
Yeah. So when looking at the chart, it's important because, like I said, Coinbase actually peaked in early December, right? About a month and a half before Bitcoin did. So that suggests perhaps maybe there's something else going on. If you do look just quickly here at 2026 revenue estimates versus 2025, the fiscal year that we're in right now, they're expecting actually sales to go down by 300 million. These are again based on estimates. So with that said, right now the stock is down, at least in the last couple of weeks. I'm not going to be aggressively bearish on the stock. It certainly could continue the downside along with the market. What I'm going to do is I'm going to structure a bear call vertical in essence and have flexibility just in case the stock does move back to the upside. So I'm going to go out to March monthlies with 28 days expiration. I'm going to sell the 280 call that's above the current price. And then above that, what I'm going to do is I'm going to buy the 290 call to offset the risks. And so you can sell this for about $2.25 a share in credit or $225 a contract. So the whole objective here is if the stock goes down, that's fine. If the stock does nothing in the next 28 days, that's fine too. But we can also have the stock move higher by about a little over 10%, and you'd still effectively, as long as the stock stays below the 280 area, that premium will erode to zero. That's the whole objective of this trade, is to sell that high premium and allow time value and the price action to essentially decay that premium to zero. So it gives us a lot of flexibility. If the stock goes down, that's great, like I said, but it can also go higher by about 10%, and you can still potentially achieve max profit on this trade.
Okay, so shares down a little more than 3% right now. George Sillis, thank you for that example trade and for the breakdown. Really appreciate it. Coming up next, it's time for our 360 round. We're going to look at Rivian after its earnings report. The EV company shares are falling after announcing a recall on some models and offering a disappointing sales forecast. Stay with us. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round, and we're looking at Rivian's fourth quarter earnings and outlook. For that, let's bring in our panel. Carl Brower is executive analyst at icars.com. Mish Schneider is chief strategist at marketgauge.com. Carl, Mish, thanks so much for joining us. Mish, let's start with you because this was a beat when it comes to Q4 expectations. The Rivian achieved its first gross quarterly profit, but forecasting lower sales in 2025. So what is it that stands out to you in terms of these numbers?
Well, what really stands out to me is, first of all, they have a lot of capital right now. They have $10 billion between what they've gotten from the government and what they've gotten from the VW Corporation. So they have cash, which is a great thing. That's number one. That's been the backdrop. Number two is they're making a lot of changes. Their commercial vans, for example, where they had a deal with Amazon, is now being offered to all who need kind of electric vans for moving. Their price range is somewhat between $75,000 and $85,000 for those things. And that deal initially announced with Amazon was a positive. They're coming out with a California Dune version for off-roading. They're making cheaper models, offering around $45,000 in their R2 model that's coming out. So they're very, very active in terms of keeping up with the market. That's from the actual statistics side. In terms of their earnings, I mean, it was good that they had a gross margin positive. Obviously, they still need to be making a operating margin positive. That hasn't happened yet. But I think this is a company that has a lot of future, and right now it's kind of number 2 in terms of EV sales in the country, and it is made in the country, another plus.
Okay, so Carl, when you take a look at the earnings and you see the stock reaction today, down about 3.5%, following this news, what is it that you think is weighing on shares? What are investors most unhappy about?
Well, I think the Q4 numbers for all the electric vehicle companies really need to be carefully considered because there's this looming likelihood that we're going to see the $7,500 federal incentive go away. And I think there's an awareness of that within the electric car buying community. And I think there's some sales that were pulled forward from that plan. And I've seen this industry long enough to know that when you take away that $7,500 incentive that's happened in the past for various automakers, it did have a negative impact. And I think no one's kind of really discussing that. There's discussion of that being a possibility, but when you look at, for instance, the planned numbers for Rivian in 25, I think they're taking that into account, that they could lose that incentive, and that's going to impact the entire EV industry, including Rivian.
Yes, Mish, it's not just the incentives that could be rolled back, it's also the potential for tariffs as well. So did Rivian address that? How big of a headwind for the company are both of those things?
Well, just to comment on the incentives, it's actually very confusing because on one level, yeah, they're talking about taking away the incentives for buying EVs, but on the other, there's talk about giving incentives to companies that are actually manufacturing in the U.S. So we don't really know which way that's going to go. But in terms of the tariffs, well, if they do, considering the car is made of steel and aluminum, 2 tariffs on the table, if they go through, it's the cost of 25% more on the cost of steel and the cost of aluminum. So the question is, where's the pricing power? Can they actually withstand that cost without passing it on to the consumer? These are all really unknowns. But what other interesting thing outside of the realm of the facts and the earnings is that there is somewhat of a sentiment away from Musk and Tesla going on in the country and heading more into Rivian. And this is kind of what happened with Tesla years ago, is that all their numbers were terrible, but there was such pro-Musk feelings at that time, the stock went up anyway. So there's variables there, and we can talk about the charts too, if you like.
Well, Carl, how much of a run for its money is Rivian giving Tesla right now, especially seeing as that lower cost R2 isn't coming until 2026? So it's soon, but not anytime that soon.
Exactly. And I think if you wanted to claim that Rivian is in a building of momentum stage right now for the company, I think that's an accurate assessment. I think it's continuing to expand awareness and build a fan base. And certainly the R2 is going to be very helpful for its long-term outlook. And even more encouraging is this ability to streamline and cut costs that we've seen. So those are all positives. I still feel like the electric vehicle question is still as bigger than it's ever been long-term. Those incentives might drift away, as we've talked about. So if you were asking me, is there reason to believe there's going to be more or less EV sales in 2025 than 2024? I still think the overall forces at play would suggest potentially likely less overall EV sales, including for Rivian, which they've taken into account.
EV sales seem to matter more for Rivian than they do for Tesla. Mish, give you final thoughts. We only have about 30 seconds left, and I'm just curious, would you buy the dip that we're seeing today on Rivian? Because you seem pretty upbeat on it.
I am, and I think you have to look at this longer term. And of course, there's going to be questions about EV futures, but I actually think the future of EV is solid. I don't really necessarily believe that we're going back to gas guzzlers as the primary seller. Hybrids maybe for now. But anyway, looking at the charts, there's a lot of support going down. This stock has been basing out. Right now, it's holding a very key moving average. And if you want to be a dip buyer, I think you're probably safe. I don't think the stock is going to go below 11. Over 14.50, this stock starts to look really interesting with a potential to maybe $20 to $25, depending on market conditions.
All right. Well, we appreciate those levels and your thoughts. Mish Schneider, Carl Brauer, thank you so much. And thank you for joining us on Trading 360. Download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. I'll see you back here for Market on Close, but stay tuned because Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions on the markets, which are in the red again, and then we'll have some option strategies. We're going to cover NVIDIA, which is up about 16% this month into next week's earnings, and Uber, which has rebounded over 30% so far this year after some weakness at the end of 2024. And Likefolio has sentiment data on Domino's Pizza, which is up a modest 10% over the last year, into their earnings on Monday morning. Now let's take a look at the major indices, which are just off the session lows. The S&P 500 down nearly 0.6%. The Dow off another 366 points today, or 0.8%. NASDAQ down nearly 0.7%, leading the losses. Russell 2000 small caps down over 1.25%, and that index was actually up nearly 1% in the pre-market. So big turnaround there in small caps. All right, to help me break down all this market action, let's bring in my co-host. That's Kevin Hanks. Kevin, give me your take here. It seems like, since those all-time highs on Wednesday at the close, we've been kind of teetering, in any little news that comes out right now is starting to hit equities a little bit. And today it looked like it was data.
Yeah, it's interesting. It's one of those things, knock you over with a sledgehammer, knock you over with a feather, right? And I think this market up at these valuations is very fragile to anything. United Healthcare, a little bit of data. Remember, University of Michigan, not a big fan of that consumer sentiment data, but there it is. And they they're bringing up inflation levels. The 1 year stays at 4.3%. The 5 year goes to 3.5%. So there's more. But you know what is interesting, Tom? Bond market reacting a little, but not much in terms of yields. 10-year yield currently sits 4.46. It's actually down slightly on that news. So the bond market's not believing the consumer sentiment. So, but the market seems to, and throw in some United Healthcare that took the Dow down, pre-market, and I think you've got a little uncertainty going into the weekend. But Tom, VIX 1570. How nervous is this market if the VIX is 1570? Right?
Right.
How nervous are we?
Yeah, I mean, I agree with you, Kev. It was shocking to me yesterday when we were down nearly 1%. We barely got above the 16 level. Now we're sitting, as you mentioned, it might be a little bit of that Friday, Monday effect that we get with the VIX also. And maybe traders using different products instead of the VIX as far as a hedging tool, maybe not going into those S&P 500 out of the money options, which helps compute the VIX product at this point. But let's extend this conversation, bring in our next guest. That's Joe Mazzola, Director of Trading Services at Charles Schwab. Joe, give me your take here on the weakness. I kind of, put it back on the heels that, we're at all-time highs just two sessions ago. And it just seems like anything that comes out that might be slightly negative for markets will, have people taking profits at this point.
Sounds like you read my notes. You talked about ulterior hedging products. SIBO VIX calls, 1 million traded on Tuesday. So yeah, I think investors, and probably larger institutional investors, are using that as a way to maybe hedge some of the downside risk with the VIX at these levels, especially going out to March. So which I find interesting, because let's think about what could be on the table in the next 6 weeks or so, and basically. You're looking at if you go out to the VIX expiration in March, that's the last week before the tariffs are supposed to kick in, and then also we have a budget that we need to kind of figure out, and we've been kicking that can down the road for a while, so that's set to expire in December. Budget plan is set to expire in March, so there's a few major events that could move markets, and I think people are getting ready for that. That being said, and this kind of goes to what you guys were talking about, the 1 month or the shorter term spreads that we're seeing right now is not showing really any indication of a lot of hedging. It's further out, and that's that's normalized. But I would expect to see the VIX at higher levels, kind of given what we've seen. But let's not forget, guys, we hit an all-time high earlier in the week. It just doesn't seem that way because of the choppiness, the lack of volume, and as Kevin mentioned, their reaction to the news stories as they're coming out. These aren't major economic drivers, but I think when you take them in aggregate, looking at something like the Citi Economic Surprise Index, basically had a really nice run, in September all the way through kind of towards the end of the year, but now it's dipping back towards negative again. So these are all things you just have to be mindful of as an investor.
Yeah, and I think with the markets at or near all-time highs, it adds a little bit of edginess maybe to some of the data points that come out. Kevin, if you looked at the PMI data, the services side of it, the manufacturing side's kind of reversed over the last several reports, but now we're starting to see some weakness on the services side. This was the lowest since January 2023 in that number, below the 50 level, which is, a contraction. At this point, and then you throw on top of it Walmart's earnings, where they see a softening, maybe just a little bit of softening from the consumer going into this quarter and the fiscal year. Is that maybe part of the reason we're seeing a dump here in the equity market?
Yeah, I think the PMI data that we got, it's not insignificant. Yeah, you're right. The services, anytime, when I see a second tier data point, like I consider PMI to be, not a top tier, not non-farm payrolls, not CPI, not income and outlays, which we're going to get next week. When I see a second tier data point like this, I look for something that catches my attention in that number. If it's benign, I move past it. But you're right, the services number dipped below 50. That is something that catches your eye, especially when manufacturing going up and services going down. It's kind of it's something to keep your eye on, that's for sure, Tom. So, listen, we're coming off a very light earnings and data week. And what usually happens after that is we get a very heavy data week, and we have that next week. And I think a lot of the reasons why we didn't sell off on CPI and PPI were some of the components were aiming towards a softer PCE number next week. So now we've written a check to next week, right? That has to be cashed. And so that number's got to come in light, or all bets are off here, Tom.
Yeah, and I think that was a takeaway, Joe, from last week's CPI and PPI was, yeah, they were hotter than expected, but everybody's like, well, the components that the Fed looks at in the PCE, they don't ignore the CPI. They don't ignore the PPI. So is Kevin's point correct here, Joe, is that, hey, this stuff better come in softer. I think they're looking for a headline number 2.5% on PCE, and that's why we saw a continuation of the rally earlier this week.
You know what else they don't ignore? they don't ignore consumer inflation expectations.
Yeah.
And that's something that came out of the Michigan Consumer Sentiment number today. Those, we talk about them being anchored, and to a certain extent, if they continue to ratchet up like we've seen the last couple prints, that anchor, might be moving. So it's just something to, like I said, it's something to kind of keep an eye on. And I know Kevin calls it, soft data, and I get that. That's true. But next week we do have consumer confidence, which, while that's soft data, it's something I'm going to be watching. The PCE data, I think, as you mentioned, and personal income, personal spend, those are going to be the market drivers.
Yeah, definitely.
Oh, and GDP. Yeah, don't forget GDP's tied in there too.
yeah. The second read on GDP, and Atlanta Fed GDP now just came out. I think it was about 2.95%. That's down from last week's 3.02%. But Kevin, we've always talked about that. The consumer, maybe Walmart threw a wrench into it yesterday, had some of the other retailers down, but the consumer still drives this economy. They continue to spend. We had those results from Booking last night. They were pretty good. I mean, give me your take here, because this isn't one of those things that's going to change on a month or a quarter basis. This is going to be a slow grind if we do see any pullback from the consumer at all, right?
Yeah, let's put the Walmart earnings into perspective. They beat on earnings per share. They beat on revenue. They had great numbers. Their guidance was, let's call it conservative guidance. And the stock had run an incredible amount and was overbought. So that's just as strong of a reason for the sell-off, is the fact that the stock had run so far, right? It had gone from last January at 25 PE to a 41 PE in a year. That way far away from its historical numbers. Now, Walmart's evolving as a company, so some of that's justified, but it may have gotten a little ahead of itself. So there's the Walmart part of this. Now, we also are coming off a miss on retail sales that you can't ignore. And remember, Walmart's numbers were still good. The U.S. economy is drifting more towards big box and big e-commerce than they are mom and pop stores. So I think there's a shift there that you have to pay attention to. But I just think that the U.S. consumer is not necessarily weak. I wouldn't call him weak just yet, although they are coming off some pretty strong numbers. But you got to keep an eye on these consumer numbers, because if they do start to crack, if it does start to turn into a trend of a weaker U.S. consumer, well, Tom, you and I have been talking about the U.S. consumer for a long time and waiting for the U.S. consumer to weaken. It never happens. It just never, ever happens. So that's worth watching for sure.
Yeah, I think watch the jobs data. Go ahead, Joe.
I was saying, what puts a dent in consumer confidence is worried about their jobs, right?
Yeah.
Their jobs, employment, that drives consumer confidence. When jobs are strong, when people know that they're going to be employed, they feel more comfortable spending. We've had a couple things that have really pushed this market higher and really pushed consumer confidence higher, and that was access to employment and then the wealth effect that's created from the market continuing to go higher. I think one could lead to the other, right? If there's concern that jobs aren't available, which we're starting to see now, you see the job cuts are starting to pick up, and then everything that's coming out of Doge. This does affect whether or not people are willing to spend, and with 70% of GDP tied into the consumer, something to keep an eye on.
Yeah, definitely. And we get more earnings next week, Kev. I think that's going to be, it's actually a big week. I mean, we've got NVIDIA, of course, CRM and Snowflake. Those are all on Wednesday afternoon, but there's some smaller ones in there. Domino's, we're going to talk about that one, Zoom Video, and some others. Home Depot is in there, Lowe's is in there. So we've got some pretty big earnings coming up next week, right?
Yeah, remember, once Walmart comes out, and we switch to that second half of earnings season, it's all about the U.S. consumer. So if you want data on the U.S. consumer, here it comes. And NVIDIA's earnings, think about the sector of names that are going to have market maker moves for Wednesday night, Thursday morning, based on NVIDIA's earnings. Not to mention, Supermicro's got its filing date on the 25th, Tuesday. So that'll also be a moving event there for that stock, which has run 78% in the last a month or so. So we're getting some big events next week. And a look at the U.S. consumer is a different animal as we get to the second half of earnings season. You're right, Tom. There's a lot coming out. Let's see how the U.S. consumer is acting. I think it's vitally important.
Yeah, and Joe, we mentioned some of that data. Consumer confidence, that's supposed to probably be a little bit weaker, but then the housing market still hasn't recovered at all, and I don't think it will. You know, with 30-year mortgage rate sitting around 7%, we saw Toll Brothers earnings. Any outlook there in that sector? Because, you know, it's kind of a reflection. We talked about the wealth effect that how home prices rising creates, the market at or near all-time highs. It still feels like, you know, that sentiment out there as far as the consumer goes is still pretty positive despite the pullback we're seeing today.
I think the housing market is more of a tell in terms that people don't want to move out of their 3 or 4% mortgages and into 7%. Now, you did see, this is what I found interesting, when you did see mortgage rates get down to 6%, there was a lot of increased activity. I think people were trying to jump in at that point. But back at around 7%, it's basically been a standstill. So people don't want to sell it at this point because they don't want to go up in mortgages, and people don't want to buy at this point because they're waiting for mortgage rates to come down. And you know, that there's an effect there. And then think about the employment component of building as well too. I mean, the immigration policy, you know, could have an effect in terms of the ability to supply enough new homes. It is what it is.
Yeah, I think it's going to be stagnant. I think you're going to start having to hit round numbers like below 6% before we see a big jump. But as Kevin,
housing prices go down, right?
Yeah, they have pulled back from record highs, but not that much at all. There's still a shortage out there. All right, guys, let's take a quick break. When we come back, we're going to take an initial look at NVIDIA. I'm sure we're going to talk about it next week also, but we'll cover the AI chipmaker stock, which has jumped over 100% over the last year. They report earnings on Wednesday after the close. Stick around.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking NVIDIA. I'll give it a preview for those earnings on Wednesday after the close. Kevin, when you look at this stock, you know, it's consolidated below those all-time highs recently. You know, valuations have come down on this stock on a forward-looking basis, on a trailing-looking basis. at this point, but it just seems like since that DeepSeek news, there's some underlying tones of bearishness on this stock, even though I get it. If you look at a 2-year chart, it's rallied pretty significantly.
Well, yeah, you're right. I mean, remember, this stock broke 120 not long ago and has rallied all the way back to the 140 range, but there's uncertainty, right? But here's numbers that will make you less uncertain, Tom. CapEx, right? Year over year, it's gonna be massive numbers. $300 billion from Amazon, Microsoft, Meta, and Google Alphabet. $300 billion. $500 billion from Stargate, that figuring maybe $170 billion could go right to NVIDIA or that area where they're the dominant player. I think people have a right to be fearful, but I think next Wednesday answers a lot of questions, and I think that there's doubts all over the place with NVIDIA because we have nothing else to do except wait for NVIDIA to come out and doubt. And so I'm looking forward to these numbers and listening to Jensen Huang talk about how Blackwell's sold out for the next 12 months and the demand and other things they're doing. And remember, and this is a discussion, Tom, that you and I have a lot when we talk about Tesla. What's next in their pipeline? What else are they doing besides dominating in GPUs? I want to hear that too.
Yep. How are they monetizing those big giant sales? Let's bring Joe back in here. Joe, when you look at it, the DeepSeek news threw a wrench into the whole investment thesis behind AI and the build out for it. We don't know if that's actually true or not, as far as the figures that DeepSeek released. But when you look at the investment like from Microsoft and Google Alphabet and Meta Platforms, they didn't say they're going to pull back on spending, and they still haven't said that even after the DeepSeek news. So it seems like the pipeline, at least for the near term, is pretty solid.
Yeah, and NVIDIA is the primary benefactor of that pipeline. So you're looking at a stock that is basically, you're talking about the DeepSeek news where it pulled back to 120. Let's go back. Let's go further back and let's look at the last earnings cycle. The stock's traded down about 5.5% since the last earnings. And they weren't bad earnings, they were great earnings. But what was the news? The news was that there's delayed shipments for the Blackwell chip, right? And that, that is what kind of, pushed the stock down. Kevin brought up a good point. There's this idea that there's so many different stories coming on fundamentally, and how do you make sense of growth? I mean, really strong growth, but maybe it's not triple-digit growth anymore, right? Maybe it's high double-digit, and how do you factor that into the price of the stock and whether or not you want to buy it? When there's all of that that's kind of taking place, I think sometimes it helps as a trader maybe to take a step back and just kind of look at what the market's telling you right now. Okay, so we rallied back. We're above the 50-day moving average. That's at 134.66. RSI is 56, so it's rallying back up, but it's not overbought. Not something you have to worry about, at least from that perspective. ADX. This is something I look at from a trend analysis. The ADX is showing 16. So what does that mean? That means this thing is just sideways, and it's been sideways, and it's really been that way for the last few months. So when I look at something like that, the next thing I tend to look at, guys, is kind of the option market in terms of where is the implied volatility? How is that looking? What about skew and things like that? So the current implied volatility percentile is 46%, which seems really low heading into an earnings announcement, right? I think part of that is, and this is where I really see an interesting dynamic that's happening in the options market for NVIDIA right now. If you guys remember, we've had this conversation, whether or not it was on the show or when you guys, come out with me on the road for the market drives. We talk about some of that upside call buying skew that we've seen for NVIDIA, that we've seen for a lot of these tech names heading into their earnings, where to a certain extent, the calls are trading at a higher implied volatility than the puts, right? There's a lot of pent up enthusiasm for the upside. This is the first time in a while we haven't seen that. I mean, you got to go all the way back to November 2023 to see the puts, skewed the way they are relative to the calls. So what that's telling me is that there's some hedging activity that's happening in NVIDIA right now, and there is some concern And if you're looking at a stock that the straddle is predicting about $11, $12 move, somewhere in that range, now's the time where you're finally getting a little bit more bang for your buck on the put side.
Yeah, you bring up a good point, Joe, because we typically see that a lot of speculators out there buying, out of the money calls where that skew kind of gets out of whack here. Alibaba is a perfect example. That's going on in that stock right now, where the skew on that one steeper than the puts at this point, just because everybody's reaching for upside out of the money calls. Good luck with that. But Joe, when you look at this and going into this report, you mentioned it's probably pricing about a $10, $11 move into earnings. That might change. Remember that volatility number is dynamic. How do you want to look at this one from an example trade?
Well, like I said, this is the first time in really, a year and a half that you're getting that put skew. So that means that puts are relatively a little bit more higher premium or more expensive than they've been in the past heading into earnings. As a trader or even as an investor, if you're looking at a potential entry point into the stock, one of the ways you can do that is by selling cash secured puts. So, in an IRA account or a cash account, that would be selling a put as a way to potentially not only generate income, but also maybe generate an entry point into getting long those shares. As a trader, it's a little bit different. You might just be kind of looking at it. You could look at it both ways, right? You could be interested in getting long shares, or you could just be interested in taking advantage of some of that implied volatility skew on the put side. Either way, right now, 1 week out, if you're looking at the weekly, so these are the Feb 28s, if you're looking at the 128 puts, they're trading anywhere between $1.85 and $1.90. I think when I sent it to you guys, I sent it at $1.90. So what does that mean? That means if one were to sell that put, they would take in about $190 in terms of the premium, and that would put their break even at 126.10. So if the stock settles below 128 at expiration, you could take delivery of those shares if you want, or you could close this out. But what this does is it takes into consideration the skew, it takes into consideration the straddle price, because right now trading where we're at around 139, that $11 straddle at the money straddle kind of takes you right to that point of this put. Now the other thing I also looked at is if I take the put and I subtract the premium I'm collecting, it takes you down to 126.10, like we said, the break-even price. That also just kind of happens to be really close to where the 200-day moving average is. So it just allows somebody to kind of not only think about it from the fundamental standpoint that you guys were talking about, but also looking at it from a volatility and then a technical standpoint as well.
All right, yeah, let's break this one down. Cash secured put here in the February 28th weekly cycle. So 7 days to expiration, you're going to capture that earnings event. Applied volatility levels elevated in that option series, which allows you to collect more option premiums. Selling the 128 strike put, collecting about $1.90 credit. That's what you can make on it, $190. Do have some risk on this one though when you look at it, because you've got risk if the stock were to somehow go to zero. $12,610 to zero if it were to go there. But Kevin, when you look at this is that twofold type strategy where, hey, I'm comfortable buying the shares if the stock does go below my strike, or I just want to collect some inflated option premium here with a big cushion to the downside to that break even.
Yeah, that's exactly right, Tom. I mean, there's a lot of positives about a cash secured put, but the one negative is you've got downside exposure. Just like if you had a covered call strategy on, right? You've got downside exposure that way as well. This is just a synthetic version of a covered call. Like a covered call is a synthetic short put. So it's got the same profit graph. You're collecting theta. You're long about 20, 21 deltas on this trade, but there are differences. The difference is the max profit you can make is the credit taken in. If you sell for 190, there's
all right, I'm back.
Max profit on this trade. So yeah, I mean it makes money on 3 of the 4 different scenarios. Upside, unchanged, down small. Where it loses is a big move on the downside, which
I got out of everything on the road.
Buy the stock down there anyway. Like Joe said, his entry point here, 126.10. Tom?
Yeah, and Joe, when you look at this, as far as trade management, you got to be comfortable owning the shares, right? Because you have to have that capital available to buy the shares if it falls below the 128 strike. into expiration, you get assigned on that. But at the same time, Joe, say the stock rallies $5-6 next week going into earnings, that might give you the opportunity to maybe buy the 120 put and turn it into a short vertical where you take off a lot of risk on this position also, right? So there's different ways to manage this.
Or, you know, or if it does rally $5 or $6, this premium probably comes down a lot too, and then maybe, you know, you're looking to close it out. So there's, absolutely different ways to manage this. You said turn it into a vertical spread. Maybe you go down a few strikes if you don't want to do the 120s. If you want to, still collect a good amount of premium. That's what's interesting about starting a position with selling a put. It allows you the flexibility to do this. You could even turn that into a calendar if you wanted, right? If your thought kind of changed and you got a little bit more bearish, then you buy a couple weeks out and you use it as a calendar spread. So there's a lot of flexibility just by kind of incorporating this cash secured put to start.
Yep, got some time. Wednesday after the close, that'll be a big one. All right, great. Thanks to Joe Mazzola, Director of Trading Services at Charles Schwab, for joining us. Have a great weekend, Joe. Coming up after the break, we're going to be joined by Megan Brandt.
Thought I said I only had two things red. Green.
The pizza chain stock up a modest about 10% over the last 12 months into their earnings ahead of the open on Monday. Stick around. Coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms.
Looks like nothing good happened.
On Thinkorswim desktop, with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and
Platforms running slow.
Trade brilliantly with Schwab.
Anything happened when I was gone in the news? I know Israel's pissed. AMD at 112. So, I mean, that had 111.35 and 112.56. Oh, maybe today's no more trading until the end of the day. What time is it? 11:31. I'm going to have my lunch, make some coffee, and get warmed up. It's actually 20-some degrees outside. That's a big change. Almost feels warm out there. Warmer it does out there than it does in here. I'm going to turn my heater up. I went and got my city license. Here's
I think
my
it just announced
girlfriend.
earlier this month it's closing about 205 of its global locations that are underperforming. I think that that's smart. That's been a point of weakness on prior reports. But just in regard to overall consumer enthusiasm, you know, a negative 2% year over year, especially whenever digital is a major driver of these sales, that to us looks a bit muted. So, you know, we're heading into this with a pretty neutral outlook right now.
Neutral.
You know, Megan, I consider Domino's Pizza the McDonald's of pizza, right? Because you can't argue with the price point. And though Tom and I are not good representatives for opinions on pizza because that we live in Chicago, you know who likes Domino's? Young people, young kids love Domino's Pizza. And the fact that you can order it quickly at a low price point is really positive. Now, let's get to the business aspect. Their
Tesla.
sales targets, they keep missing. Their top line
Damn, that
growth
looks like a
seems to be
beautiful
slowing,
snake.
Yet they remain profitable and they do a good job. Why? I compare them a lot to Best Buy. They keep headcount down, they keep expenses down, and despite the revenue and other numbers, they remain really profitable. They manage their business really well. So they're good at appealing to young consumers with the price point, and they're good at running their business with expenses.
Quit
So
spitting.
that's why, in my opinion, this is a pretty solid company, despite what Tom and I think about the quality.
Quit spitting.
Yeah, you know, I would agree with you. On a long-term perspective, this is a name that we like a lot because of the operational efficiencies that you hit on, because of how this company is leaning into AI. You know, a lot of companies like to throw around AI like it's a buzzword, but this is a name that's actually implementing technology to make the entire process more efficient, from interactions with customers on the ordering side to the workflow side to actual delivery and the communication that you get along the way.
We got a
I think
wedge
that the
on
company's
Tesla.
app is another major driver of sales.
Let's go
I would say
through the
this
watch
is the
list.
brightest spot in the data that we look at because
I'm curious. I got to make back some money. SPX down more. So we got Baba Baidu up again. Zim's doing good today, and they were talking about Apple earlier. Smaller menus, better vibes, how Starbucks CEO is shaking up the brand. I don't think you can shake it up. It's too late. Does have a new high. JP Morgan up, Dell's up. Boeing had that horrible crash in Canada. I heard it was woke, all women pilots. I'm not saying women are they're just as capable as men. I need to measure my blood pressure. Stop putting that coffee on my... Damn. SPY keeps falling. SPX keeps falling. 3 black crows on the hour on the SPY. And the SPX is right at the 200. I really like that there. That could be it for today. The 6100 strut, no. The 6075s, or the 6080s. Let's see that. 6080s. I'm going to put a price line right on the top of the moving average. $60.59. I got 2 of them on here. Get rid of 2. Okay, let's give this. I'm gonna give this a shot for the rest of the day. $60.80s at $3.50. Come on, baby. Yeah, we're at 50 up, $50 on it already. We're on the 200 on the hour. I like that support. If they're buying calls and the market's down, you're saying that's a good thing? Damn, they were just at 350. That kind of sucks. They were just at 4. If they don't hold this $3, I'll get out of it. Man, I just love that soup. I can just gulp it down. I mean, I've never tasted such great soup in my life. I mean, it's so tender and it's chicken, turmeric, chicken, barley, vegetable soup. I mean, I used to kind of cook my chicken a little bit and then put it in there, but I just put it in there raw now and it's much better. And I put it in the Instapot. So I got an average of 325 on these calls. I need them to get to about five or six, and I'll be even today. Can't believe I didn't. I went and spent more money. I wrote the biggest check I ever had to today. For your taxes. It's hard to say goodbye to that, but it's what happens. Almost 40 grand. this thing dropped on me again. Fuck. I was up $150 there for a second. I better give up. The equity indexes decline on worsening consumer sentiment. Output growth. Investors await business activity, sales data, and blah, blah, blah. I gotta stop on this sucker. Baba dipped below the 200 now. Come on, you bitch. Don't give up yet, Jimmy. I'll be right back. There's Mr. Spitty.
A little bit, it's long duration, but at the same time, it's pretty straightforward as far as a directional bias. Current IV percentile is down to 18%, so we're in the bottom 1/5 of what we've seen as far as implied volatility levels have been over the last 52 weeks. So what does that lend credence to? Well, maybe a strategy that's buying a vertical. So I looked out in the April monthly cycle here, Kevin. So giving myself 55 days to expiration. So plenty of duration, nearly 2 months. Buy the 80 strike call. That's basically at the money right now. And then sell the 90 strike call.
They got a new coronavirus with pandemic potential discovered in China. News: meeting with key CDC vaccine advisory panel under scrutiny by RFK is postponed.
For $83 is your break even, $83.50 if you do it at 3.5. If it's closer to 310, it's 83.10, right? Is your break even. And what you've given yourself,
Come on.
Most important, you've given yourself 55 days, Tom, for this to take place. So this
can't win
is
for losing.
the definition of if you're gonna
VIX
you need
elevated
movement,
to a
and
new
you
high.
do here, right? Stock's below 80. You're buying the 80-90 call vertical. You need movement. Well, the best way to help you in that case is give yourself duration.
Almost
For
a
that
double
to
top.
happen. If it happens in 3 days, you still do well on this spread.
Stay in it, Jim.
So, yeah, Tom, I think the key here is going out long term and then giving yourself duration on a call vertical.
Oh, really?
Yeah, all-time highs in this stock, $87, and that was back in October of last
damn,
year.
what was
So you need to move higher. I think that's one of the key things. But Kevin, this is one of those strategies we always talk about when you manage a trade like this. Say you get a pop up to $85, $86, and this thing starts to expand, and you're doing multiple contracts. It gives you that opportunity if the market's open to maybe close a portion or all of it, or do some type of trade management also. So it gives you a little bit of flexibility there also. Kev, before we go, I think we should talk about markets here because we are at session lows now. The S&P 500 now down 1% on the session. We've seen weakness across the board. Not surprising, we're coming off those all-time highs, Kevin, but it feels like there's no catch to the buying the dip mentality is kind of thrown out the window today.
Well, it's kind of a lazy Friday, and a lazy Friday sell-off. Now VIX has finally moved above 16, up towards 16 and a half. So we are getting some movement in VIX, but not anything like you should be getting in terms of VIX. So yeah, Tom, this is a market that's, at the end of a week, end of a relatively slow week on a Friday, looking for some buyers, and they've yet to show up, although we've got 3 more hours, Tom.
Yep, got buyers in bonds right now, so treasury yields falling, so maybe that pushing into a little bit of risk off mentality here in the bond market at this point, pushing stocks down with yields going lower also. We'll continue to watch that one. Big week next week. All right, that's going to wrap it up for us here for Fast Market. Stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Ameritrade is now part of Schwab.
Does SPY want 602?
Elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers
I'd say
with me,
6.
Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Yeah, 602 looks like it.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing
600.
topics, including growth, value, income.
All right, 599.53.
You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
$602, yep. Just right under it.
Welcome to Next Gen Investing and happy Friday. I'm Jenny Horn alongside Alex Coffey. And Alex, unfortunately, looking at these markets,
Jenny,
which are actually making some significant moves today. I know each day has felt relatively muted, but some substantial selling today led by the losses in the Russell here, which is now down firmly over 2%. We're down over 1% in the rest of the three major four averages. So now tracking for losing.
Dow's down 560 points.
It's been a while since we've seen consistent pressure on the markets this week, but there was not a lot of catalysts to enthuse or to reignite some optimism on the week.
Yeah, this is a day that's getting uglier by the minute, it seems. I heard Kev and Tom talking about it, just kind of the lack of buyers stepping in. We've been used to seeing the dip buyers come in and kind of save the day, if you will.
Yeah, we have.
Where you've seen a little bit of
I'm one of them.
Maybe there was a couple attempts at it early today, and maybe that first half hour. But since then, they have been nowhere to be seen. Maybe early weekend for the dip buyers, but a day that's getting a little bit ugly, and we're working our way basically back to where we were. I don't know if you want to go back to the end of January, kind of where we were. So something to think about in terms of how much damage can be done in kind of a sideways market with just one swift move lower. And this isn't even that big of a day yet. It's 1% in the S&Ps, 1.3% in the NASDAQ, 2% in the Russell. We could be seeing just the beginning of what could unfold to be a little bit bigger of a red day.
God,
that's true.
Just the
And
beginning?
the pressure sort of picks up on the session. I do think it makes for today's session to be more interesting. But yes, feeling like most of the market, or maybe the bulls already started their weekend a bit early here, as we did get temperatures above 30 in Chicago. So just feel like it's a summertime here after a week of frigid temperatures. So maybe some are celebrating the weekend a bit early. But as always on the show, we'll focus on our individual movers. We'll start things off with a broad focus to kick off our show, and that's our theme of earnings. We are looking at earnings from yesterday evening, earnings that are expected over the weekend, and earnings we'll get into next week.
There's my business license.
We are very much earnings light. There are still some behemoths reporting, being NVIDIA next week, that we'll be keeping on our radar. For FOMO today, we're talking Coinbase, which initially actually surged on the session, now pulling back after the SEC is moving to drop its lawsuits against the company, and what this signals for the rest of the crypto space. An interesting conversation we'll be having later on. We'll also be looking at the ways in which geopolitics could impact your portfolio strategy, and we'll close things out here with Celsius, which is pacing for its best day since November of 2020, thanks to its $1.8 billion acquisition of Alani Nu, and some solid earnings to go with that. So we'll talk some M&A, some consolidation in the energy drink space, which is perhaps the space that we need to spread throughout this market, because it does not feel like we are energy heavy right now in this market, Alex.
Yeah, no doubt. And as we look at things here, as you said, earnings, let's start with Block, which for those who maybe live under a rock, apparently like I do, it's XYZ now. It's not even Square.
Hate it.
But of course, not endorsements, not recommendations with up or down vote.
Okay, and we've been long time protesting the change of the ticker that did not, or no, excuse me, the change of the company that didn't match the ticker, because for quite some time, Square, obviously the ticker was SQ. Now, this new ticker, which I must live under a rock. I'm like, this is even more confusing. I cannot associate XYZ with Block yet. It's just like, to me, the ultimate identity crisis. But stock trading lower today. I mean, pulling back pretty substantially. We're down almost 18% here after the company reported worse than expected fourth quarter results. Adjusted earnings per share of 71 cents missed the 87-cent forecast. Revenue of just over $6 billion did also fall short of the $6.3 billion estimated. And they saw a quarterly gross profit of around $2.31 billion, with Cash App contributing about $1.4 billion, Square contributing around $924 million. But Cash App's gross profit did rise about 16% year over year. Square's gross profits increased by about 12%, so there was still some things to like within this report. Bank of America was one of the most optimistic notes I saw today. continuing to rate this stock as a buy, saying investors should buy the dip following earnings. They do believe that at this point, Block is undervalued and the business model quality is high. Their focus turns to the post-first quarter acceleration in both Square and Cash App, which seem plausible, as well as its second half of this year Investor Day event. Now, Goldman, Raymond James, UBS, Keefe Bruyette, Woods, and Oppenheimer all did trim their price targets following the report, just to name a few of the analysts' moves I've seen post-earnings.
Yeah, I think the numbers are obviously disappointing when you look at Block, miss on basically every metric, but they didn't give any hope either. There wasn't like a upside to be looking forward to in the future in the guidance that they provided. So I think the move lower is easily explained. We actually broke these ones live on air yesterday with Caroline, Kevin Green, and I for Market on Close. And the initial reaction was sort of like lumpy but to the upside, and then it was like immediately after like some of the guidance stuff figured, it's been lower ever since. So not surprising in terms of the move. Let's talk Snowflake. I don't think we've gotten earnings just yet, but we're expecting to next week for this name. Earnings have been kind recently, not so kind, let's call it a year ago.
Now, this name is definitely one that was caught up in the enthusiasm tied to software-related names.
Snow down to 178.
A pretty decent pop post its third quarter earnings. Now we get those fourth quarter results Wednesday, February 26th. I do think important to note, though, that NVIDIA reports the same day, which I'm sure this will be overshadowed somewhat by that report, but still important to keep this one on your radar. Jefferies raising its price target, though, ahead of the print to $220 a share from $200. With a buy rating, they said their proprietary survey works to point to healthy demand in fourth quarter, along with optimistic AI growth contributions in 2025, while their fourth quarter expectations give tepid given the negative public cloud read-throughs, though, and ongoing competition concerns. Their checks do, though, include some non-core momentum and easier comps. Given this easier conviction and re-acceleration through the fiscal 2026 guide, they did say does still remain a relatively near-term hurdle. BTIG also upgraded shares to buy. Wells Fargo, RBC, B of A, and UBS all did raise their price targets. So there's enthusiasm definitely going into this print from the street side. And we have about 37 buys, 8 holds, and 1 underperform in this name. So conviction does still remain overwhelmingly strong from the analyst community, Alex.
Yeah, it really does, and that's relatively recent. It's built since that last earnings that saw the stock jump tremendously. Earnings are still a question mark in terms of the direction that the growth's been going, but it's positive, at least on the expectation for their adjusted diluted EPS at around 18 cents expected. But the 23% revenue growth thereabouts that's expected is pretty stable. So stabilization for Snowflake, I think, is what the street is looking for more of, and of course, beats could contribute to upside moves. Let's talk Domino's. I know this is one of your favorite, little, fast, convenient, quick little restaurants you can go to, but the stock's a little bit more complicated in its performance.
It is, and I also will say that Domino's does something where their targeted ads must be reaching me maybe more than the average consumer, because I have had so many Domino's commercials on my radar, especially like watching all these various like sporting events, that I have actually pulled back on my Domino's spending. But as far as this quarter is concerned, we get earnings next week, Monday, before the market opens. We are expecting adjusted earnings per share of $4.95 on revenue of around $1.5 billion. Now, it's consistently been able to report revenues that broadly matched or came in line in recent quarters. They did see that in their third quarter, a total of 21,000 stores after adding around 208 new stores and closing 136 units during that same period. Net revenues increased about 5% annually, and we saw, again, that came in line with expectations. So they're not one that's historically seen huge beats. Domestic comparable sales, though, rose about 3% annually. That was actually a bright spot, because as we know in the restaurant space, right now, positive comps in especially North America have remained pretty difficult for companies to consistently be able to report. Bottom line topped expectations, though. That was its 8th beat in a row as far as the third quarter. And they did highlight they expect about 7% or more in annual global retail sales growth now moving forward from each year from 2026 through 2028. They also have tried to maintain this really efficient capital spending strategy. Key drivers do include some of these value-based strategies, as well as various promotional deals. They're trying to offer consumers. But despite these offers and a revamped loyalty program, they do still face pretty stiff competition. And they're not the only delivery chain, of course, that really targets its own delivery service. For a while, they were anti the third party. They've since gone back on that stance. But I do think encouraging, actually tied to our last name today, that we did see per Berkshire Hathaway's 13F filing earlier this week that they were adding a substantial position in Domino's Pizza earlier this week.
Yeah, what you're describing to me when it comes to their partnership with Uber Eats is if you can't beat them, join them.
Totally.
I think it makes a ton of sense. And the reason being is it's now kind of ingrained in our minds that if you're thinking, hey, I need to order something, but I don't know what yet, to just log on one of these delivery services and see what's on there. Maybe you have an idea, maybe you kind of know what kind of food you want. But if you're Domino's and you're not in those places, you're basically relying on the consumer to want your product specifically. And now there's a whole catalog of basically choices. So you want to be where the consumer is, and the consumer is on products and services like Uber Eats. So it makes a ton of sense, and it's going to probably contribute to any success that they have had in recent quarters. They have started to see revenue growth tick back up. They have started to see same-store sales tick back up. We'll see if that continues when it comes to Domino's earnings. Also, PSA, before the open on Monday, which is odd because it doesn't happen a ton, especially for names that are kind of household names. So making it a little bit difficult, but if you wanted to do an earnings-specific trade, today would be the last day to do that.
Yeah, a good point there, because I do feel like oftentimes we don't see a ton of names reporting Monday morning, but hey, I mean, that's definitely one way to start off the week. Perhaps you can see some upside for Domino's here. Last name today, though, is one that, of course, did increase its stake in Domino's Pizza, and that's Berkshire Hathaway, which is now set to release Warren Buffett's really eagerly awaited annual shareholder letter Saturday morning. And investors will be paying close attention for any sort of roadmap. The letter will be issued in conjunction, of course, with their annual report and fourth quarter earnings. But this year does mark Warren Buffett's 60th year at Berkshire Hathaway as the CEO. And the company is operating from a continued position of strength, frankly, and also seeing record operating earnings in its first 9 months of 2024 and a record share price. Buffett now, of course, could take the opportunity to refresh some of that narrative, and also the company's march to $1 trillion market value and the 35,000-fold rise in Class A stocks to around 723,000 since he took control of Berkshire back in 1965. I mean, it's wild how long this man has been at the helm of this company, and kudos to him because he's one that investors still closely follow as if it was, 30 years ago. And it's truly a testament to his leadership at Berkshire Hathaway. But many are saying that his succession could be discussed, buybacks, as well as the company's massive cash position that's only continued to grow throughout the last year, and the situation right now at some of their key investments like the utilities, the auto insurer Geico, as well as what some of the outlook for the railroads, the logistical companies look like. So there's a lot to expect from this report, but I do know one thing. It's a letter I have tuned into every year, really, since I started paying attention to the markets. I just think it's such a great, refreshing read. Even if you're not a huge Warren Buffett person, I just think everyone should get their eyes on this letter that's out tomorrow.
Yeah, I think Warren Buffett, obviously the success, the track record speaks for itself. It's a different type of investor. I mean, you can be both a Warren Buffett type investor and then also still a trader. But Berkshire Hathaway, I think today, seeing it down only 30 bips when the market's down 130 bips, goes to show that there is a little bit of faith in Berkshire and sort of the businesses being more value-oriented and not necessarily the super growth, the momentum-driven things that you see in the overall market. And also, we know he sits on a ton of cash still, so probably waiting with his arms wide open for any opportunities should they present themselves, but not really a trader's stock.
No, which is one that is, I think, if anything, more of like a pulse check on the markets or like a pulse check on Warren Buffett's recent investments. And I have to imagine that at this point it's his ideas versus, as well as combined with so many others at the helm of that company. So definitely a letter worth tuning into, not one that tends to move the overall market. But we'll be focused more today on our names with earnings ahead. We'll be looking at Domino's as well as Block with, of course, the most confusing ticker, but also earnings that we've already received. We'll dive more into the technicals of both of those names as well as the example trades. Stick around. We'll be right back.
We'll get caught up on paperwork. Nice little bounce off them puts at the bottom. 120 to 190. But they're way out of the money now. They weren't before.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell.
What the hell is this?
Schwab Network is available anytime, anywhere, on any device for free.
Well, there's
Schwab Network.
already had an auto insurance in here.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. Today we are looking at some post-earnings moves, some pre-earnings moves, and Domino's Pizza as well as Block. So here to break down the technicals for us is our Chart Master, Rick Ducat, of course, our lead markets technician. We'll start off with Block, and again, a pain point to me is this ticker. I've been begging them to change it to match Block. They changed it in a completely random way to me, whatever, but still, selling off today down around 17.8%. So walk us through the recent pain for Block shareholders.
Yeah, it's annoying. I'm not gonna lie.
It is annoying.
It's just whatever. But anyway, so we can see that for a while, price was trending downward in a channel type shape here, beginning with this high point that we established near 99.26. From there, we connected this subsequent high. Then if you took this trend line and duplicated it and put it across the lows, it matched up pretty
XYZ.
decently. That was kind of the general framework for the way the price action was moving for a while. But now we've started to fall apart recently. We crossed below our longer term blue upward sloping trend line recently. We gave up our two moving averages, which are clustered right on top of each other. The yellow 21-day, the orange 63-day exponential moving averages. The faster is crossing below the slower. Maybe not the greatest trading signal, but an important sign that the trend is deteriorating and increasing to the downside here. Notice as well now we are below, far below, our purple 252-day EMA. That was kind of the high water mark of today, was this long-term moving average here. Now we are slipping below this previous low point from all the way back in fall, like October, November. 69.03 was the mark to hold on to today as we struggle to recover from this severe downside move.
Okay, so when we watched out some future price levels, again, we got earnings that were obviously not enthusiastic to the street. I will say some tepid guidance, some lack of enthusiasm from management.
Well, you're right on the number,
Perhaps
6903.
behind some of today's pressure, but what are we watching now for key price levels moving forward?
Yeah, I mean, if we keep moving to the downside, there's an area that sticks out as a potential supportive zone. And it's
Okay, we're
right here.
retesting again that low support.
Control at about 65.
That's an impressive bounce.
Trading here. It also is pretty close to this other low point here, 63.93, another point that stuck out a little bit. So maybe around that area would be an area to consider for a potential foothold for the price action here. If we were to recover, well, we've got our -1
Try it again.
deviation channel lining up together around 72.50.
So what'd you do?
That could be a point to watch, and really in the short term, our high point matching up with the purple 252-day EMA. That's a pretty convenient point to consider. That comes in at about 76.50.
Okay, so a lot to consider here, especially considering we
I
are
gotta look
still
at the
on a
evidence.
52-week low. I do want to point out, but well off of highs as well. So a bit of a mixed picture for block today, of course, ending on a pretty downbeat tone for the
Okay,
block.
here's your A+.
Now let's look at trading this name, and of course, just for example purposes only, Alex, walk us through the thinking here. Leaning into, unfortunately, some of the pressure today, and for an example trade, leaning more bearish.
Yeah, and the market's moved a lot, so I would doubt that the prices are still going to be the same. But at the time, the stock was over 70 a share. The market wasn't quite as ugly, but we looked at a bearish strategy. There wasn't a whole lot that was provided by management in the numbers to really get investors excited. Rick went through the chart. There's certainly some technical damage that was done. He mentioned that 65 level, which was the volume point of control. That could act as perhaps a bit of a magnet. If it does, it actually lines up perfectly where this one.
Should I go ahead and go big time here?
See on the screen. Buying a put vertical, Jenny, it goes to the March 7th expiration, which is 2 weeks from today.
We got 3 white soldiers finally showing up.
Vertical for $1.50. Now this would be comfortable up to maybe $2.50 for a price.
I think I will.
Equal risk to reward, but at $1.50 you risk $150 with the chance to make $3.50.
I think I'm going to do it.
At $68.50, you just simply subtract that.
Prepare ye in the name of the Lord.
Long strike, which in this case is 70. So. It does feel a little bit uncomfortable maybe for some.
Will you take my 115, please?
After the moves happened, but oftentimes post-earnings, the reason the moves happened is because of the
Don't be shy.
fundamental update.
Well, and that couldn't be more true in this case. And right now, I think that guidance was really a huge concern. So that if you're a believer in more pessimism, and as we know, bottoms can be very difficult to call, this just leads into some further weakness here for block. Now, next name today is Domino's Pizza, an entirely different world. A name that has earnings out, of course, Monday morning. So
I'm afraid to buy it because it'll
last
dip.
day to put in an example trade, but. When looking at this name here and some of the volatility of this followed earnings events, I will say they've done a good job shifting the perception on Domino's Pizza, because for a while they were not able to do things with comps. They were closing some of the international locations. I do feel like tone has shifted slightly, Rick, but a name that is still up about 10% this year while also being well off of 52-week.
May I help you? This is your outer spirit. Do it. Do it by the dip. This is your outer spirit. Go ahead, Jim. Do it. Calls the lotto. The 60-80 strike. He got in at 120. I hope it has a hike. Let's go to the upside. I beg you, please. I got in at 120. It's gonna knock me to my knees. Knee to my knees. Knock me to my knees. Day's 21st. The strike was 60-80. I got in at 120. Struck me to my knees. Knocked me to my knees. We need a spike before I take a hike. We got 3 white soldiers and consolidated on the second. I'm in, oh, what a sin. Spark, am I a good singer or what? Mike thinks I am. Sure, he doesn't rhyme. Give it some time. I will make it rhyme. I promise you now. I promise you now. Charles Manson is my uncle. Can't you tell? Him and I sing the same, and now we're living in hell. Okay. Today's Bible verse is heritage, an inheritance. Who wants my inheritance? That received from parents or ancestors, maybe spiritual or material. So heritage related to inheritance could be both spiritual and material. So who wants my spiritual influence? Subscribe at Washboardjim at AOL.com and send him $100. Come on, break out. I'm in the calls. The 60-80 strike. In at 120, waiting for the hike. Hike it up. It's pretty far out, ain't it? I was at 155. Okay. This is going to be the trade of the day. I just feel it. Randy. Taking another risk. The buyer's got to step in sometime. No, please. We're at 125. Now we're back to 120. What the fuck? Come on. We're having technical difficulties.
This song was a favorite of that really famous and great American Abraham Lincoln. When I was young, I used to wait on master and give him his plate, and pass the bottle when he got dry, and brush away the blue-tailed fly.
Jimmy crack corn and I don't care. Jimmy crack corn and I don't care.
Jimmy crack corn and I don't care. My master's gone away. And when he'd ride in the afternoon, I'd follow after with a hickory broom, the pony being rather shy. By a blue-tailed fly.
Jimmy crack corn and I don't care. Jimmy crack corn and I don't care.
Jimmy crack corn and I don't care. My master's
at a double bottom.
One day he ride around.
This has really been my worst day ever.
Flies so numerous they did swarm. One chance to bite him on the thigh. The devil take the blue-tailed fly. Jimmy crack corn and I don't care. Jimmy crack corn and I don't care. Jimmy crack corn and I don't care. My master's gone away. The pony run, he jump, he pitch. He threw my master in the ditch. He died and the jury.
Man, it's really a bad day.
The verdict was the blue-tailed fly.
Jimmy cracked corn and I don't care.
Jimmy cracked corn and I don't care. Jimmy cracked corn and I don't care. My master's gone away.
Man, they got a low support down here at 60.10. Another $20 drop.
His epitaph is there to see. Beneath this stone I'm forced to lie. Victim of a blue-tailed fly. Jimmy cracked corn and I don't care. Jimmy cracked corn and I don't care. Jimmy cracked corn and I don't care. My master's gone away.
Was that a great song choice or not? Did you like that, Spurk? Still showing puts? SPY hit my support. The buyers are not stepping in today at all. Jeez. The fat cats are back. It's my worst trading day of the year. I really thought them three white soldiers were going to pull some weight here, especially when it pulled back to the second one. Well, I'm going to stay in it a little longer. I'm kind of too far out of the money again. They're losing ground fast. VIX hiked up to a new high at 18. On average, that's about 2.5 points higher. Ew. Well, I got some good news today. I bought avocados for $1 a piece. Sparks, you didn't like that song? Golden sweeps are coming in at 598 on the puts. And you're still bearish. Well, that's one confusing chart, Randy. Is that your VWAP chart? We need a breakout. Can I have it? I had 601.92. What'd you have? 601.70. Back to $1. I'll go get me some water. I'll be right back. Is Caroline on today? Caroline?
I elected for a weekly cycle, one, to reduce the time to expiration, but also the March monthly cycle had only $10 wide strikes, so this allowed us to be a little bit small.
Caroline, could I have some mouth-to-mouth resuscitation, please?
Former low for the year around 240 as the support level. You'd want your strike, if you wanted that support level to be sort of your guiding post, to be below that, right? It could test the level, and you want it to be able to hold that and not test your trade. So 235, 230, $1.50 credit, probably closer to $1.70 now in real time, but looking at it as if it's $1.50, you can make $150 on $350 in risk, break even $233.50. So a little bit of cushion, let's call it 3% or so below that support level to the break even.
And today, I know making a pretty substantial move to the downside today. Now we're about 30% off of recent highs of around $349.75 a share. We're also remaining off of lows by almost 67%. So while today's candle does look starkly red, I mean, we've slipped below the 50-day simple moving average. We are still hanging out above our 200-day moving average and still actually up almost 43% now on a 12-month basis. But down about 11% now week to date. So some volatility, unfortunately, to the downside that has weighed on these crypto stocks despite ending on some good news. But we'll leave it there for our FOMO segment. Now coming up next, time to talk geopolitics and your portfolio, how some of the overall policy changes of the Trump administration could be impacting your longer-term investments. We'll discuss that more with Preston Cherry coming up next.
Oh, 150. Okay. We're doing it. Damn. We dropped to 120 just like that. This is a tough day for me to get out of this trade. It was just at 150 again. That's an inverted hammer, so I don't look too hot.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the ways in which geopolitics or policy risk could be impacting your long-term investment strategies. And joining us for this fun conversation on a Friday is Dr. Preston D. Cherry, the CEO of Concurrent Wealth Management, as well as the author of Wealth and the Key of Life. So thank you so much for joining us today. And we've got a great conversation to talk all things, the T topics, that being Trump, tariffs, trade wars. I mean, just probably to name a few of the T's, but start us off here with what really you're watching right now as far as policy risk is concerned, because that's really just the tip of the iceberg for, I think, so many investors' concerns right now.
Oh, wait again.
Yes,
I should have got out at that 150, but I didn't.
Policy, people are spilling the tea all over social media. Folks are worried about their portfolios and their pockets, and seeing if this some of this uncertainty and how policy and geopolitical risk is being managed is going to affect their household. Real questions about the employment, whether it be the tariffs with inflation, and also about the long-term portfolios. These are real questions.
These are emotional topics for many, Dr. Cherry. How does one balance the need to try to take emotion out of decision making when it comes to finances, and the fact that these are, truly stressful times for some, exciting times for others, somewhere in between for many as well? How do you separate those two things when you're trying to make decisions when it comes to your finances?
Indeed, Alex. Politics pander to folks, whereas policy actually affects people. So if we're separating those two constructs, then we get to look at what are the policies that are affecting our households, rather than listening to a lot of the noise out there, whether, like you said, whether you're on whatever side of the aisle that you're on, it's still noise, and politics are what they are. Some of it's propaganda, some of it pumps up folks, some of it's problematic. But the policies themselves, if you look at them and say, how are they affecting my household, then that may give a little bit of a pause to separate the policy from the propaganda.
Okay, so how do you go about finding through and parsing through the areas of opportunity within, that added volatility and the added, I think, risk to the unknown, frankly, because right now as we await more clarity on some of these tariffs and the future of inflationary prices, for example, eggs have been a massive concern and one that everyone seems to be talking about. How do you go about finding the areas of upside there?
Well, unfortunately, eggs, and I like me some scrambled eggs now.
I do too, baby.
Eggs are not coming down. Housing prices are not coming down. Now, inflation year over year is somewhat tepid. We are at about 3%. The Fed would like it a little lower at 2.5 or 2. It's still affecting households and things like household insurance and the grocery store. Fuel is still up. That said, prices are still elevated from pre-COVID prices. And folks are anchoring into those pre-COVID prices, and they're not going to come down from that. That said, if we can keep inflation the way it is and get some consumer sentiment for a little bit longer, then people will have less worry about their pockets and also have a lot more time to adjust. But right now,
it looks a little green.
It doesn't feel good. And then when you introduce the uncertainty of are goods going to be constantly coming from other countries, that doesn't do both.
You look about like I do right now.
This is an interesting topic because long term, I think, one of the best inflation hedges, if not the best inflation hedges, has been to be invested, and to be invested particularly in equities. But when the pocket gets a little bit tight, when the budget gets a little bit constrained, it's hard to set aside that money to invest, to try to keep up with the price changes. So how does one balance the need both to set aside savings, invest those savings, but maybe in a time when the budget's a little bit tighter and the maybe risk tolerance is a little bit tighter?
Indeed, Alex. I think it's a time to protect near-term portfolios and not panic. And what do I mean by that? Stick to a strategy that is going to average out your prices over time. And right now, the market's doing fairly decent as far as year-to-date, couple of percent up a little bit. We haven't, the fear index, the VIX, hasn't crossed 20. I think it's touched it one time this year. Consumer sentiment is still decent coming out of Michigan. That said, when you're talking about your portfolio practices, keep investing over time, because the market, when it's performing in the middle, kind of waiting in the waters, or dipping a little bit, I mean, you are buying on sale. It's not timing the market, it's time in, and getting those average prices, dollar cost averaging over time could be key. And also too, finding, if you do have spare cash on the side, it can be opportunistic in your concentrated part of your portfolio to find some discounts in the market.
Okay, so speaking of those discounts, I mean, what do you recommend for keeping with this somewhat like risk-off approach, and like areas of the market that are seen as more of these safe havens or relatively low volatility areas to invest in?
Yeah, Jimmy, I think there's a couple of areas that have been ignored the last decade. A lot of folks have been pushing back on, as far as domestic folks, on international investing, because it's been a drag on the portfolio, and the S&P has been doing fantastic, particularly when you're talking about the Magnificent Seven. Right now, with geopolitical risk, or even some of this risk in the market, it may be an opportunity to reallocate towards the international markets, those that are having those opportunities for growth, like India and a couple other folks. You don't have to segment to a country, but just potentially considering a lower cost entry point for international, since it's been down over a decade. It could be an opportunity to reallocate portfolios in a diversified manner.
And so that's an interesting transition to what I was going to ask you about. So much of this idea of long-term investing traditionally has been sort of this 60-40 allocation, where you're invested in fixed income, which was in the longest bull market, something like 40-50 years, and then 60% is in equities, and that can be some mixture of international or domestic. I think largely it's been kind of a passive S&P 500 like investment for many. But in this time where you have interest rates higher for longer, perhaps, inflation concerns, how does the fixed income aspect of the investing fit into a portfolio, or is that something that you disregard altogether?
It just depends on where you are in your life cycle and your risk profile. There's a lot of folks that simply just do not like bonds. I mean, they fared well in a 60-40 portfolio for a few decades, and now now that rates are high, people are trying to lock in some of those low risk returns on bonds, because interest rates or rates on those bonds are a little higher. That said, we're going back to fundamentals here. If you have a longer term horizon, then you can withstand some of the movements in the market, even some of the lower ones, and you can have a higher return or allocation to equities. That said, if you don't like bonds, and it's choosing something that will act differently than equities and give you a little bit more cushion, maybe something low volatility. Real estate funds are decent, although they're tied to the interest rate market right now. But that said, some of those sectors are doing well. So what are you going to invest in that's going to give you a little bit more defense? If you're not going to choose bonds, choose something that is going to be non-correlated to equities.
Yeah, and a good point there. And the importance, I think, of diversification has now become more present than ever, especially given the unknowns within the policy and the Trump administration. So great conversation and great place to leave it. For us both, I hope that we start to see some moderation in egg prices, as I'm also a scrambled egg fan myself. But thank you so much for joining us today. It's Dr. Preston D. Cherry, the CEO of Concurrent Wealth Management, and of course the author of Wealth in the Key of Life. Now, coming up next, I'm going to talk another area that could be hit also by some expected tariffs. That's Celsius, although not making a downward move today in the slightest. We're up 29% on the session following its acquisition news of Alani Nu in the fourth quarter. We'll discuss that more when we come back.
Never heard of it. Jim. What am I going to do with you?
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30. Joining us now is George Tillis, the senior markets correspondent for the Schwab Network, discussing Celsius. George, I know you were on the next segment. We were breaking these results live, and it got kind of complicated because this merger, or this acquisition rather, dropped right before, and it kind of led to some delays and things. But give us a summary of what your takeaways from all the news in Celsius were.
Well, I think obviously the market thinks this is positive or suggests it's positive, and I do as well. And the reason being is, Celsius, which we know is a functional, beverage manufacturer. The company did report earnings. If you take a look at the report from an EPS and sales standpoint, they came in with 14-cent profit, and then of course the estimate was around 10 cents. Now that was down from the 27 cents the company reported for the same quarter last year. So they actually reported about a 47% decrease in EPS for the quarter, and sales were down about 4.3%, irrespective of the fact that they did beat, coming in around 332 million versus the 327 million estimate. So right on the sales were down 4%, earnings were down about 47%, and what's really important here is the trajectory of the earnings growth.
Oh, I got to
basis.
close that in the car.
Irrespective of the acquisition of Lightning U, which for all intents and purposes is expensive relative
I'll be right
to
back.
market cap. Market cap right now is around $6 billion. The acquisition is about $1.8 billion. But irrespective of that, quickly, is the fact that if you look at the earnings estimates, even prior to the release of earnings and revenues, they're expected to continue to move higher on a forward basis for the forward 4 quarters. So just that alone was suggestive that this is potentially a stock that had been oversold, considering it's down in the last year, I believe, around 50%. But we know still in the last 5 years, it's still a fantastic growth story with the stock over 1,400%. Now, the acquisition is important because the nature of what they're reporting here is, first off, it's a complementary business. Second off is the timeline in which they're going to be accretive for both earnings and revenue. So the earnings and revenue is expected to be accretive to Celsius and Alani as a combined business in the first year. The other thing is, if you look at the other portion of this news, is they do expect cost synergies around $50 million. Now, if you do look carefully at the last 4 quarters for Celsius, the company netted on about $1.4 billion in sales, around $145 million in net income. Now, make an assumption here that $50 million goes just to Celsius shareholders. That's the cost savings. That's about 30% of what the company returned to shareholders last year. Now, I'm not saying that's the reason exactly why the stock is higher by close to 30%, but that's an indication that this is a very accretive acquisition. So, absent the acquisition, things were starting to move in the right direction for Celsius. Adding on to this this element to the financials and the core business, this complementary acquisition just increases the potential here for earnings and sales, and it makes a lot of sense, and that's why the stock is higher.
So, George, I was seeing, I mean, like the optimism regarding the commentary following the Alani Noon acquisition, as well as just like their overall expectations now for 2025, but they didn't actually give specific earnings guidance. So was that just entirely overlooked? I mean, was this deal enough to then offset the fact that there were things, I think, that were still flawed within this report?
Yeah, so that's the thing. I think it's really uncertain as to the levels of both earnings and sales that will be accretive to the combined companies going forward. But we have to make an assumption here and use their word as maybe good faith, that they do expect there to be positive accretion both in earnings and sales from a combined unit, combined companies in the first year. And like I said, they're expecting about $50 million in cost synergies in the next 2 years. So that is enough information to cause shareholders to pounce on this news going forward. So this is a starting point potentially for a major trend reversal. It doesn't necessarily mean it will continue, Monday from here, but nonetheless, just breaking down the profit profile of Celsius as a standalone business based on estimates going forward. It seems to be that the company was ready for potentially a bounce organically, but the acquisition adds to that as well.
Yeah, and I think that a good place to leave it there, George, is we are still up about 30% despite the overall market, being pretty consistently to the downside. I appreciate it, George Chellis, but that will also do it for Alex and myself for Next Gen Investing for this Friday, and of course for this entire week. Thank you so much for tuning in. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I know it.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm all.
Oh boy, let's see what. Oliver?
stocks moving to session lows. It's been a very tough day here on Wall Street. We have a big show for you today. We'll be joined by the CEO of Flushing Financial and get his take on the economy, take us through the company's fourth quarter earnings, so all about the bank. And Lisa Schreiber from Gradient Investments joins us to give us her market outlook and a couple of names that she has on her radar. You'll want to take some notes. And consumer sentiment data, of course, coming in. And there are some worries about more inflation ahead. Here's a look at the markets now. As I noted, a tough day on Wall Street, turning stocks into the red for the day. And
Dow down now 700 points.
1.5% at 6,031 after hitting a couple records this week. The Nasdaq 100 also hit a record earlier this week, but today down over 1.5%. The Dow Jones Industrial Average down 707 points. Here at session lows, you can add United Health to the problems of the Dow Jones Industrial Average in particular.
Oh, UNH.
And the Russell 2000 down 2.6%. Oil and gold are mixed. Gold has now turned positive as the safe haven, right? People are running back to gold. I mean, earlier today and for a time, it started to sell off as well from the recent highs, but now people going back to gold here up about $2.
$70 dip.
49, that has come back down about $2. 442, so the 10-year bond yield continues to fall today. Again, more about safety, and the dollar index is well off the highs. It's at 106.53. That's where we stand, 96,335. The Bitcoin risk on trade is now off. Right, we were right around 100,000 earlier, and that is now pulled back. So it's down 2.5%. For some of the biggest stories in the markets, we welcome in Kevin Hinks, host of Fast Market here on Schwab Network. What were some of your takeaways? We had so many different prints today. We could start with the PMI print, for example. What stood out there for you, Kevin Hinks?
Yeah, Kevin. Hickey.
Yeah, hey, Nicole. Yeah, you know, the market started with the UNH news, and then we got our economic data that showed, in terms of the PMI composite, the services. You know, when you see second-tier data like PMI composite, you look for anything that catches your attention. And in this case, it was the services index that dropped from 52.8, the final 52.9, to 49.7. So the services part of the Purchasing Managers Index composite dropped below 50. That's fairly significant. Now, the manufacturing was 51.6, a bit higher. So manufacturing doing a little better, services doing a little worse than expected. The composite was 50.4, a miss there based on the big miss on services. Then we got existing home sales with the 30-year mortgage around 6.92%. Not shocking that existing home sales, people that would be maybe leaving a 3% mortgage for a higher mortgage, those numbers are all down. 4.08 million existing homes. That's less than 4.24 a month ago, less than 4.16, which was the consensus. Month over month, down 4.9%. Year over year, though, still up 4.8%. So another weak housing number. Remember, we get more housing data out next week. We get a lot more top tier economic data next week with durable goods, second look at GDP, and then the all important personal income and outlays that we'll get next Friday, Nicole. So market, not a really aggressive sell-off, although the risk-off assets have picked up. The VIX is higher. Bonds are now rallying, which are bringing the yields down. U.S. dollars higher, and you mentioned gold already higher. So risk-off assets picking up here on the upside, Nicole.
Oh, yeah, without a doubt. I mean, and the existing home sales coming in and showing weakness there. I mean, that just continues the slump, the concerns about, you know, affordability, higher rates, not enough inventory, those kinds of things. So that slump continues pretty much. Now, granted, it's still been pretty good. It's not terrible, but it shows that there are some tough hurdles in the world of housing. Coupled with the consumer sentiment, I mean, when you think about folks, they are nervous about higher costs, not only for like insurance and taxes and things like that they may have to pay, but how about inflation? I mean, that's a big part.
Well, the University of Michigan consumer sentiment data came in where with the consumer sentiment came in at 64.7. It's a pretty big drop from last month. And inflation expectations for 1 year, 4.3%. That was unchanged. And the 5 year went from 3.2 to 3.5%. Now, I personally am a bit skeptical of the University of Michigan sentiment because I don't think the data set is big enough, but the market certainly listens to this data point, so it has to be respected, Nicole. But yeah, they're seeing lower consumer sentiment and higher inflation expectations, Nicole.
Right, that's the whole thing. And I mean, even Walmart gave us the outlook that was cautionary and said they too expect inflation to go up 1 to 2%. So there is this sense, particularly also with tariffs, that could increase prices, or prices might be passed on to consumers if firms or companies have higher costs. Thank you, Kevin Hanks. Great to see you. And next week we'll have more. Right, as you noted, we'll have GDP and durable goods and PCE. Let's get the bigger picture. Eddie Gabor is here, owner of Key Advisors Wealth Management. Thank you for being here. How are you feeling about the market, particularly on a day where it's risk off? You see a lot of selling happening and people are running to the safe havens. What do you think?
I don't think this is any different than the volatility we've seen so far in 2025. This is going to be the story for this year. So I think really on a day like today, there have been a lot of people very bearish this month that have not participated in this market. This gives them a second chance to get into some of these names that have sold off from their highs. We're still not that far off from the all-time high. So to me, today is just a buying opportunity for those that have missed the run so far this year, because I think the setup for March and April is going to be pretty good.
Right, understood. I know you have a few names that you own and sectors that you own because there are certain themes that seem to be working, right?
That's exactly right. And one of our main theses going into March as to why we think it's going to be a pretty strong market for the riskier assets is, I think when we get this inflation data that we're going to get for the month of February that'll be reported in March is going to show a moderation in inflation. I don't think that trend will last all year, but the market will react to that news that's just for this month. And I think that's going to be very positive because that's going to put rate cuts back on the table in the bond market. That's going to keep the 10-year under 4.7. And because so many people are bearish, they're going to be forced, in my opinion, to buy. And I think you're going to see names like NVIDIA and Meta and Amazon and those types of discretionary names that are also getting beat up today could go significantly higher and catch a bid. We put cash to work again today, and we're now pretty much fully invested for the most part. We have moves that we can make if we get more surprises post NVIDIA earnings. But February is the buy the dip month to set yourself up for a strong March and April.
You think NVIDIA earnings are going to help the market, hurt the market, or be some sort of moment in time?
So we told our clients today, we sent out a video to clients today and said, we have no idea how that market's going to react to NVIDIA. We know it's going to move it in a big way, one way or another, but it'll be a 1 or 2 day event. Our thesis on NVIDIA is if we think the S&P is going to go to 63 or maybe 6,500 in the coming months, which is what we think will happen.
What?
That name is such a big percentage of the overall indexes. It's really hard mathematically to think of a market that's going to go to highs and not take the most important name with it. So we could see revenue growth slow. To me and NVIDIA, the biggest thing is going to be on the earnings call. They're going to have to answer the deep seek question. And if they knock it out of the park, you could see that name go ahead and take off and go ahead and finally break that 150 barrier that seems to be a resistance level for that stock.
Right. I mean, when you think about the other Mag 7 names, I know you were also looking at Amazon, right? For example, you like that name.
We do. We like Amazon and we like Meta. So NVIDIA, Amazon, Meta are the top 3 names that we're buying right now, the Mag 7. Amazon is at a pretty good price point right now. I didn't think it would get to this point this fast, so we were glad we bought some of that today. And Meta, I mean,
Bought it today?
Is one of the companies that have actually monetized AI.
Are you
They've got
nuts?
over 1 billion viewers on their social media. I mean, they dominate that space. And it wasn't too long ago that stock was at 740, and now it's taking a breather back down under 700. So under 700 and today's price point, we're comfortable with that risk reward. Again, I think the setup is really good for the next couple of months. So we are buyers today.
No.
Yeah, I mean, today on a buy on the dip mentality, right? And before I get to financials, you were looking at the XLY. You thought this was a good way to get some more exposure to some of these names, right?
Yeah, so XLY, that's really a trade on Amazon and Tesla. Those are it covers a big percentage of that ETF. So for investors that aren't comfortable or have the risk tolerance for individual stocks, ETFs are a great way to play it. We play it both. We have the XLY in our ETF strategies that are tactical and shorter term in nature. And we also own Amazon and Tesla and some of our other holdings.
Right, understood. So JP Morgan financials, you do like that group. What's going to drive financials higher?
So
we already have my support.
There's going to be a couple of things, and we did buy more JP Morgan yesterday. I think it was.
Now I do have Meta at my support right now, but I'm not going to buy this over the weekend. I'll wait till Monday, but it's definitely at my support. Do you hear me? Real close to it. I was 8 cents off. I really like it here. It's what I called yesterday. Nobody believed me. Only Mike. Mike believed me. Didn't you, Mike? Say yes. Will power hours save the market? Let me find out. Hello? This is the power hour ghost. Will you... I think it can. But still got to be cautious over the weekend, Washboardjim. The fresh Wuhan virus is coming out. Well, one thing that Joe Biden promised us was 4 dark winters, and we had them. But now we've got the golden age. Just because we have one day of pullback like this doesn't mean the world's coming to an end. Because we've been on one heck of a run, right? Every dip has been a buy for the last 4 or 5 months. Fat cats have been wanting to bring this market down some so they can jump back in. You listen to one right here. And he's right. Meta, I mean, it's at a good spot. I'd almost swing this sucker. But if you look at where it come from on a 3-year time frame, you probably wouldn't want to take the trade. I'll show you. All the way from $88 all the way to $740. So that's a 8.5x trade. Makes you wonder, right? How can he still be calling this trade out when it's up so darn high? And just the last month and a half, it come from $600 all the way up to $740. We did pull back to the top of the channel, and I do like it here. If I was a little, if I had more balls. Right now, my balls are hiding. Ding, ding, ding. Uh-oh. Maybe that's the reason for such a dump. A new freshly baked virus. Humana is what they put the blame on first. So something happened here with Humana today. No longer business as usual for United Healthcare. The entire healthcare industry heard on the street. Report the DOJ is probing its Medicare billing practices. I'm telling you, things happened during the last 4 years that are incredible. What's that? Sonny Hostin's husband might go to jail for insurance fraud. I heard that guy that shot that CEO of what was it, Humana? Has had $500,000 donated to his case. People call him a hero for killing someone. If it was him. There's right here.
Trade here.
Oh, not UNH. United Healthcare is what I was thinking of.
Activity versus the 5-day moving average of options volume. So elevated activity
United
in this name here that actually is already, profitable.
Yeah.
All right.
Now see, this one looks good at a support level that we hit today. We hit the double bottom on a 3-year time frame. You see what I'm saying? I mean, if I would have saw that earlier, I probably would have jumped in calls. I know I would have. I would have jumped in them for sure.
90 strike puts at a 15.49 debit. So once again, a large dollar amount paid. This one was a $3 million debit here for this 28-day duration bearish trade here. Same thing as the last one here. It looks like this was indeed an opening trade because there's no matching volume. There was very little open interest starting the day here. So it seems to be a position that someone was putting on here. The max loss is the debit paid here. And for this bearish trade, for every dollar that it moves beyond that break even, it would gain $200,000 of profit here. The trade size, it was about 5% of the total market here, so a notable outlier in terms of the typical volume for this name. The sizzle was about 2.5, so elevated activity once again here, and that break even is only about 3% to the downside. The expected move projects a possible move of about 18%, being the range there. So well within the possibility there for this particular trade based on our shaded area and our risk profile there.
All right, thank you for that. And last but not least, we turn our attention over to Old Dominion Freight Line and ODFL, which is down almost 7% today. And what are the opportunities that people are trying to get in here? You found a neutral to bullish trade.
Yeah, and perhaps not a household name, this freight company here, but a member of the S&P 500. And once again, not really any specific news here in this one today, but a rather severe downside move. This trade in question, minus 1,674, March 21st, 175 strike puts at a 961 credit, comes out to about a $1.6 million credit with 28 days duration here. Now, this one, I want to be a little careful here. I really couldn't tell if this particular trade was an opening or closing trade. There was not a lot of activity in this name before today, but today, 70% of the total market, the total options volume was in this particular option for this name here, and this was the biggest single trade that I could find for this option here. So a lot of activity here. This particular trade was about almost 20% of the total market. The sizzle for this name is almost 45 versus the 5-day moving average. So very, very high activity relative to what's normal here. The break even for this trade, 165.39, about 10% to the downside here. So if this is is indeed an opening neutral to bullish play here. They've got quite a cushion here. However, the expected move would be about 12% to the downside potentially. So not completely safe here, but one that what caught my eye for sure due to its outsized nature.
Right, and that often you always hawk those out for us. Rick Ducat, great to see you. Thank you for taking a look at all those names. We appreciate that here on Options Corner, looking at real
That's right,
options
baby.
trades. Thank you. Coming up next, we're joined by the CEO of Flushing Financial. Taking a look
Well,
at this bank,
we got another-
the economy, lending,
Got
housing,
new lows on
all the
SPX.
recent earnings that the company had to tell us about, and we'll get into it. 1 year stock's up about 7%.
I always say I have that feeling that we're really going to get something here. If this thing dips down to this low, that this here ready, set, go says, I'm buying it. That's another $12 dip. And I'm going to give it another shot. At $6,010.08. You hear me, Randy? I'm going to do it. The 60-35s. Yeah. Where'd Mike go? Mike?
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access.
He renamed himself Tennis Balls?
All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy.
He's got big balls,
With a
huh?
wider range of opportunities,
My balls are
you
hiding.
can trade brilliantly.
My balls are too scared to come outside.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage.
Ain't big
insights,
balls
and smartest
Elon
minds
Musk?
on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Well, big balls is Trump. I thought it was Musk.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab.
Big
I can
balls.
get full-service wealth management, advice, invest on my own, and trade over
Oh,
this one.
boy.
No, Carl is the only front man you need.
Oh, I gotta take this.
You trying to
call.
be funny? Mike, you wait until these are down here at 6:10. We buy the calls.
Schwab.
We got $8 more to go.
Knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pedalides.
I'm going to go into the kitchen and I'm going to make me a hot chocolate.
Down 773 points. A lot of movers. You have some
Then I'm going
winners
to come
and
back and I'm
losers
going to buy
today.
these son of a
I'll
guns.
start with Akamai though, because this one's selling off in the biggest way. In fact, largest one-day decline for this name since 2017 after issuing weak guidance for the upcoming year. The cybersecurity firm cited headwinds from TikTok. largest customer for content delivery network services as the catalyst for the weak outlook. Akamai also anticipating reduced revenue growth from plans to move nearly $50 million of its cloud computing business to partners. Now you have on the other side Booking Holdings. This is a real winner, moving higher today. Did beat the street estimates for both earnings and revenue. This travel company saw growth of 13% for room nights booked and raised its quarterly dividend by 10%.
We're now less than $8 from my support
Share
level.
repurchase program of up to an additional $20 billion in January, and shares are up 40%.
I'm going to start my business decision real soon here.
Now it's time for our CEO Spotlight here on the watch list, and it's our pleasure to bring in John Buren,
Hello.
CEO of Flushing Financial, looking at the world of financials and banking.
Miss Titty, whatever, Titalina. I love your name, by the way. Miss Titalina. Titalina. We are less than $7 away. Rob, I want you to watch this. Pay attention. You ready? I'm going to start a business decision here. The crowd's going wild. Jimmy's going to give it another shot. I think it would be a great business decision. Jimmy's going to scalp these babies. February the 21st. What is that? Oh, yeah. Strike. 60 35s. I just need one more little dip. Stock gods, I paid my taxes today. I tried to get the room to help, but nobody volunteered. It was the biggest check I've ever wrote in my entire life. So please reward me today. I just want one more pullback. That's all I ask. And this will be the 6th week that I've gone to church. And I've been reading to my pupils in here all about the Bible. In fact, I'm going to read one to you right now, Lord. Tell me what you think of it. It's called Learn. There you go. Come on down. Growth in knowledge and understanding. Matthew 11:29. Haha, here it is. Triggered. Triggered. $2.20. I'm going to make a business decision, Randy. I've waited for this moment all day long, and the Lord has answered my prayers. Rob, you paying attention? Say yes. Okay, this is my last trade of the day. We're at 295 now. Let's get to 5. We're at 310. Break it. $340. Break it. Give me $5,000. And Lord, I guarantee it, I got bigger balls than Big Balls does. We can do it. I guarantee it. We're at 360. Take me to 5. Ooh, what the hell? Break the 9. Come on, Big Balls. We need to break the 9. Titellini, you're beautiful. See, there's no way I could date a woman like that because she's too much woman. I wouldn't know what to do with it. Damn it. I was up. Okay. I'm going to walk into the kitchen. And I don't know if I put on my water to stay warm, but if it didn't, I'll turn it back on. And I want to see the spring break to $5. I've been put on the spot here. Stock gods. I about made up my loss there when it was at 360. I did make it up. Oh, now we're back down to, here's my entry. Make OPEX days great again. I'm going to. Whatever that means. Shit. Options expiration. I just want this thing to bounce. Oh God, I was up.
Nothing for you.
He's dropped so hard. Now I'm 5 notches out of the money. Was 6. With a new low. Golly. Back at 210. SPY hit my 599.53. $599.53. I charted that earlier. You all were here. So it's very important we start to rebound. I'm back to green again. Give me $5. It got down to 163. There seems like there would be some people wanting to swing this over the weekend. But that consumer sentiment might be, you know, I just think the numbers that are going to come out of that we've been getting are going to be a little bit more accurate than what we got during the Biden administration. If you remember the unemployment fuzzy math that we had there, almost 1 million miscounted in 2024. 1 million jobs overestimated. And they didn't come out and tell the truth until about 3/4 of the year. Until after Biden lost the election. Okay. We got a little bit of green going on. I'll be right back. Time to check the blood pressure. Ooh. I'll check my blood pressure and watch the stock bounce up. Get all excited. The 9 is above the 21. That's one little good sign. Mike, snow's down $8 today. God, 113 over 75? You gotta be kidding me. A little bit tight. 113 over 75. And the heartbeat was at 78. And the time is 1:51 p.m. So I got to see if that's right or not. So I got to do it another chance here. Oh, we're at 275. Things are happening. Do I got to read another Bible verse? Jesus. I want $5. Take it to 602. 601.92. I'm up $600 right now. Rodney, don't chase. Yay. $121/77 sounds better. $121/77 with a heartbeat of 79. Perfect. 153. $222. Well, that ain't the 21. That's a different. That's a different moving average. Fuck. Back down again. I think I'm getting greedy. keeps teasing me. This is about the third or fourth time we've got down below $2. Target will be the 200. That was very unprofessional. I do my burp sound. They sound pretty good. Magnificent. Would you give me an A+ on my burps? Johnny, you'd seem like the kind of guy with great burps. Okay, we're back to 280 here. I'm not going to give up. I want this sucker to break out. I did put it in the room, didn't I? Yes. Mike is fed up with toss.
Join Planet Fitness today and save $28 or more. Just $1 down, $15 a month. Deal ends February 28th.
No, I did not. I make the best soup. Here we go, back under 10-2 again. Fuck. So that's a good couple times I could have got out with at least 1,000 if I'd scalped him. It's now power hour. It's 3 o'clock Eastern time. It's the worst trading day I've had. I could have sold them at $2.90 and $2.80 at two different times when they went below $2. So we got Advanced Micro Devices in discussions to sell data center manufacturing plants for up to $4 billion. That's not good news, I don't think. That's not good news at all.
Read pretty well by the street. I mean, we've been basically below highs in this name pretty consistently.
The beverage sector's up today.
It's also weighed on the entire staples industry. It hasn't necessarily just been a pain point of Celsius. So all these names are reeling, but an acquisition today fueling definite upside.
Yeah, I mean, shares up almost 30% right now, but still 67% below the 52-week high. So, I mean, it's impossible to actually know, Jenny, but do you think that this big move higher, based on what you've been seeing in terms of the numbers, but also analyst commentary, has more to do with the deal helping Celsius expand its market share, especially to women, or is this just that the numbers looked good and the outlook is even better?
I would say that the former rather than the latter, just my own 2 cents, because they didn't even give earnings guidance, like specific earnings targets were excluded from this report, and that's something that usually you get punished for. So the fact that we were just completely skating by that fact and looking at, hey, this pricey but sure maybe lucrative deal with Lonnie New, I think that took the headline center stage, no doubt, because there was still reason to have some pause about their financials, but a lot of that is because we don't actually know how creative this deal will be to their earnings and revenue projections. So that's part of the reason we didn't see specific guidance.
Okay. All right. Moving on to your winner of the week, because it's not a winner today. That's Supermicro, which has had this really impressive run higher, giving up about 6% of those gains today. We know next week is a key week for that the February 25th deadline. I should note, though, Supermicro in pretty good company in the red today. I was taking a look at my AI watch list. Every single name on it is lower today, and every single one of the Mag 7, including Apple now, is also lower. So bad day for tech, but fill us in on your thoughts ahead of this February 25th deadline of potential NASDAQ delisting.
a bad day for tech, but I would say that it's been a pretty solid year thus far for Supermicro. I mean, a name that's now up around 96% just this month. I mean, that in itself is ridiculous, especially when you consider the fact that we're down about 5.75% just on today's session. We're off of highs by 55 roughly percent, while also remaining off lows by 224%. I mean, you just can't see this volatility in any other name. And frankly, there's actually some things I think to like about this stock as we go into that key deadline of course, the NASDAQ delisting. I've been reading a lot of notes, I mean, perhaps maybe just from the sell-side bulls, but that believe that so far, based on street commentary, based on reassuring really remarks from their leadership on the back of that second quarter business update, that we're going to see that filing deadline met. But I do feel like this is kind of a binary event. Either we see it met or we don't. Options markets are pricing in premium for next week, so we're already anticipating some added volatility next week, of course, ahead of that pretty major deadline. But valuations have actually corrected pretty sharply now. It trades at a 1-year forward PE of around 16 times. Its longer-term average is around 12.5 times. So sure, it's about a 30% premium, but relative to, I mean, historic multiples we saw, it's actually come down pretty substantially as far as like affordability is concerned. But right now, we look at its history, and I was doing like a deep dive on Supermicro's history as a company. It delisted at about 1.5 billion as its market cap back several years ago, 2018. Now, at just shy of 32 billion as a market cap, it would be the largest delisting ever by many multiples over. So this would be a pretty major event if we did see that occur. Shares have, of course, I mean, still been parabolic when you look at the long-term chart, but I do think that with this added volatility, there's some risk. So be mindful of that event. Also mindful that we have NVIDIA earnings next week to also look out for, which I can imagine on the back of all the volatility following Supermicro, that could also be a potential catalyst to move shares, even though they're obviously very
125.
Yeah, no, certainly with NVIDIA earnings finally coming up, another key catalyst next week. All right, Jenny, appreciate you breaking down those winners for us. Thanks so much.
Thanks, Caroline.
All right, now for a look at larger market trends and option strategies. I'm joined by Danny Kirsch, head of options at Piper Sandler. Danny, thanks so much for joining the show.
Thanks for having me. It's an interesting day.
Yeah, it certainly is. The first kind of interesting day in quite some time. We've been really kind of stuck in this range and
stuck in no range. You mean lower?
0.2% moves, and now we're seeing a big move lower to the downside that only seems to be picking up steam as we get closer to the closing bell. What do you make of this weakness?
So I think it's momentum driven more than anything. These very popular longs. So this is unique. I think what's happened to start the year, where long momentum and high retail sentiment are the same names. These are names like Robinhood, Palantir, Hims, and Walmart, and these type of names have all had specific news flow that has been negative, like Walmart missed earnings or disappointed in earnings. Palantir got that headline that the Pentagon is going to cut spending. You had Hims today that Wegovy might not be in shortage, so that's been a huge growth driver for them. So all these individual single stock micro data.
They call them dumps, big massive dumps.
And then that's
yes.
over to all these momentum names. So like Hood is down 5% today. I saw Carvana's down 10. And if you look at this ETF, MTUM, it's a long momentum ETF. Just look at the holdings of these. These are all the very popular story retail names that a lot of these are very good companies, but the valuations, I'd say, are a tad elevated, maybe a tad challenging to wrap your head around. And so when these names drop, for instance, a Hims down 25% today, it's still up, I think, 30 to 40% this year. So you're having this huge sort of meltdown in some of these high-flying stocks, and it's spilling over into the rest of the market. And names like even like Meta that was up 20 days in a row, down for the third straight day. So a lot of these momentum trades are getting unwound. And then the flip side, if you want to figure out what people are short, look at what's up today, consumer staples. Consumer staples are up almost 1%, and that just tells you that that clearly has been a popular short. That's outperforming, and any popular long that's done really well this year is just getting unwound, and it's picking up momentum to the downside, especially in like a lower liquidity environment. And the other thing that happened today is we had a S&P expiry, and our thought was that dealers were long calls around these levels. So the market acted very long gamma, meaning when it went up, when the market went up, dealers were selling stock, and when it went down, dealers were buying stock, and that kind of prevented any realized volatility. With expiry now behind us, the market has some breathing room to open up, and we're seeing that
Yeah.
absolutely today, where you're getting
I added on.
vol move, which we hadn't really seen outside of those 2 Mondays. But even those 2 Mondays with DeepSeek and the tariffs, those were bought all day, and today it doesn't have that same vibe.
So what's the broader read-through in terms of the market then? Do you look at this as a resilient market despite today's weakness that's still only, 2% and change away from the highs? Or do you look at this as potentially the start of something bigger?
I'd be a little concerned that this might be the start of something a little bit bigger to the downside, because you had the earnings, I don't want to say distraction, but you had earnings the last 3 weeks, which sort of acted as a buffer to broader thematic trades.
I got a 173 average.
One name up, one name down. Correlations got to near record lows because earnings are so dispersed, and the performance was so dispersed, so that was offsetting one another with the S&P. Earnings are done now, so we don't have that distraction. Now we're back to the macro story, and if the macro story looks a little bit uglier, you've got inflation at the highs, you have the Trump sort of random
even almost
hitting.
here.
You've got uncertainty around Ukraine
And
and
even
Russia,
now.
and again, more
Break
random
it.
headlines tied to that. Maybe the market gets a little more
It's either
skittish.
get out here and save
next week
grace,
we also have
or
Nvidia,
keep
which up until today has
wishing.
been trading very, very well. And if you get a soft print there amidst a weakening market, maybe we do get a little volatility. And I like this S&P chart. It's a good flag. We're up 3% this year. We're having a good start to the year. I don't think that I think like a moderate correction is totally reasonable, especially with rates at these levels. Rates haven't corrected. They're still very high, and that's been a headwind to the market performing.
So now I'm too far out of the
I'd
money.
be
That's my
hesitant to
problem.
get super long. At the same time, volatility is still very low. So the cost to hedge is very inexpensive, and I think that makes sense considering the potential headwinds. And one other thing to flag, March 1st, it's still the deadline for these Mexico and Canada tariffs, which the market is saying will not happen. We look at daily implied moves for the S&P. There's nothing particularly high priced for March 1st. It's over the weekend. But there's nothing priced for that specific event. There's a bigger implied move for Nvidia earnings than there is for potential tariffs on Mexico or Canada. So you have this potential for surprises as well that are not priced at all into the market.
So if those tariffs do happen for Canada and Mexico as much as 25%, what would pricing that in look like, do you think?
I think down 2%. We already saw this. We saw this that Sunday night. The S&P futures were down 2% before he backed off and pushed everything out a month. So that'd be
shit.
probably 2% sell-off because I think we're at higher levels than we were the last time the tariff war happened, and the market is pricing it as of today, like the 1-day implied move or the 2-day implied move for that weekend
Always
is
clean.
like 65 bips. So there's just nothing really priced in. And so my guess is I'd think next week people will be a little skittish. Could
Right.
be wrong. Obviously, buying the dip has been an incredible strategy, but perhaps this time is a little bit different because you don't have potentially strong earnings, potentially positive headlines to offset.
So if this time is different and the market could be skittish and we could see
63,
464,
464.
and we don't necessarily have catalysts to the upside because earnings season hasn't necessarily proven to be that, even in terms of better than expected earnings, where would you be comfortable putting your money?
Yeah, that's a great question. I think you want to get a little more defensive, something like utilities, maybe even buy some bonds if that's where money starts flowing. And the other thing, what's been working very well, even in a soft tape today, China and EM equities have done really well. The dollar has been weakening, but Trump has made it a point. He wants the dollar weaker. And in 2017, you can see the dollar just
You want to sell me insurance for burial.
of Trump's first term, and EM and Chinese stocks actually did very, very well. And you're seeing that today. FXI massively outperforming, A-shares outperforming, KWeb outperforming, EM outperforming. So I think that's the area that we've been seeing clients sort of gravitate to is outside the U.S. And what we've been pitching clients to do is maybe buy EM March 47 calls. I think stocks around 45 today. Just playing for weakening dollar. And again, this is if the tariffs don't play off or keep getting pushed out, and you have this forceful push against the dollar, EM should do really well. And one thing to keep in mind, if you look at call open interest and shares outstanding in EM specifically, this is not a crowded long. If anything, it's like there's no one there. It's been left for dead. And that's when we like to start looking for upside, is when no one is involved in the trade. And EM, I think, is there, and volatility is very low. So, if you wanted a barbell to live looking for a long, I think EM is very interesting.
What is
It's
it?
done well to start the year, but it's been a massive underperformer for the last 5 years. If you get some sort of meaningful rotation over the next few weeks,
EEM?
fly. And then on the other side, maybe look at some S&P puts.
Emerging Markets ETF, EEM.
Outperformance in international markets as more of a trade or more of an investment in terms of when you talk to your clients?
That's an investment trade, yes.
It's always a trade. I think it's hard to stay in these trades, but that's why we like using options. That's why we're looking out to March. You hopefully get that 5-10% explosion higher. We saw BOB earnings were incredible, and maybe that continues to kind of reallocate money towards China, especially if perhaps maybe
Well, she looks hot and black.
as people expect or don't expect, or maybe nothing happens for a while, and if nothing happens,
God
the
darn it.
status quo is bullish. So in that end, I think that there could be a large pop higher, but it's hard to stay in the EM trade or the China trade because you're always at risk of some sort of headline or some sort of headline. So what we try to push clients to is buying 1, 2, 3 month calls. If they double or triple, take some profit and maybe leave some tail.
Okay, hence your head of options or whatever your title is that has options in it. Head of options of Piper Sandler. I guess that makes sense. In terms of the other side of the barbell, though, if you're looking at the S&P, you comfortable buying the dip in big tech that we've been seeing, or do you think that could have some more room to run to the downside?
I think hold off a little bit. I mean, what are we down? We're down. Qs are down 2%, still up 3% for the year. Maybe wait a little bit, see if this sort of pain continues. And then one of the signs we look for is skew starting to blow out. Is fixed strike vol, downside puts starting to get very well bid, and we're seeing it a little bit today. But you really want to see that panic, and that hasn't happened. And when the panic starts happening, that's people really freaking out and buying their puts. That's when you want to start thinking about selling your put and then switching a little bit long, because that's to me our tell, and that hasn't really happened yet. And that'll be VIX 20, 25, those kind of levels. And that's when you want to start looking at, I think, getting long tech or getting back to long.
Danny, just going back to your kind of market call that we could see the 2% move to the downside if those tariffs actually come to fruition. There's a chance that obviously the can could get kicked down the road. Maybe we reach some sort of deal. But even if we do see a 2% decline, that wipes out the S&P gains essentially for 2025. But it's a market that's still up 20% over the past year. So do you think the next big move in terms of the next really big leg is higher or lower for this market based on the fundamental story?
I think lower near term and potentially higher towards year end when you get those tasks. Because for near term, it seems like there's more negative news than positive. And one date we're keying on is April 1st. That's when the USTR releases their reciprocal tariff list. And where Lutnick said April 2nd we might issue with the reciprocal tariff. So April 1st, April 2nd, that's where we've been sort of pushing clients to start looking for, to start having like an anchor for your volatility bets. We think April 1st will stay bid because that list is coming out, and April 2nd is the global tariffs if that happens. That's where you get that negative. That's where you get that sort of big sort of sell-off. And then maybe you start thinking about getting more constructive. Rates start moving a little bit lower as you get that bid to safety, and you get a little more constructive VIX in the 20s. And I'd say I'd hold off until maybe we start looking closer to earnings and after that April 1st USTR date.
Okay, really interesting insights. Danny Kirsch, head of options, Piper Sandler. Thanks so much.
Thank you.
Have a good weekend. Coming up, we'll step into the cloud space with the CEO of Five9 joining us to break down the company's latest earnings. Shares are down more than 35% over the last 12 months, but have moved 4% higher to start 2025. More market on close coming your way after this.
40 more minutes left. We're back at resistance to break.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
You're cold, chick.
Have a choice in how you invest with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Shares of 5.9 are trading higher this afternoon, bucking the downtrend after the company recorded a double earnings beat in Q4 and issued guidance in line with estimates. For more on the report and what's next, we welcome in Mike Birkland, CEO and Chairman of 5.9. Mike, thanks so much for joining the show.
I don't think they got the balls to bring it up.
So I know you've been on with Oliver before, Mike, but just for people who are unfamiliar with 5.9, tell us what you do.
Yeah, so we're a cloud software company, as you said, and we're helping some of the largest brands in the world elevate their customer experience, the customer experience for their customers with our AI-powered CX platform. So we've been, a revolution leader in cloud for years and customer experience, and more specifically in the contact center market. And now we're leading this AI revolution.
FIVN.
With it becoming a real significant part of our business, and we'll talk about some of those metrics in a second.
Oh, we will.
So when it comes to virtual contact centers, for someone like me
Why
who
not
gets
now?
on hold and immediately presses 0 and then the pound sign to try to make it go through, is this actually my nightmare?
So we are fixing that nightmare. That is what we're helping these brands do, is to deliver a better customer experience to the consumer, right? And we're all consumers, and in this
We finally
world
broke it.
powered by AI, you think about what AI is allowing these large brands to do is to deliver self-service. It's one of many of the AI use cases, but it's probably the most important one. We all would love to talk to a human to fix a problem in a contact center or a call center, but what AI is allowing us to do as consumers is talk to AI and have a conversation. And those old days of what we called IVR, interactive voice response, where you're pressing 1 for sales and 2 for support and 3 for another department. Those days are long gone. Now, when you reach a contact center that's powered by 5.9, you can have a conversation as a consumer with an AI bot, if you will, a voice bot. You can also do interactions digitally with a digital chat bot. And the real key to this is to deliver AI that is accurate and personalized. And that is the only way consumers are going to use AI to interact with a brand, right? It has to be accurate, it has to know who you are, what products and services you've purchased in the past, what problems you've encountered, and what interactions you've had with that brand in the past. And that is really what makes 5.9 unique. We've got access to this contextual data, which allows our AI to deliver that accurate and personalized experience to the consumer.
So this probably is a stupid question at this point, but when I think of contact centers, you think of outsourcing.
Who is this Dr. Galatby?
Countries. I'm assuming it doesn't matter where they are now. It just has to be someplace with big data centers.
Well, that's the beauty of cloud, right? These are virtual contact centers with agents spread all over the globe, and not necessarily working in a brick and mortar call center in the old days. That's what they would do. Right now, agents can be anywhere. All they've got to do is log into our platform, and they're ready to go and take interactions, so to speak.
So when it comes to the results, Q4 subscription revenue growth up 14%, Q4 total revenue growth up 17%. No surprise, AI, of course, the key growth driver there. I think the big question is, can those...
Sorry, Caroline. Subscription revenue growth for Q4 was up 19%, not 14%.
Oh, I'm sorry. I'm looking at 19%. I must have just said 14%. See, AI might have been smarter than me, actually, to do this. But no. So, yes, Q4 subscription revenue growth up 19%. Total revenue growth for the fourth quarter up 17%. No surprise that AI, as we said, key growth driver there. But I think the big question is, can you keep up with those impressive growth rates, and how so?
Yeah, so we just surpassed $1 billion in revenue for the full year 2024. It's been quite a journey. We went public 10 years ago with about $100 million in revenue. Most of that growth is organic. What's great to see is the acceleration in our revenue growth. That top line growth of 17% is up for 2 quarters in a row. Q3 was an acceleration, Q4 was an acceleration, and AI is becoming a big part of our revenue mix. It's 9% of our enterprise subscription revenue in the fourth quarter, and AI revenue grew 46% year over year in the quarter. So it's great to see the AI part of our business really humming and becoming a bigger part of our mix, and we expect that to continue as we lead this AI revolution in customer experience.
So we talked about how you're bucking the downtrend today with shares up 1.7%. Shares are up about almost 6% this week, up about 4% so far in 2025. But zoom out on the chart and shares are down about 40% over the past 1 year. What is it that investors need to know?
Yeah, I think what they really need to know, Caroline, is we're an AI winner, and I think there was a lot of, there were thesis out there. We call them the AI bear thesis, that our industry, the software providers to the contact center market, were going to be AI losers, and I think that has definitely been putting pressure on the stock. But as we start to share some of these metrics, the growth in our AI business, the size of our AI business, I think it's becoming very, very clear, and I think it'll become even more clear to the market that we're an AI winner. This is a massive TAM expansion for us. Look, customer experience is not going away. Interactions are going to be different as we go forward. They're going to be both with human agents in contact centers, but they're also going to be more digital, and they're also going to be more AI handled, so to speak. And these AI agents that we deliver are, again, delivering accurate, personalized customer experience for those consumers. And again, as we start sharing more of these metrics, I think the world will come to the realization that this is a massive market for us. We think this is a 5 to 10 year durable revenue growth opportunity for us in our
I'm just curious what your biggest headwind is at this point, and is the technology smart enough?
This is a real hard day for me today. It gets right to my even number, then drops. I've done it twice now. Well, more than that. I was up twice in this trade. Good. Just needs a couple good candles here. I'm even again. Break it. Next time if I get even, I'm getting out. Fuck it. It's destroying me mentally. I don't know if I'd have got out there either. Been close. Dow Jones down 712 points.
This was a market that had seen impressive 20+% gains over the past 2 years and was trading near all-time highs. Was there any hesitation?
Not really. Our situation is fairly unique, Caroline. You mentioned the second IPO. We've had a very unusual journey, I guess is the nice way to say that. We were owned by Thoma Bravo before going public the first time, and then kind of they sold out. We were running as public, came back. They took us private, in 22. And so we've been kind of in the mode of getting ready, if you will, for some time, making sure we had the kind of profile that markets would find attractive. And pretty much these days, that's growth at scale with profit, right? If you can be a large company with some level of growth and profitability, that's an attractive profile. So we were sort of in that ready posture, if you will. And then, obviously, there's been a lot of things happening in the world since last November. But one of the things is that markets have generally been up pretty nicely. And so our investors and the team felt like this was a pretty good window to take. We think there's going to be a lot more activity in the latter part of the year, but we felt good about coming out now. And as you say, markets are always a little up and down. I like to tell people we didn't do this for the one-day pop. We did it for where we think we can get to over a relatively short period in the market, and we're very pleased with where we are a week out.
Okay, all right. And I do want to talk to you about that IPO window in just a second. But when you think about a company that is, a good candidate for going public in the current market, you talked about the growth at scale with profit, but also tech company, cybersecurity company, uses AI, it checks a lot of the boxes. And as you said, this isn't your first time doing this, but I guess why now and what's different this time?
From the first IPO, particularly in this case, Caroline, you mean a little bit of that question? Yeah, obviously we were
private in 2022.
Yeah, no, it was an unusual set of circumstances. We were a smaller company when we were taken over by Thoma Bravo the first time and had an interesting run with them. And then, not everybody knows this, we were their first IPO, interesting distinction, in 17. and had a nice run as a public company. That initial IPO went to market around $1 billion, and as the record shows, we were acquired by Thoma for just under $7 billion less than 5 years later. So that was a nice run. Everybody felt good about that. And I think when we looked at this second process, we went private with them with kind of an idea of doing some things that were easier to do.
I'm so tired.
Frankly, changing fiscal years, changing some of our profile to be more SaaS-oriented, big back office transformation. Some things are just easier to do in the private markets. And then, like I say, we were in kind of a ready mode. I think as we look forward, though, you said some of the key words, Caroline, that at the end of the day, we're fortunate to be in a very good market. Cybersecurity, as we all know, is, I like to say, it's never going to be solved. There might be ebbs and flows of how attractive it feels to.
You don't hear voice.
An endless cat and mouse
sure?
game that will never be over. And so when you're in the security realm, there's always demand. SailPoint's fortunate in that we're at the center of what's called identity security, which is one of the aspects of security, say different than endpoint.
It's on.
Strike lives, that protecting devices, or the network where Palo Alto tends to live, and identity's become well recognized as a primary attack vector, right, for these bad actors. People trying to compromise your identity to get access to systems and data. And that just tends to be a very high area of focus in a typical enterprise today, mid-large enterprise where we focus. So all in all, I feel like we're well positioned in a very attractive and growing market. And then the market backdrop said, this is a pretty good time to go ahead and get back into those markets and ready to take advantage of those funding opportunities with public investors.
Okay, so talk to me a bit more about the identity security space and really what sets you apart from some of your competitors. You mentioned one, but I think of maybe Okta or CyberArk. What is it that sets SailPoint apart?
Yeah, great question, and thankfully one I've answered a lot in the last few weeks leading up to an IPO. At the end of the day, the three of us really are fundamentally coming from different perspectives. Okta in particular has tried to expand their purview to cover the main traditional focus areas of this market, which would be access, where Okta was, single sign-on, it's called, like easily logging you into their applications. And CyberArk comes from a place of what's called privilege, very narrow but important focus on critical applications like databases and things like that. SailPoint's always been in this space where we kind of had this breadth and depth of the entire landscape, all the identities, employees, non-employees, like contractors, and now non-human identities. Interesting topic today with agentic AI and what are called machine identities. Like, enterprises at the end of the day are about ensuring that their data is safe and protected, and the way data is accessed is through an identity, either a human or a non-human, right? And at the end of the day, we sit at that juncture, and as the market has begun to understand the importance of that, we have kind of that depth of understanding that the single sign-on folks like Okta just don't have, of the detailed privileges, it's called, and entitlements as to how people can access systems, but a much wider perspective, say, than a CyberArk had. So the market, I think, saw us as kind of a differentiated player, likes our technology lead. As you said, we've been leveraging AI for a long time. We like to say before it was cool. And so we're leveraging AI to solve these problems for our customers. And so I think all in all, people looked at that set of dynamics, the market opportunity, the fact that we grew at scale during a pretty difficult last couple of years. The markets have been tough, right? Or the customer buying environment, I should say, has been tough. And I think all in all, it convinced people this was a pretty interesting
Not
place to
really.
in the market.
As cool as AI is, though, there are some risks and concerns around it, and that has led to a lot of talk about potential regulation.
I don't
not
think the
necessarily
market's been
seeing that
tough at
play
all
out
for the last
just
couple
yet.
years.
How could that impact you as a company?
We're probably a beneficiary of that. And what I mean by that is that you're absolutely right. I think the security professionals, who's really our primary focus in the enterprise a lot of times, they see AI kind of like most security vendors as both a boon and a curse, right? Like, on the one hand, it's going to help us do what we do better. We're going to be more effective, more productive, more efficient. AI has a lot of promise that way. It also represents a level of risk from the security perspective, because it can be used to very rapidly gain access to information. Sometimes it's not fully understood by the business yet. And so it is kind of this idea that businesses are kind of rushing to take advantage of these technologies, wanting to leverage them to be differentiated and competitive, et cetera. And the security professionals are going, that's great, but I want to make sure we aren't moving so fast we can't protect ourselves. There's an old famous saying in the security landscape that, why do race cars have brakes? So they can go fast, right? If you know you can stop when you need to, you're willing to go fast, take a corner at speed, et cetera. that's kind of the role security plays in the enterprise. They want the enterprise to be able to succeed, but they want to feel like they want to do that successfully if they're going fast and safely. That's kind of the role we play, is to help people feel confident as you adopt these agent technologies. We'll understand where they are, what they're accessing. Is it appropriate? Does it look like something might have been compromised? And can you protect yourself as these agents start to proliferate in the enterprise?
Really interesting, especially since it seems like we're up against a lot of machines much more than actual bad actors now. You mentioned the IPO window potentially opening. You're the first big tech IPO of 2025, the first pure play cybersecurity, I think, since 2021. Windows open a crack, but it's been a slow few years. And you mentioned, you're not in it for the big pop at the open. We know that's not predictive of future gains, but there is some talk that maybe that could dampen sentiment. As you look ahead, do you think that this is the year that the IPO market comes back to life? Are you opening the window?
We hope so. I can tell you our friends at NASDAQ hope so, and we were on the NYSE before, so we're sort of an equal opportunity player there. And in some ways, I can tell you that what we experienced, and I think others will, on the roadshow, where you're out talking to all these investors, right? Lots of demand, lots of interest. These investors, I think, are hungry for new offerings and want to see, solid, high-performing businesses that they can invest in and grow with. And again, I think they felt good about that. The performance of an IPO, as you said, Caroline, is an interesting thing to talk about, right? We filed in a $19 to $21 price range, i.e. kind of targeting the midpoint. We raised the filing range, priced at the high end, and then upsized the deal. So we sort of did a lot to lift the expectations from where we started at the beginning of the roadshow a mere, 3 weeks ago now. So I think in one pen, people are like, oh, what's happening since you priced and came out? But we thought we'd be quite a few dollars lower than that when we started the process. So it's sort of, what's your frame of reference here? We feel very good about not only where we are, markets, as you said, are up and down as a whole at times, but it's really, can we position ourselves to take advantage of the public investors' hunger for more high-performing companies in a market they all agree looks pretty attractive in security. And again, the good news is, as a repeat IPO player here, a repeat public company, they had some confidence and had seen us perform well for a number of years before. So I think that probably helped us too.
All right. Well, and despite today's 3% decline, still on track to close above that $23 opening price. So there's some perspective as well. Mark McLean, CEO and founder of SailPoint, thank you so much. Really appreciate you joining the show.
Appreciate it. Thank you. Great chatting with you, Caroline. Look forward to another chance someday.
I hope so. You too. Coming up, we'll pivot to commodities with Phil Strebel from Blue Line Futures. Not much can slow down gold's rally. Futures up more than 40% over the last 12 months as we sit just below all-time highs. More market on close after this.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Joining me now is Phil Strebel, Chief Market Strategist at Blue Line Futures, for his usual Friday hit. Happy Friday, Phil. Great to see you.
Yeah, thanks for having me. Unfortunately, the markets are not happy to see me. I mean, it seems like we're falling out of bed right now.
I know. I was going to say, before we get to our commodities talk, I do want to ask you about the sell-off that we're seeing. I mean, just picking up steam. We still have about 15 minutes to go before the closing bell, but the Dow, off the worst levels, but still down 762 points. The S&P 500 down about 1.7% right now. What do you make of the weakness?
Yeah, it really feels like panic kind of across the board. These are dangerous days for traders, especially when a lot of traders out there have the buy the dip mentality, not only in commodities, but stock.
Buy the dip mentality is what I got.
They add to positions, and then it continues to sell off on them, and then it becomes this problematic where they're just constantly trying to get chopped up in these markets. So it's the PMI services miss that
He's
we
right.
saw, the global growth
That was
and
my day-to-day.
inflation are both decelerating today. So bond yields up, dollar up, down on growth, down on small cap. So just problematic across the board. It's just really a deflationary day here.
Problematic, but again, perspective is key, and this is a market that has been kind of, we haven't seen huge runs higher, but has been really chopping along and sitting pretty close to all-time highs. So do we look at this as something very concerning, or do we look at this as maybe some healthy profit taking?
Yeah, so this is where like the cooler heads prevail, and you go, okay, how far away are we from all-time highs? Is this really a setback? Are we in a new bear trend? So I think it is a lot of profit taking. I was a little concerned by seeing Walmart and the numbers that they put out and their forward expectations. I mean, Walmart is like the backbone of what I think of like the United States, as far as when you have problems in the economy and things like that, you can always go to Walmart and afford things. You're going to pare down some of those high-end retailers and things like that. So for them to come out with a warning, I was a little bit taken back by that, especially if the economy is going to start to slow down quite a bit. The higher for longer theme weighs in on things. Inflation really eats people up. I just felt like it was just really disappointing the way that the numbers came out in the perspective that they left with the consumer.
Huh.
I mean, they're known for being cautious, but let's see what other retailers say, especially next week when more retail earnings start to come in. So as down as stocks are, we're not seeing a flight to safety in gold. Gold actually pretty flat right now, actually down about 0.2%, although very close to all-time highs as well. What do you make of the move that we've been seeing in gold?
It's still over 1% on the week, so it's stringing together its 8th straight consecutive week of advancing. With central banks that add about 16 tons this week, so it puts them on par for what they've been doing throughout the year and also into last year. December was a bit of an anomaly where we saw a big uptick in central bank buying, but gradually monetary policy will ease. There is some uncertainty in the geopolitical landscape, so I think that gold provides a great opportunity. We're so close to the $3,000 mark that I feel like it's becoming more of a self-fulfilling prophecy that those dips are getting bought on the gold market. And we're seeing, a bit of volatility where it's making most of its higher highs has been in the overnight session. That's why it's important to have a futures account. But during the day in the U.S. session is when it's sold off and new investors have come in and bought it. So it's been really just this gradual move higher. I think 2,900 kind of would be a psychological level of support. Below that would be something like 2,857. I don't think we want to see it close below there. It's going to take it back to this big neutral trend.
Okay, 2,949 right now. We missed last week, but we've been chatting the past few Fridays, and it seems like for crude oil, it's the same topic every time. What's going to break it out of the $70 range? And it's, basically 72.53 right now. Do you have a new answer for us?
It's really tough. I mean, oil prices are going to close below $71, and then we're coming right back to this 70 support level, trapped between 72.50 and 70. Anytime we get any kind of bullish momentum on it, as far as, we have supply disruptions and things like that, President Trump is very adamant about getting oil prices down, and it seems like he'll cut a deal with any country out there to make way for new supplies coming into the market. It was talking about Kazakhstan's pipeline going down. It's talking about OPEC plus potentially curbing those production hikes out to April, and then you see some bullish momentum in the market, and here you go. Somebody else is going to step in and pull up the slack for it. So, it is what it is. I mean, I think that the only thing I can say is we're widening out as far as those ranges. So $2.50 about today was the volatility in the range, and we'll see what happens next week. If it breaks below 70, it closes below there, probably not going to want to be too bullish on that market at the moment, because it's going to need to find a new trading range, and I think it'll be like 65 to 70 rather than this 70 75.
Are you surprised, though, that all of those measures that the president is taking to try to push down oil prices, they're still stuck here? I mean, that's not having an impact.
It's still at 70. I mean, OPEC they have their own obligation and their own agenda to try and keep oil prices up. The economy, for what it's worth, has been very strong. People are still driving, they're consuming oil. We haven't refilled the SPR. We're not able to raise 3 million barrels per day. These pipelines are not coming back online anytime soon. So there's a number of factors out there that are quite bullish on there. I saw an article saying that there's a potential for $85, even $100 oil, but I just think that he will do whatever it takes to jawbone that market down and beat it down. He came out and he said that they were going to take a hard stance on Iran. Oil prices go up, and then the next day he goes, well, maybe they're willing to negotiate something. Let's look at your nuclear facilities and stuff. I mean, he'll just say whatever to get the price down.
All right. Well, I guess we'll continue to have this conversation then. Should note, though, that the energy sector, the best performing sector of the week and of the year so far in terms of S&P 500 sectors. All right, Phil Strebel, Chief Market Strategist, Blue Line Futures. Always enjoy chatting with you. Thanks so much.
Take care.
You too. Coming up, let's close out the market session and get the big picture from the team at Charles Schwab. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. The highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Why wealthy shoppers love Walmart.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. I'm Caroline Woods. We have 7 minutes to go in the trading day. For the closing bell, it's time for the big picture. Let's welcome in the team from Charles Schwab. Colin Martin is Director of Fixed Income Strategist, Schwab Center for Financial Research. Michelle Gibley is Director of International Research at Charles Schwab. Great to have you both here. Michelle, let's start with you, because we've been talking about international stocks outperforming U.S. stocks so far this year. Not a hard week to outperform U.S. stocks, especially given today's action. Bring us up to speed on the scorecard there.
Yeah, I think it might be a surprise to people that, we've got this drumbeat of America First policies, and yet international stocks are outperforming. And they could actually maybe even be a haven from the trade war. And the reason I say that is because the biggest sectors in EFA index are financials, industrials, and healthcare, and they're outperforming, particularly financials. The Stock 600 bank index is at a 16-year high. And the Europe in general is up triple that of the S&P. The broader developed market EFA is up double that of the S&P. And, part of it is because economic data has been surprising to the upside, and we're starting from a lot lower valuations. The EMU index, that's the Eurozone, trading just 14 times next 12 months earnings, and that's a 35% discount to the S&P 500 at 22 times.
So international stocks, Michelle, could provide a haven from the trade war, except for what happens if the U.S. does decide to go after the EU once maybe Mexico and Canada and some other segments are focused on?
Yeah, we continue to believe that the tariffs may have more bark than bite. What we've seen a consistent pattern of these threats weighed against different countries and then come off. We saw that during Trump's first term and also so far this year with Mexico and Canada. And, already the EU has talked about lowering tariffs on cars. They tariff U.S. cars at 10%. We tariff EU cars at 2.5%. So they've talked about lowering tariffs, which actually could be a good thing.
Okay. All right, Colin, let's bring you into the conversation. Michelle was talking about better than expected data over in Europe, helping to boost the markets. Over here, we certainly had some weaker than expected consumer sentiment data today, pointing to a consumer that continues to worry about inflation. Seems to be, that could be weighing on the markets today.
Yeah, it certainly is. And what we find interesting with the Treasury market is the response, because we had that weaker than expected consumer sentiment, but higher than expected inflation expectations. And we've seen that recently, whether it's been survey-based or market-based expectations of inflation. They've been moving up, but we're seeing Treasury yields move lower. So it looks like the growth outlook and potential uncertainty out there, that's the key driver. And we're seeing Treasury yields decline as a result of that. So it looks like the markets are really focusing on that consumer sentiment and what is the impact of all this uncertainty. And yes, tariffs would be inflationary if they came through, but does a potential trade war just slow growth down altogether? If we look at what expectations are for Fed policy, they've been bouncing around a lot lately. And what we saw today with that drop in yields and disappointing sentiment data, we've seen that potential rate cut pulled forward a little bit now. Now it looks like the timing of that rate cut is in July. That can change a lot, though. We're not putting too much stock into that. We are still expecting one cut this year sometime in the second half, but we'll see how the next few months play out.
I feel like the narrative of don't be surprised if we see no more cuts this year has really been picking up steam around here, though, Colin. And based on the fact you said when you look at the 10-year yield, seems to be more focused on growth. If we start to see these inflation expectations come to reality and the inflation data continue to be stubborn, potentially tick higher, what could that mean for the 10-year yield?
We think that it should pull 10-year yields higher. That's been a concern of ours for a while, where we think intermediate long-term Treasury yields should remain range-bound at close to 4.5%. That's
Thoughts have been kind of funny today.
For the 10-year Treasury, we're a little bit lower than that. But when we look at all the potential outcomes here, we do see
Arm's at a good spot.
Treasury yields moving higher than lower, mainly because of inflation. But what we're seeing today is that the
Disney
markets
even
really
came
aren't
back
short.
to down
Markets are
today.
focusing more on growth, and if we get, weak growth, but sticky or even higher inflation, that's a challenge, because where do you go for investing? And it's not necessarily a good outcome. But we do think yields could move a little bit higher. In terms of the Fed, like you said,
Cisco had
maybe
that
the
big
Fed
bounce
doesn't
on
cut all this
earnings.
year. We do think that's a risk. We've slowly ticked down our expectations for what the Fed will do, and with inflation proving sticky and potentially.
Well, I'm kind of ashamed of myself today. Not my best day. I don't know. I just figured we'd get some kind of bounce. I had one little bitty good trade today. That was it. None of the supports held that I had. It's just like what that guy said. It trapped a lot of traders today, because we've been in kind of like a dip buy situation for months. And today it was just continuous. So I don't know what to really expect. I know we had a huge run. I know that for a fact. Some of these breakouts were just like, what? If you just go down the list and look at the 20 days on a lot of these, even the banks sold off today. Apple, they've been pumping real hard here in the last week or two. It ran from 225 all the way up to 250, 248 with a double top. And it just barely pulled back today, but it did. And then China, and even Zim bounced. That's one of the worst performers. I mean, it's bounced up pretty good here in a month. Tesla had that big run. We'll probably go back to 320 again. Coin really sold off today on the 20-day. So I don't know. Definitely got stuck. I didn't trade it right. I've been a perma bull, just buying the dips have been wonderful to me. Get in and out of them trades. I'm up $500 or $600. I sell it, wait for a few more minutes. It's back down to support. Buy it again. It bounces up on me. But today, nothing. I really tried hard. So yeah, I should have just been the put guy. So I got to go do something. We got a frozen pipeline I got to check out. I hate winter. I just hate winters. I really do. I don't like them. I'm a beach boy. I prefer 120 degrees outside in smothering heat than a 0-degree temperatures, 8 below, 4 below for about 2 weeks. And then we had that 8-inch snow, and that just didn't help matters. I mean, my body don't like it. I don't like it. I can't think straight. I really can't think at all, hardly, when it's cold weather. I don't know what it is about it, but I can't get it off my mind. This summer's going to be so much nice just to step outside naked and be warm. I'll probably spend more time at the pool this year because I haven't really done that for the last couple of years. Get out there on my breaks. Get my tan going again. But the cold weather, I'm just not very good at all. I don't think straight. Seems like more problems come up. I work twice as hard. And people complain twice as much. So I'm going to get out of here and go check out this water line I know nothing about. See if I got the right tools to get in and out of it. We'll catch you all later. Again, thanks a lot.